Yes, everyone. So, hello, hi, namaskaram, and good morning, students. I hope you guys are having a crazy, amazing day. If not, let us make this a crazy, amazing day, my dear warriors. Tabish this side, a chartered accountant, all India ranker, international speaker, passionate teacher, and your faculty and mentor for the subject of SCM and SFM. So, for all our CMA Final SFM students, we are coming up with a crazy video, my dear students. Sir, what is this video all about? We are going to come up with CMA Final question solving marathon. So we have already uploaded for you guys for each of the chapters the concept marathon, wherein each of the chapters, the respective concepts, logically we've understood. Even though these are marathon, still even a first time learner can be listening to that and getting a good clarity. Yes, these marathons are more in depth than any other regular class that you can be seeing. Okay, so we've already uploaded, yes, for all the chapters, majorly for all the chapters, concepts marathon. It is already available on YouTube, and we've received lots of love for you from you guys. Leasing chapter, a chapter which covers approximately 9 marks. It is there exclusively for CMA final only. It is not there for CA final, only for CMA final students. So many students who had taken classes from other faculties, they told their faculties had just uploaded CA based classes, they had not uploaded leasing only. So considering the request of students, leasing entire chapter we've uploaded on YouTube, approximately 12 hours, compulsory short 7 marks descriptive as well as a 2 mark MCQ. Yes or no, everyone? Now in addition to that, we thought, let us come up with a question solving marathon. Here we will not be discussing any of the concepts. Yes, concept, if you want, you go to the concept marathon. Here, on the assumption that you've listened to the concepts, you understood the concept, what we are going to do is we are going to pick a variety of questions from the past paper as well as model question paper. So what all papers we will be picking? Yes, we will directly pick questions from past paper. Which all past papers, sir? Yes, the last 5 attempts from December 2023 to December 2025. With that, we will also pick up the model question paper from June 25 to June 26. So here we will be having, yes, 5, here we will be having 3. So approximately 8 attempts papers we will be picking. Every chapter bare minimum 8 questions we will be having. Yes, beautifully we've organized, arranged every chapter. Yes, from each of the paper, whatever question had come, we will keep on solving. So whatever new adjustments are there, yes, how institute is asking, if in case these questions are coming in the examination, are we capable enough, are we competent enough to solve or not, is something we will be seeing here. Is this clear, everyone? Perfect. Now all these files that I've used, firstly all the question papers. Now yes, if you guys see for CMA final, all the resources are completely scattered. So what we have done is we have brought all of them together. That is basically I've created a PDF wherein, yes, I've included all the past paper, yes, order wise, December 23, June 24, December 24, June 25, December 25, model question paper, June 25, December 25, June 26. With that, we have given the page numbers. Yes, with that, we have created a proper index so that easily you guys can see. With that, I have also included the ABC analysis for the papers of SFM. Yes, how exactly questions are coming, every chapter, what is the weightage, all those have been created. Along with that, we have also given a playlist containing, yes, all the chapters revision. So please get the PDF. Yes, it is absolutely free of cost for you guys. It is available on our Telegram group, Think with Tabish. So please go pause the video straight away, go to the Telegram group, please get the PDF. Either get the PDF or take a printout of that. Okay, boss. Now, yes, if you have loved our work, yes, you guys know how much effort we are putting for you guys. Boss, a small like, yes or no, everyone? Generally don't ask, but still, not for me, but for the YouTube algorithm to suggest to more people. So if you have loved our work, I'm sure you're going to love our work because we've put in that much amount of effort for you guys. Please do like. Only you're getting the benefit, only you're getting the required marks in examination. Not fair. Please do share it to all your friends, all the CMA groups that you guys are a part of, all the Telegram groups. Please share and tell there is a crazy SFM question solving marathon. And if this has added value to you, yes, I'm sure it will add value to you. Please do put your valuable comments. Yes, before starting itself, I want all of you guys to put in your name. Yes, I, Tabish, will score, yes, 70 plus or 80 plus in CMA final SFM in whatever the examination. Okay, and put the place also where you're from. Yes, everyone. So that is it. And yes, one small thing before leaving. Yes, if you want to purchase the best recorded classes for CMA final, SCM and SFM. Yes, as a CMA final students, group 3 is considered to be slightly more difficult. Even in group 3, the 2 papers which are considered to be slightly more difficult are paper 14 and 16, SFM and SCM. Trust me, we are going to make it the simplest for you guys. Yes, without even by hearting a single formula, the entire subject of SCM, SFM we will learn. That is my promise. So if you or your juniors or your friends want to purchase the best recorded classes for SCM and SFM, boss, you know exactly where to recommend from. Yes, please do recommend them. Yes, to visit our website www.thinkwithtabish.com. So that's it. From this onwards, yes, we will be starting the question solving marathon. So see you guys there. Take care. Bye. Okay, boss. Now look at this. Yes, we are going to start with the first chapter, which is going to be equity valuation. Now, what is the weightage from the examination perspective? Every examination, yes, there is one compulsory 7-mark question on the chapter equity valuation. With that, yes, one MCQ question would also be there generally. Is this clear, everyone? Okay. So approximate weightage is going to be 7 to 9 marks. Now, if you see the past examination, every paper, yes, question number 3B has been a question on equity valuation. Even in model question paper also, sometimes 3B, one time it has come in 4A. But always there is a 7-mark compulsory question. Is this clear, everyone? Okay. Now what we will be doing is, pay attention for all the students who are watching it on YouTube subsequently. I am not going to explain the concepts. Now if you guys don't know, yes, equity valuation, boss, please, I have uploaded a marathon on YouTube wherein in detail we've understood everything logically. Even in marathon, logically everything I've explained. Please do watch that. Only after watching all of that, just to solve the questions, just to practice questions, come here. Now how we will be practicing questions? Now first we will see the question. I will tell you guys, pause, try it by yourselves. So online live students who are with me, yes, they will pause, try it by themselves. Then we will together quickly solve, my dear students. Students who are watching it subsequently on YouTube, I want you guys to pause, read the question, try the question. Boss, if you are getting the answer, bingo, go ahead. Yes or no? Students who purchased our classes, it is not just for you to watch it as though you're watching a series. Boss, pause, try the question. Because once you try the question, you get the answer. The confidence that you get is going to be crazy altogether, another level. Is this clear, everyone? Yes, boss. With this on the back of our mind, in 3, 2, 1, let the maja begin. We are going to start with the first chapter, which is going to be equity valuation, December 3 past examination paper. Yes, question number 3B. Yes, everyone. Look at this. This is the question. Okay. Fizzle Limited's earnings and dividends have been growing at the rate of 18% per annum. Great, boss. The growth is expected to continue for 4 years. 4 years, 18% growth will be there. Okay. Yes. After that, growth rate will fall to 12% for the next 4 years. First 4 years, 18%. After that, next 4 years, 12%. Okay. Thereafter, the growth rate is expected to be 6% forever. Oh, fine. The last dividend per share was to, what is it? Last paid dividend, D naught. Yes or no? D0 is 2. Investors' required rate of return is going to be 15%. Yes, calculate the value of a share using a 3-step procedure. Trust me, students, simplest thing, halwa. For the students who purchase class, sir, this much only, sir, 7 marks. Trust me, we will not even be taking 7 minutes to solve this question. That's how simple it is. Yes or no, everyone? Okay, we are having a question. Yes, I've told you all these are similar questions, but still we will keep on solving all the questions. Yes or no, everyone? Okay, first let us write down the basic data and pictorial representation. Tell me what all is given. Firstly, for us, yes, D naught is given. Company has just paid a dividend of 2 rupees. Required rate of return, cost of equity is 15%. Yes or no, everyone? Okay. Now what is the first thing that we do? Yes, everyone, draw a line. Line should be straight, whether you are straight or not. Yes or no, everyone? Okay, fine. 0, 1, 2, 3, 4, 5, 6, 7, 8, so on. Now tell me, what is it that the question has told? That the first 4 years dividend is going to grow at what percentage rate, students? 18%. Yes or no, everyone? Here growth is going to be 18%. So 2 plus 18%. D1 is going to be how much? 2.36 plus 18%. It is going to be how much? 2.78 plus 18%. It is going to be how much? 3.29. 2 digits is sufficient. Plus 18%. It is going to be how much? 3.88. Always do it in the form of line. Subsequently, you show it in the table. Yes or no, everyone? Now, first 4 years, growth is going to be 18%. Subsequently, how much is going to be the growth, students? It is going to be 12%. I'm again repeating. I'm not here to explain the concepts again. Boss, I'm presuming that concepts you have understood. We will go on solving questions. In the questions, if any new adjustment is there, that time I will explain what is it. Is this clear, everyone? Okay, fine. And quickly we will be solving. Yes, boss. Next, it is going to be 12%. So 3.88 plus 12% is 4.34. Plus 12% is 4.86. Plus 12% is going to be 5.45. Plus 12% is going to be 6.10. Yes, boss. Yes. What are the three-step framework? Step number one: calculate dividend for uneven growth. Initially 18% was there, then for yes 12% was there. For uneven growth, I calculated the dividend. Now tell me, I am standing at the end of year 8. From here onwards, future I'm seeing. Yes, tell me students, ninth year, how much is the growth? Ninth year, it is going to be 6%. 10th year, 6%. 20th year, 6%. 100th year, 6%. 1000th year, 6%. From here till perpetuity, it is constant growth, yes or no, everyone? Okay. Step number 2, calculate price at the end of uneven growth. Tell me, where is my uneven growth ending? 8th year, so I can calculate price at the end of 8th year. Look at this, everyone. Price at the end of 8th year. It is a next year dividend, D9, divided by KE minus G. Tell me, yes, 8th year, how much was the dividend? 6.1. How much is going to be the growth in the dividend? 6% into 1.06, divided by cost of equity is how much? 15%. Yes, minus growth 0.6. So 6.1 into 1.06 divided by 0.09, it is coming to 71.84. Yes or no, everyone? Yes, boss. So here in the 8th year, I am having price also, which is 71.84. Is this clear, everyone? Okay, fine, boss. Now that I've got, yes, boss, what all I'm having? I'm having dividend for uneven growth. I'm having price at the end of uneven growth. Bring all of them to the present value. Yes or no, everyone? By discounting at the required rate, which is 15%. Arrive at the value of the share. Yes or no, everyone? Year 1, 2, 3, 4, 5, 6, 7, 8. Tell me, what is the cash flow for each of the years? First year is 2.36, 2.78, 3.29, 3.88, 4.34, 4.86, 5.45. And in the last year, I am having a dividend of 6.1. Plus, when I am selling, I am getting a price of how much? 71.84. So it is going to be how much? 77.94. Yes or no, everyone? Yes, write down the present value factors at the rate of 15%. Yes, whether the factors are given in the question? No, they are not given in the question. So take up to 3 digits. 3 digits should be sufficient. Calculate the present value. Once you are calculating the present value, you will arrive at the present value as 40.32. Yes, please don't expect me to do this calculation also in the session. Boss, calculation of present value from foundation you guys are doing. Yes, and this is just a revision. Don't expect, sir, this also if you could do. Boss, what are you expecting, boss? Our intention is in the lowest possible time we give you the good output. Yes or no, everyone? This, please do it by yourselves. Is this clear, everyone? So the answer is going to be 40.32. Yes, what is the answer that we had? Look at this, everyone. Question number 3B. 40.32. So 7 marks has been credited to your CMA Final SFM account. Devi or Sajano, Dhanyavad. Simple, yes or no, everyone? So shall we proceed further to the next question? Yes or no, everyone? Give me a confirmation. Yes, everyone. So look at this. Yes, December 23 question number 3B is done over. Now we are going ahead to June 24 question number 3B. Yes, everyone, come to June 24 question number 3B. Again a 7 mark question. Compulsory 7 mark question is going to come. Okay, look at this. The earnings and dividend. Okay, earnings as well as dividend on equity share of Rexon Limited have been growing at the rate of 10% per annum for 4 years. 4 years growth is 10%. Bingo. After 4 years, the growing rate of dividend is expected to decline linearly to 7%. Do we know this? Yes, boss. Linearly from 10%. Is it directly falling to 7%? No, linearly, slowly. From 10 to 9, 9 to 8, 8 to 7. Okay, simple, boss. Bingo. Now, after 6 years, tell me, students, first 4 years, it was at 10. Okay. From there, 5th year, it became 9. 6th year it became 8. Yes, 6th year onwards every year it is 7%. Yes or no? 7th year it is 7. 8th year onwards it is 7%. After 6 years the growing rate will fall and stabilize at 7% infinitely forever. Great, boss. Bingo. The last dividend per share is 3. D naught is equal to 3. The required rate of return is going to be 16%. Analyze and assess how much value per share, yes, we should be using a 3-phase model. Okay, present value factors are given. Yes or no? Accordingly we will be solving. Pay attention, students. Very simple. Yes, we have solved this question already. Yes, look at this, everyone. Question number 2. Okay, basic data and pictorial representation. Look at this, everyone. First, basic data. D naught is how much? 3 rupees. Yes or no, everyone? Okay, fine. Now required rate of return cost of equity is 16%. Yes, let us draw a line. Line should be straight. Yes or no, everyone? Okay, fine. Year 0, 1, 2, 3, 4, 5, 6. Let us think subsequently how much is needed. Tell me students, question told me first 4 years the growth is going to be 10%. Let me just write here. Growth is equal to 10%, growth is equal to 10%, growth is equal to 10%, growth is equal to 10%. Okay everyone, yes boss. Tell me, let me calculate the dividend. 3 plus 10%, it is going to be 3.3. It is a D1. Similarly, I can be doing the calculation next year. Plus 10%, 3.63. Plus 10%, 3.99. Plus 10%, 4.39. Is this clear everyone? Next, what is question telling? Okay, it is at 10. It will linearly decline to 7%. Means all of a sudden is it falling? No boss, 1 by 1. So from 10 to 9 to 8 to 7. Yes or no everyone? Tell me how much it is going to be. 4.39 plus 9%. It is going to be 4.79. Yes, plus 8%. It is going to be 5.17. Yes or no everyone? Now tell me, ideally what is the question trying to tell? Okay boss, here from 10 to 7 it will fall linearly. So from 10, 9, 8, 7. So 7th year the growth is 7%. Now 7th year onwards, every year what is the growth? Every year the growth is 7% only. That means tell me, 7th year the growth is 7%. 8th year also the growth is 7%. 9th year, 10th year, 100th year, 1000th year, 10,000th year, growth is 10% only. Tell me what is our framework, what we will be doing. Step 1, calculate dividend for uneven growth. Here all we are having uneven growth. Step 2, calculate price at the end of uneven growth. Tell me, where is my uneven growth ending? 6th year uneven growth is ending. Yes or no everyone? Because tell me, 7th year how much is the growth? 7%. 8th year also how much is the growth? 7%. So on. Yes or no everyone? So I can calculate price at the end of 6th year only. Yes or no everyone? So let me try calculating price at the end of 6th year. Price at the end of 6th year. It is next year dividend D7 divided by KE minus G. Tell me 6th year dividend is how much? 5.17. How much is the growth? Yes, 7% into 1.07 divided by cost of equity required rate is 16% minus growth is 7%. Yes, this is going to be how much? Rupees 61.47. Yes boss. So here I am having price at the end of 6th year. It is 61.47. Is this clear everyone? Okay. Now I have a dividend also. I have price also. Yes, I have the present value factor also. I will calculate. Look at this. I have done it here already. Calculation of value of a share. Year 1, 2, 3, 4, 5, 6. Here I have included the dividend. Yes, 3.3, 3.63, all these things. Yes, 6th year again I have included the price 61.47. Present value factor at the rate of 16%. I have considered the factor given in the question. If it is given, consider that. I will calculate present value. Present value is coming to 40.1. Is this clear everyone? Yes, tell me whether the answer is going to be 40.13. Yes, 3B, it is 40.13. Yes or no everyone? Yes, 7 marks has been credited to your. Yes everyone, tell me. CMA Final SFM account. Devi or Sajjano? Dhanyavad. Yes or no everyone? Okay, fine. Now you might be having a doubt, sir. We were thinking that instead of calculating price at the end of 6th year, let us calculate a dividend for 7th year. Okay, here I will get dividend and price at the end of 7th year. This we will discount. Sir, if you do like this, the answer will it be same? Yes dear, it will be same only. Yes or no everyone? Sir, which one do we follow? You follow anything. Now ideally look at this. Here itself you can finish off. You are just unnecessarily extending your calculation. Yes or no everyone? Simple. 7th year also it is 7%. Subsequently also it is 7%. So from here onwards it is constant growth only. So I can calculate price at the end of 6th year only. Is this clear everyone? Yes or no? Perfect. So with this, okay, June 24 question number 3B is also done over, my dear students. Now it is time to go ahead to the next attempt, which is December 24 question number 3B. Yes everyone, giving you guys some time. Yes, please do read the question. December 24 question number 3B. Then we will together solve this, my dear students. Yes, till now whatever questions we had solved were all exactly similar, simple halwa questions. Now this is a crazy question. Yes everyone, I think so it is a good question. Yes, write down, crazy maja is coming. Beautiful, beautiful question this is. Okay, yes, for the first time when it had come in the examination, students would have felt, oh, okay. And if you see the way institute has answered, institute has randomly put calculations, but we will understand each and every bit and do this. Yes or no everyone? So what I want you guys to do is, please do read it once, try it once by yourselves, then we will together solve, my dear students. Yes, everyone, let us proceed further to question number 3. Beautiful, crazy question. Tell me, everyone. Yes, all the online live students, record students, tell me crazy question. Yes, crazy maja is coming. Yes or no, everyone? Okay, look at this, everyone. First, I will just read the question. By reading the question, you may feel that so many things are there. Then what we will do is, we will write down the data in the form of a table. Once we write down the data, things become slightly simple. Okay, yes, look at this, everyone. Yes, Textile Limited is a major player in the textile industry in the country. Okay, industry is expected to maintain a high growth for a period of 5 years, after which it is expected to drop down. First 5 years high growth, after that there will be a stable growth. Okay, bingo. Yes, the dividend payout ratio, it is expected to remain at the current level for a period of next 5 years. Yes. Yes, currently company is distributing 40% of the profit as dividend. Okay, currently how much it is distributing? 40% of the profit. Suppose 100 rupees profit means 40 is declaring as dividend. Okay, dividend payout of the ratio is expected to remain the same for the next 5 years, after which it is expected to increase to 55%. After that it is going to be 55%. Okay, boss. Now this is talking about the dividend payout ratio. Okay, fine. Let me just write inside. Dividend payout ratio data is given. Okay, next what is given? Fine. Yes, the net profit margin, yes, is currently 8% and is expected to remain at the same level for next 5 years, after which it is expected to decrease to 5.7%. About profit it is telling. Okay, fine, boss. Now currently the company is able to generate a sale of 2.5 for every 1 rupee of capital employed. Oh, tell me, students. Yes, try understanding. Question is trying to give you a ratio, but it is not trying to tell you directly. Look at this, everyone. Currently, yes, the company is able to generate a sale of 2.5 for every 1 rupee of capital employed. Look at this. Yes, sale is equal to 2.5. Look at this, everyone. Yes, sale. Yes, for every 1 rupee of asset. Yes, sale is 2.5 for 1 rupee of asset. Yes, tell me, students, I want a ratio wherein I am expressing the sale or turnover in relation to the asset. Which ratio is it talking about? It is the asset turnover ratio. Yes or no, everyone? Tell me what is the formula for asset turnover ratio. Asset turnover ratio. Yes, it is a turnover divided by asset. Yes or no, everyone? Now, this is 2.5. Turnover is 2.5. Turnover is 2.5 for 1 rupee of asset. That means my ratio is 2.5. Yes or no, everyone? Basically, the question could have told that the asset turnover ratio is 2.5. But instead of telling it that way, they have written it this way. That we are generating a sale of 2.5 for every 1 rupee of asset employed. Okay, boss. Now, even if you don't know the asset turnover ratio, still we can be doing it. But still, question has told. Yes or no, everyone? Yes, sale, yes, to asset employed. Sale divided by asset employed is equal to 2.5. Turnover divided by asset is equal to 2.5. Okay, boss. Bingo. Yes, people watching it on YouTube. Okay, asset turnover ratio. I'm not going to explain the logic and everything. It is turnover divided by asset. Okay, fine, boss. Now here, yes, same will be there for 5 years, after which company is expected to generate a sale of 3.5 for every 1 rupee of asset employed. Okay, here it is talking about asset turnover ratio. Fine, boss. Now, 50% of the asset in the future are financed with equity capital, and it is expected to remain the same in the future. Oh. Yes, tell me, students, total whatever asset is there. Yes, in that 50% I'm raising in the form of equity. That means balance 50% I'll be raising in the form of debt. That means they're telling equity is to debt ratio. Yes or no? 50-50. Okay, at present the risk free rate of return is 7%. Okay, market risk premium is 15.5%. Okay, boss. Beta of the company is 1.2. Using this I can calculate cost of equity. Yes or no? Everyone, simple, bingo. Yes, the current net worth of the company is 250 lakh. Net worth. What is net worth? The worth of shareholders. Basically the value of equity. Different names I told. Equity. Yes or no, everyone? Yes, net worth. Yes, I told. Yes, it is nothing but my, yes, net assets. Yes or no, everyone? Total asset minus total liability. Basically total asset I'm having, total liability I'm having. This equity portion, it is also called as a book value. Yes or no, everyone? All these are same only. Was basically this is the value of equity. Yes or no, everyone? Total value of equity, book value of equity. I am just reading the question and nothing else I have done. Yes or no, everyone? And the number of shares outstanding is going to be 2 lakh. 2 lakh shares are there. Now, total value of equity I know, number of shares I know. I can calculate the value of equity per share. The book value per share I can be calculating. Okay, boss, bingo. Assuming that market is in equilibrium. Okay, fine. Present value factors are given. Yes, calculation, round it off to 3 decimals. Okay, 20%, 24%, 25%, 25.6%. Calculate the price per share using the dividend discount model. Is this clear, everyone? Okay, now, looking at this question, one thing we understood. What question is basically trying to tell is, first 5 years high growth is there, Subsequently, yes, stable growth is going to be there. Now I want separately the data for high growth, for stable growth. Yes or no, everyone? So shall we start doing the calculation? Look at this, everyone. This is how we will be doing. Yes, step 0, basic calculation. Okay, first 5 years, 6th year onwards. Is this clear, everyone? Whatever data is given, let us go on writing. Then we will think what is needed. Now look at this, students. First question is telling, yes, how much percentage of profit is given as a dividend? A dividend payout ratio. First 5 years it is 40%, then it is 55%. Okay, let me write down dividend payout ratio. Yes, dividend payout ratio. How much percentage of the profit is paid as dividend? First 5 years it is 40%. 6th year onwards we are distributing 55%. Okay, bingo. Yes. Now next, what is given? Profit margin is given here. Yes or no, everyone? Right now it is 8%. 6th year onwards it is going to be 5.7%. Okay, boss. Net profit margin. Yes, boss. Right now it is 8%. After 5th year it is going to be 5.7%. Yes or no, everyone? Next, what is given for me? Asset turnover ratio. See how simple it is. You are just writing down the data. Then we will think and solve it. Yes or no, everyone? Okay. The most important thing we should do once we see a question is write down the data. Institute loves to give the question in the form of paragraph because they know students don't write the data. So 10 times you are reading means 10 times you want data means 10 times you will again read from starting to last. So the first thing, whenever you are reading, here itself write down, okay, what data this is trying to talk about, so that if in case you want, you can come here. With that, okay, if it is possible, write down a table where you write down all data. Calculations will be that simple, my dear students. Okay. Now, asset turnover ratio is given. Right now, it is 2.5 times. Yes, afterwards, it is going to be 3.5 times. Okay. Asset turnover ratio, which is turnover divided by asset. Right now, it is 2.5 times. Subsequently it is going to be 3.5 times. Is this clear, everyone? Okay, then question, what else question has given? Question has given me equity is to debt 50-50. Yes or no, everyone? Right now also it is 50-50. In future also it will be 50-50. Yes, suppose total 100 rupee of asset is there, 50 is going to be equity, 50 is going to be debt. Okay, boss. Bingo. Now next, what else is given? Risk free rate, all these things are given. Yes or no, everyone? Now tell me, I want to calculate the value of the share. Yes or no, everyone? Okay, fine. Now for that, what is it that I want? What all details I want? Tell me, students. Now firstly, I want to calculate D naught. Yes or no, everyone? Tell me. Very simple. Keep it very simple. Yes, initially high growth will be there. Just feel, okay? Yes, we will just feel what data is needed. Based on that, how calculations will flow. Okay, our mind itself will give us the answer. Tell me, students, what all is needed? 0, first 5 years. Yes, if I know D naught, okay, if I know the growth rate here, can I calculate D1, D2, D3, D4, D5? Yes or no, everyone? Perfect. So what all I want? Firstly, I want D naught calculation. D0. Yes or no? Today's dividend. Then I want the growth for the first 5 years. Okay. I will arrive at the 5th. Yes, dividend for year 1 to year 5. Now 6th year onwards, it is going to be constant growth. Here also I want the dividend. Yes or no, everyone? So here also I want the dividend. That means for here also I want the growth. Is this clear, everyone? Okay. Next, what else I want? I want the discounting rate. Yes, which is going to be cost of equity. Now let me try thinking further. I am not doing any calculation. I am just giving you a framework to think. I have to calculate the value of a share. Okay, boss. Yes, variable growth is there. Yes, that means if I know today's dividend, yes, first period growth as well as second period growth, I can calculate dividend as well as price. To calculate the price, one more thing which is needed is cost of equity. Tell me, students, is there any challenge in calculating cost of equity? No, boss, there is absolutely no challenge. Yes or no, everyone? Let me quickly calculate cost of equity and leave it off. Yes or no, everyone? Tell me, it is RF plus beta into RM minus RF. Tell me, students, what is the risk-free rate which is given in the question? Risk-free rate is 7% plus beta is 1.2. Question is telling the market risk premium. Market, how much premium it is giving? Yes, RM minus RF. It is 15.5. That means the cost of equity is going to be 25.6%. Yes or no, everyone? Is this clear? Okay, fine, boss. Bingo. Absolutely no issues. Yes or no, everyone? Okay, fine. Now this is over. Okay, cost of equity I got. This is okay. Bingo, boss. Let me just use a green color. This I got. Now what I want? D naught I want. Dividend. Is this clear, everyone? Okay, fine. Now how do we do the calculations? Pay attention, students. Yes, to calculate this one, D naught, I want a return on equity. Okay, we will come to it later on. Now we will come back to this calculation subsequently. Now before we go there, yes, one very important thing that I want is a calculation of growth. Yes or no, everyone? Perfect. Tell me, students, if growth is not given in the question, if growth is not given in the question, then we will be using the sustainable growth rate. Yes or no, everyone? Tell me, how do we get the sustainable growth rate? It is a retention ratio into return on equity. Yes or no, everyone? That gives me my growth. Tell me, can I directly calculate my retention ratio? Yes, boss. Dividend payout ratio is there. That means balance should be my retention ratio. That means what is the most important calculation that we should do? Return on equity. Is this clear, everyone? Now see, it is very simple that I do on the calculation. But why? What was the approach as to why I have come there? That is the most important thing. Yes or no, everyone? Okay. So look at this, everyone. Now what I will do is I will try to slightly reduce the size. Resize. Okay. Okay, fine. Now look at this. What all data I want? Look at this, students, here. Yes, I want basically, yes, retention ratio, return on equity. If I get these two, I will arrive at my growth. Yes, which is going to be retention ratio into the return on equity. Is this clear, everyone? Okay. Tell me, is there any challenge in calculating retention ratio? No, boss. Tell me, dividend payout ratio is 40%. That means suppose 100 rupees is a profit. In that 40, yes, I am paying as dividend. That means how much I am retaining? 60 percentage. Yes, boss. Bingo. Yes, here 55% I am distributing. That means how much I am retaining? 45%. Yes or no, everyone? Yes, boss. Simple. Now I have to calculate return on equity. Yes, boss. If I calculate somehow return on equity, trust me, this question is over. Yes or no, everyone? Now, how do I try calculating the return on equity? That is the biggest thing, my dear students. Tell me, yes, data is somewhere lying here. Using these data only, I will just try playing something, and accordingly I will calculate the return on equity. Is this clear, everyone? Different approaches are there. Yes, any approach you can be following, but ideally you will have to use some of these data in order to arrive at the return on the equity. Is this clear, everyone? Okay. Let me try starting the calculation. Tell me, students, all these data are given. Have they given it chumma? No. Some intention should be there. Yes or no, everyone? Let me try seeing. Net profit margin, I will only do for first 5 years calculation. Year 6 onwards I have already done. It's the same approach. Yes or no? You just need to replicate. Okay, boss. Tell me what all is given. Net profit margin. Yes, what is the formula? Net profit divided by sale. 8%. That means if sale is 100, net profit is 8. If sale is X, net profit is 0.08x. Yes or no, everyone? Okay. Now, I will directly start with this one. I can start with any of the formulas. Ultimately, if you keep on playing, you will arrive. Is this clear, everyone? Let me start with this formula only. Now, if you want, you can assume sales as X. Let me assume sales as 100, so that, okay, numbers looks simpler for me. Look at this, everyone, how I am going to start. Very simple thing. Tell me, students, I will pick any of the ratio, any ratio you pick. Okay, just assume one of the figure. Okay, yes, net profit ratio. Yes, net profit margin is equal to 8%. Yes, just randomly, because I want the relationships. Yes or no, everyone? Okay, what I am doing, let's assume sales is equal to 100. Now, if you want, you can assume sales is equal to X. Is this clear, everyone? Okay. Here, I just want the ratios. Yes or no, everyone? Simple. You are telling in 100 rupee sale, I got 10 rupee, means 10%. Or else, in reality, there is a 1 lakh sale. On that, you got 10,000. Still, it is 10% only. Yes or no, everyone? I just want the ratios. That is why I am assuming it as 100. Or else, you can assume it as X accordingly. Do it also. Tell me. If sales is equal to 100, in that case, my net profit is going to be how much, students? Yes, it is 8% of 100, which is rupees 8. Yes or no, everyone? Till here the discussion is clear. Yes or no, everyone? Okay, fine. Now tell me what other things are given. Yes, this data I have considered. Yes, what else is given? Asset turnover ratio is given. Asset turnover ratio is given. Tell me what is asset turnover ratio? Asset turnover ratio is equal to 2.5. Tell me what is asset turnover ratio? It is a turnover divided by asset. It is 2.5. Yes or no, everyone? Tell me turnover, sales. I have assumed it as 100. Yes or no, everyone? So, if sales is 100, 100 divided by asset is equal to 2.5. Therefore, the value of asset, Take this to other side into, bring this here, divide. It is 100 divided by 2.5. It is 40. Yes or no, everyone? Till here also is this clear? Yes or no, everyone? Okay. Now tell me, students, if I prepare my balance sheet. Yes, in the right hand side I will have my asset. Tell me how much is my asset? 40. Not necessarily 40, but basically yes, in that relationships, ratios, that much will be there. Tell me, yes, total 40 rupee of asset is there. From where I will be getting asset? I'll have to finance that. Okay, from which all sources? Equity, debt. Yes or no, everyone? Tell me, equity and debt is going to be in which ratio? 50-50. That means equity should be 20 rupees, debt should be 20 rupees. Yes or no, everyone? Perfect. Now tell me, students, what I ultimately want to calculate? Return on equity. It is a return divided by equity. Yes or no, everyone? Yes. Tell me, students, yes, total how much value of equity is invested in the business? 20 rupees. I'll be considering the book values. Yes or no, everyone? 20. Yes, on this 20 rupees which is invested in the business, how much profit we have generated and given to our equity holders? Tell me, students, how much profit we have generated and given to our equity holders? 8 rupees profit. Now ideally, if you guys remember the income statement, yes, if I get my PAT, profit after tax, 8 rupees, from that I will reduce my preference dividend. Yes, here preference dividend data is not there, and I've told you nothing is given, means assume it is not there. That means I will arrive at my Patesh profit available to equity shareholders of 8 rupees. Yes or no, everyone? Perfect. So it is going to be 8 rupees. So tell me what equity holders are telling. Equity holders are telling, Macha, if I invest 20 rupees, na, 8 rupee profit business is giving me. That means for me, equity holder, how much return it is giving on my investment? Yes, 8 divided by 20, it is going to be 40%. Is this clear, everyone? Yes or no? Yes, therefore return on equity is 40%. Everyone give me a confirmation. Is this clear, everyone? Yes or no? Perfect. Now same story I will be doing year 6 onwards also. Net profit margin is 5.7, yes, 7%. Let me assume sale is equal to 100, net profit is 5.7%. Asset turnover ratio is 3.5. So turnover divided by asset is equal to 3.5. Turnover is 100 divided by asset is equal to 3.5. Therefore asset is 100 divided by 3.5, 28.5714. Total asset is 28.5714. Yes, 50% is equity, 14.2857. I want the return on equity. Yes, it is return divided by equity. Equity is 14.2857. Return profit is 5.7. It comes to 39.9%, which the institute has taken as 40%. Is this clear, everyone? Okay. Now come here, students, look at this. Now so much calculation was there, question 3b, and see how institute has taken that answer. Yes, this is a reason why I don't like their answers. See, directly return on equity, directly they have taken 40%, 40%. Boss, from where you have got this data? At least tell na, so that when students are trying, if in case they get stuck, they can at least see this. Yes or no, everyone? Directly see how much calculations we did, and see their calculation over in a single line. Not even from where we came, we got 40%, we wrote 40%. Boss, how you got 40%? Yes or no, everyone? Yes. Perfect. Till here, is this clear, everyone? Okay. Yes. Now once this is clear, all calculations are going to be very simple. Yes, it is a 40%. It was 39.9% because institute there has rounded it off to 40, and because all answers are based on 40 and I want to tally, that is why I'm taking 40%. Okay, boss. Now tell me, can I calculate growth? Yes, boss. It is retention ratio into return on equity. 0.6 into 0.4. It is 24%. Yes, here it is going to be 0.45 into 0.4. Yes, 18%, I guess. Yes or no, everyone? Perfect. Is this clear, everyone? Now tell me what all data I got. Boss, I know growth here. I know growth here. I know the cost of equity here. The only thing I want to know is, boss, today how much is my dividend? Yes or no, everyone? Perfect. Now is there a way for us to calculate that also? Yes, boss, there is a way for us to calculate that also. Pay attention, students. Now yes, we'll have to calculate the dividend today. Tell me, students, if you come to the question, let me come again to the question. This is a beautiful question. This is the only question which is new, and trust me, beautiful question. That is why we will spend time here. Wherever questions are new, we will spend time. Absolutely no issues. Tell me, students, if you see, question is telling the net worth of the company is 250 lakh. Tell me what is net worth? It is the total book value of equity, equity share capital plus reserves and surplus. It is 250 lakh. Yes, the number of shares is 2 lakh. So if I divide, will I arrive at the book value per share? Yes or no, everyone? Yes, boss. So look at this, students. Pay attention, everyone. Yes. Total book value of equity. it is 250 lakh. So therefore the value of equity, book value of equity, equity per share, also called as BVPS, total is 250 lakh divided by 2 lakh shares. It is going to be rupees 125 per share. Is this clear, everyone? Okay, fine. Book value per share, boss. Yes, for 1 rupee, yes, for one share, what is the total value, yes, of equity in the books? Yes, boss. Tell me how much return, yes, company is generating on the equity funds. Yes, we have calculated already, boss. Right now company is generating 40 percentage, yes or no, everyone? Okay, so can I calculate, yes, EPS 0, yes, it is book value per share into the return on equity. Basics, in the basics we have done this formula. Okay, boss. Yes, one value, yes, the value of one share is 125, sorry, 125. On that, yes, company is generating 40 percentage return. So 125 into 40 percentage gives me the total earning for the equity shareholder, which is going to be 50 rupees. Is this clear, everyone? Yes or no? Give me a simple confirmation. This is one way of doing, or else there is another way of doing it as well. Tell me, students, what is the total value of equity? Tell me, simple. Yes, in books of accounts you are showing equity. Tell me what is the total value of equity? 250 lakhs. Yes or no, everyone? Now what is the question trying to tell? Yes, for my equity holders, how much return I'm generating and giving? I'm generating and giving them 40 percentage return. So basically 250 lakhs into 40 percentage. Total how much profit company is generating for the equity shareholder? Patesh, yes, 100 lakh. Tell me how many shareholders are there? Yes, 2 lakh. Yes, that means what is the EPS earnings for one shareholder? EPS 0 is 50. This way also I can be doing. I converted everything into per share, yes, at the upfront only, and accordingly I did the calculation. Yes or no, everyone? Okay, whichever is comfortable you can do it. Okay, fine, boss. Therefore EPS 0. Today what is the EPS? Is 50 rupees. Is this clear? Because I want today's dividend. That is why I'm considering today's figure. Today this is a net worth. Today this is the total value of equity in the books on that 40 percentage return. Okay, based on that I calculated. Simple, boss. Tell me, I want to calculate the dividend. Tell me in year 0 to 5. Yes, how much percentage dividend we are distributing? 40 percentage dividend we are distributing. Yes or no, everyone? Perfect. Therefore dividend D0. 50 is the EPS, 40 percentage only we are distributing. Total earning is 50, in that 40 percentage we are distributing, which is going to be rupees 20. Yes or no, everyone? Therefore D naught is equal to 20 rupees. Is this clear, everyone? Perfect, bingo. Now with this all the data is ready. Today's dividend I know the growth rate, I know the discounting rate. Can I calculate the value of the share? Yes or no, everyone? Simple, boss. So accordingly we will calculate the value of the share. Yes, everyone, online live students, give me a confirmation till here whether the things are clear. Yes or no, everyone? Yes, quickly let me repeat one more time. Pay attention. Question is asking calculate the value of the share. Firstly, I wrote all my data. Then I saw to calculate the value of share, what all I want. Yes, firstly I want D naught, today's dividend. Next I want the growth for uneven as well as evens. Yes or no, everyone? Then I want the cost of equity. Cost of equity easily I could have calculated. Now to calculate growth, two things: retention ratio, return on equity. Retention ratio, bingo, it is available. Return on equity is what I have to calculate. So I just saw the data. Question had given me net profit ratio as well as asset turnover ratio as well as debt to equity. So randomly I took some numbers. Yes or no? Randomly I started. Let us see. Let us start and see where it goes. Net profit margin is 8%. So I told, okay, boss, if sale is 100, net profit is going to be 8 rupees. Okay. Question told asset turnover ratio. It is turnover divided by asset. Yes, it is equal to 2.5. I know turnover. I have assumed it as 100. That means asset should be how much? Asset should be 40. Yes or no, everyone? Now tell me, total asset is 40. In that, equity and debt is going to be 20-20. So accordingly I got 20-20. Now I told return on equity. Return divided by equity. How much return company has generated for equity holders? Return means profit, 8 rupees. How much value it has taken from equity holders? 20 rupees. That means it has generated 40%. Yes or no, everyone? So similarly we'll do year 6 onwards. So based on that I will arrive at my return on equity. Based on that I will arrive at the growth. Is this clear, everyone? Okay. Yes, this is one important calculation. The second important calculation is calculating D0, D naught. Yes, question told me that the book value. Yes, this is a simpler approach for us to do it. Look at this, everyone. Question told me that the total book value of equity, that is here, boss. Here the value of equity is 250 lakh. Yes, which is equity share capital plus reserves and surplus. Yes or no, everyone? Tell me how much return company is generating for the equity holders right now, 40%. So can you tell what is the total profit company has generated for equity holders, Patish? Yes, it is a 250 lakh into 40%. Yes, it is 100 lakh. Yes or no, everyone? Yes, I want to calculate the earning per share. So let me tell EPS 0. 100 lakh total we are generating. It is for 2 lakh share. That means it is going to be 50 per share. Yes or no, everyone? EPS 0. Now I want the dividend. Yes, dividend is how much? 50 is a EPS. Only 40% we are declaring dividend. That means it is going to be 20 per share. Is this clear, everyone? Yes or no? Yes. Sir, year 6 onwards, asset turnover ratio is going to be 3.5. It will not affect return on equity, sir. Yes, dear, it will affect. That is why year 6 onwards, separate calculation is there, na, dear. Why are you asking these kind of questions in revision, boss? Two separately calculations I am doing here. Okay, so here I am separately getting my growth rate, return on equity, everything separately I am getting. Okay, point number 1. And point number 2, here I don't want the 6th year dividend right now. Right now I want to 0th year dividend, because on that I will add or keep on adding growth and accordingly go forward. Yes or no, everyone? That is why dividend, when I am calculating EPS and dividend, that I only want for the 0th period. Yes or no, everyone? Perfect. Is this clear, everyone? Okay. Now once data till here is simple, clear, from here onwards we'll have to take our discussion forward. Tell me, students, what all question is trying to tell? Question is trying to tell me that, okay, first 5 years I am having uneven growth. Tell me D naught is given. D naught is 20. Yes, year 1, 2, 3, 4, 5. Yes, I want D1, D2, D3, D4, D5. Then I want price at the end of 5th year, which is D6 divided by K minus G. All these I will bring it to present value, arrive at the value of the share. Yes or no, everyone? From here onwards, the question is simple. But wait, one small adjustment is there. What is that small adjustment? Now understand, students, throughout in my dividend, yes, plan, whatever questions we have done, yes, I have told also in the regular batch that I can directly consider the dividend. I can directly apply growth on the dividend on the assumption that the payout ratio is same. Simple, boss. Suppose I am telling EPS, TPS. Suppose the payout ratio is 50%. So whatever I am earning, 50% I am declaring or distributing as dividend. So say for example 0th year, yes, earnings was 100 rupees. That means dividend is going to be 50. Yes, first year the growth is 10%. That means in reality what will happen? The earnings will grow by 10%. Yes, earnings will become 100 to 110. But boss, because I am paying 50% of the earnings, 110 into, yes, 50% is going to be 55. It is as good as telling 50 plus 10%, 55. Yes or no? Second year, if I am again doing 110 plus 10%, 121. Ideally, the growth is in the earnings. But because the payout ratio is same, directly I can consider the growth in the dividend also. Yes or no, everyone? 55 plus, yes, 10%, it is 60.5. Yes or no? Or I can do 121 into 0.5. Yes or no, everyone? Okay. Now understand, when can I directly consider growth in the dividend? When payout ratio is same. If payout ratio is changing, I cannot consider. Look at this, students. Say for example, I am telling, look at this. I'll keep the same thing. Yes, 100 is there, 50% payout. Suppose growth is 10%. Is this clear, everyone? Okay. But third year onwards, I am only going to pay 20% dividend. Tell me, first year I am paying 50%. So total 100 was the EPS. On that 50%, 50 I paid. Okay. Next year 10% it will grow, so it will become 110. Yes or no? On this 50% is going to be 55. So if you do directly 50 plus 10% also, it is going to be 55. 110 plus 10% becomes 121. Yes or no, everyone? On this 50% I am paying out. Assume randomly. Okay, yes, so it is going to be how much? Yes, 60.5. Yes or no? Now next year, suppose growth is 10% only, so 121 plus 10%, 133.1. But boss, now we are telling, boss, now onwards I will not pay 50% dividend. I will be paying only 20% dividend. Tell me, students, how much it is going to be? 133.1 into 20%. It is going to be 26.62. Yes or no, everyone? Perfect. But tell me, if you are considering the growth directly in the dividend, what it will become? It will become 60.5 plus 10%. That is not the answer. Is this clear, everyone? In regular batch I have told, yes, simple. If in case we'll have to write it somewhere, yes, we can write it this way. Look at this, everyone. Or let it be there. Let me just add a new page.
Very important note. We can consider growth directly in dividend only if payout ratio is same. If payout is changing, in that case, first calculate EPS, yes, then calculate dividend. Yes, dividend is equal to whatever is the earnings into the payout ratio, dividend payout ratio. Is this clear? I hope this is making sense to you guys. Yes, students who purchased our class in a regular batch already I have told. Yes, you guys can please write down this note as well. Now tell me students, year 1 to 5 as well as year 6 onwards, my payout ratio is changing, yes or no everyone? So tell me, can I directly add growth in the dividend? No, first I should consider EPS. Based on that only I should be considering the dividend. Is this clear everyone? Yes, and growth will happen in the earnings, not in the dividend directly. So see how I am going to calculate. Yes, steps to solve the question. Calculate D1 to D6. Yes, first I will write down, okay, year. Okay, I will write down the EPS. I will write down the payout ratio. EPS into the payout ratio gives me the dividend. Tell me, 0th year today EPS was 50. Yes, on that 40 percentage dividend I am distributing, that means it is going to be 20. Tell me students, yes, every year how much is a growth? First 5 years growth is 24%. Okay. 6th year onwards it is going to be 18 percentage. Okay, boss. Tell me, 50 plus 24 percentage is 62 plus 24% plus 24% plus 24% plus 24% plus 18%. Now tell me how much percentage of earnings we are distributing as dividend. Tell me, in the first 5 years 40% I am distributing. So 62 into 40%, 24.8. 76.88 into 40%, 30.75. Similarly I am doing, yes or no? This if you wanted, now you could have directly added 40, yes, plus 24% plus 24%. But here when it comes here, this is where it becomes difficult. Tell me, in the 6th year, what is happening? My EPS is 172.97. How much percentage of my earning I'm declaring as dividend? 55%. So can I directly add the growth on the dividend? No, boss. I have to calculate EPS. Yes, 172.97 into 55% gives me 95.13. Is this clear everyone? Yes or no? Note, we cannot calculate DPS directly because the payout ratio is changing. Now once this is done, calculation is going to be very simple. Bingo, my dear students. Look at this. Here 0, 1, 2, 3, 4, 5. Yes everyone, look at this. I'm going to quickly do. We have spent a lot of time here in this question. Okay, D1 is going to be 24.8. Yes, second year dividend is 30.75. Third year dividend is 38.13. Fourth year dividend is 47.28. Fifth year dividend is 58.63. Yes or no everyone? Till here we have considered. Now yes, for 5 years I am having uneven growth. 6th year onwards there is even growth, so I can calculate price at the end of 5th year. Yes, it is a D6 divided by KE minus G. Tell me, 6th year dividend. Yes, I have already calculated in the working note, which is 95.13 divided by cost of equity. It is 0.256 minus growth is going to be 0.18. Yes, which is going to be 1251.71. Is this clear everyone? So here I am also having P5, which is 1251.71. Is this clear everyone? So I have 5 year dividend as well as price at the end of 5th year. Look at this. Yes, D1, D2, D3, D4, D5 as well as P5. I am having the cash flows. Boss, present value factor at the rate of 25.6%. It is already given in the question. Calculate present value. It is 496.81. Is this clear everyone? The answer is going to be 496.81. 3B. Yes, institute would have done directly. Yes, in a simple, yes, stretch. It is going to be how much? 496.83. Is this clear everyone? All the online live students, give me a confirmation. Is this clear? This was one of the most beautiful questions, my dear students. 3 important places wherein we should be careful. First one is calculation of return on equity. Second one is calculation of D0. Third one is calculation of dividend for each of those places. Yes or no everyone? Lengthy as hell, but don't worry, for CMA Final students 2 questions option is anyways available. So if it was a new question, you could have skipped it. But yes, anyways, yes, these are the level of questions which should be coming in the examination. Ideally, previous questions were very simple, halwa. Nevertheless, they are coming, we are scoring, as simple as that. Yes or no everyone? Perfect. 3 important points. I want you guys to compulsorily make a note of this if a question like this comes. First one is, how do you calculate return on equity? Second one is, yes, what was the second one? It was calculation of D0. Yes or no everyone?
Third one is calculation of dividend D1 to D6. Directly you cannot calculate because EPS, yes, payout ratio is changing. Yes or no? Apart from that, everything is in the pocket. Yes or no, everyone? Okay. This one was over. This was a crazy question. Crazy question. Now let us go ahead to June 25 paper. Paper number, question number 3B. Yes, everyone. June 25, question number 3B again. Where is it? 3B. Yes, everyone, giving you guys time. Please pause, read the question, try it by yourselves, then we will together solve it, my dear students. Yes, everyone, let us go ahead to question number 3B. Yes, from June 25 paper. Beautiful question. Look at this, everyone. Now, this question, it had come first in the CA examination. I'll show you that question also. Exactly same question. It was a new question. It was nowhere there in the resources. Yes, it came in May 2023 examination. Yes, in the CA examination for 8 marks. Now, exactly 2 years later, CMA Institute has directly copied that question. Is this clear, everyone? So, when we tell that, okay, when whatever questions we are having in the CA module, whatever questions have come in the CA past papers are important, it is for a reason. Because CMA Institute is having a habit that whenever they want to prepare questions, they're lazy to prepare there. So, they'll see, okay, CA exam, what new question there was? Ah, beautiful question, let us put it here. Is this clear, everyone? Okay, look at this, everyone. I will read it from there, then I will show. Okay, investor is considering to purchase shares of Delta Limited, whose current market price is 172.45 per share. Okay, market price is given 172.45. Company is proposing a dividend of 6 for the year ending 31st March 2025. Proposing means it is not D0, it is a D1. Yes or no, everyone? D1 is given. Okay, Delta is expected to grow at 20% per annum for the next 4 years. First 4 years, the growth is going to be 20%. Thereafter, growth over the next 3 years will decline linearly by 1%. Okay, so 20% is there. From there, it will become 19, 18, 17. Thereafter, it will stabilize at a certain growth rate. It will stabilize at a certain growth rate. The one particular growth rate, it will stabilize. Which growth rate, we don't know. Okay. The required rate of return for investor is 20%. Yes, dividend value is to be taken up to 2 decimals only. 7 years factors are given. Calculate the stable growth rate at the end of 7 years. Is this clear, everyone? Okay. Now let me come here and see the question. Okay, same story. Current market price is 172.45. Yes, proposing 6 rupees dividend. Yes or no, dividend? Yes, one good thing they have done, it was 31st March 2024. Because they are giving next year. They give 31st March 2025. Okay, grow 20% for the next 4 years. Thereafter, it will decline linearly by 100 basis points per annum. CMA Institute understood that, okay, CMA final students may be having a doubt. What is 100 basis points? That is why they told, okay, 1%. Yes or no, everyone? Thereafter, it will stabilize at a certain growth rate. Required rate is 20%. Take up to 2 decimals only. Calculate the stable growth rate. Is this clear, everyone? Okay. Now, I have solved it already, so there is no point in again solving it, but I will show you guys the answer. Look at this, everyone. What is the question trying to tell? Yes, company is proposing a dividend of 6 rupees. Okay, that means first year dividend is 6 rupees. Okay. First 4 years, growth is 20%. Growth is 20, 20, 20, 20. Thereafter, it will, yes, fall by 1%, 19, 18, 17. So accordingly, I will calculate dividend first year to 7th year. Yes, 6 plus 20%, 7.2 plus 20% plus 20% plus 19% plus 18% plus 17%. Is this clear, everyone? Okay. I calculated dividend for uneven growth. Now, yes, thereafter, growth will stabilize at a certain growth rate. Here onwards, there is going to be stable growth rate. So I will be calculating price at the end of 7th year. Yes or no, everyone? Tell me, to calculate price at the end of 7th year, what all I want? Yes, I want D8. Yes or no, everyone? Or D7, which I know, into 1 plus G divided by KE minus G. Tell me, do I have D7? 7th year dividend, I know. Do I know the cost of equity? 20% is given. But do I know growth? No, boss, I don't know growth. Whatever I don't know in life, I will assume it as X. Yes or no, everyone? But remember, whenever one data is missing, to compensate for that, one extra data should be given. Yes or no, everyone? Come here to the question. Tell me, students, generally, value of the share, whether we will be calculating or will it be given in the question? We will be calculating. But here, value of the share is given in the question, 172.45. But to compensate for that, what is not given? Growth is not given. That we will assume it as X. Yes or no? Understand the psychology, my dear students. But sir, here what is given is the current market price, na sir. It is not the value, na sir. You told value and price are different. Now understand, in situations like this, yes, whenever we are having reverse calculation questions. Now tell me, students, if you assume this is the market price, this is not the value, tell me, is there any logical way for us to go ahead? I don't know the growth. But if I don't know the growth, means something else should be given, not to compensate for that. What it should be? It should be the value. So here what I will assume, yes, I will assume that the shares are correctly valued. That means the current market price of 172.45, that itself is the value of the asset.
So value is 172.45. Okay, dividend I know, price I don't know. Yes, one figure is missing, that I'll assume it as X. Accordingly we'll calculate. Is this clear, everyone? Look at this, how simple it is going to be. Let me assume the stable growth rate is equal to X. Yes, price at the end of 7th year, it is D8 divided by K minus G. 7th year dividend is 17.04. Yes, into 1 plus X divided by 20 percentage minus X. Yes or no, everyone? I will write it as it is, 17.04 plus 17.04 X divided by 0.2 minus X. Now I will bring all these cash flows to the present value. Yes or no, everyone? Look at this, everyone. Year 1 2 3 4 5 6 7, I'm having dividend for the first 7 years as well as price at the end of 7th year. Now all these are in the form of rupees, so the present value will be in the form of rupees. Here, yes, it is in the form of X, so I'll have to be careful here. It is going to be 17.04 into 1 plus X divided by 0.2 minus X into 0.2791. I will keep it as it is. Yes or no, everyone? Okay, fine. Now this should be equal to the value of the share, which is 172.45. Yes or no, everyone? Simplify, boss. Simplification at the final level, I presume you guys know it already. Yes, I will arrive at the growth rate is equal to 16%. Is this clear? Yes, students who purchased our classes, a regular exam oriented or fast track, this is already done. Yes, that is why I just quickly solved it. Is this clear, everyone? Yes or no? People who are watching it on YouTube, yes, this question solving is available on YouTube also. If you guys go, yes, there's a 12-hour video on security valuation. There, this question also I've solved. Is this clear? You guys can see it, but trust me, students, very simple solving. Is this clear, everyone? Okay, this question was also a bingo question. Now comes December 25 attempt. Again, question 3B. This was over. Okay, completely over. 7 marks. Now comes December 25. Yes, December 25. Again, question 3B. Yes, 3B. Yes, everyone, read the question, then we will together solve the question, my dear students. Yes, everyone, so look at this. This has a question which has come in December 25. Again, a very similar question, except for question 3 that we did, wherein 3 adjustments were there. All other are similar questions only, but still we are solving. Look at this, everyone. Evaluating the value of a share. Current dividend per share is 25. D not. Okay. Current market price is 550. Okay, market price is given. Okay. Company's return on equity stands at 18% with retention ratio of 50%. Yes, retention ratio into return on equity gives me the growth rate. Yes or no, everyone? Okay. Required rate of return is 14%. Okay. The expected growth rate are 12% for first year. For first year, they're telling, boss, growth is 12%. 10% for second year. For second year, they're telling 10%. And the sustainable growth rate by considering retention ratio for the third year and beyond. Yes, they're telling, boss, third year and subsequently, yes, what should be the growth rate? That for that I've given the data, right, to calculate sustainable growth rate. Do that. Tell me how much is the retention ratio. 50% into return on equity is 18%. That means I guess it is 9%. Yes or no, everyone? Okay. Present value factor are given. Okay. Accordingly, calculate the value of the share. Yes. Compare it with the market price to determine if it is overvalued or undervalued. Okay. Very simple. Tell me, students, what is the dividend? Current dividend D naught is equal to 25. Cost of equity is equal to 14%. Okay, what are the growth rates which are given in the question? Yes, G1 for year 1 it is 12%, for year 2 it is 10%, for year 3 onwards, yes, it is a retention ratio into the return on equity. Yes, retention ratio is 50% into 0.18. Yes, it is going to be 0.09, that is 9%. Is this clear, everyone? Calculate the value of the share. Tell me pictorial representation. 0 1 2. Yes, first year 25 was a dividend. First year growth rate is 12%. 25 plus 12% is going to be 28. Yes, second year plus 10%. Yes, D2 it is going to be 30.8. Yes, third year onwards every year growth is going to be 9% only, so I can calculate price at the end of second year. It is a D3 divided by K minus G. So it is 30.8 into 1.09 divided by cost of equity is 14%, 0.14 minus 0.09. Yes, which is going to be how much? 671.44. So P2 is 671.44. Yes, so what all I'm having? Year 1 I'm having 28, year 2 I'm having 30.8 as well as 671.44, which is going to be 702.24. Present value factor set 14%. It is already given in the question. 0.877, 0.769, 0.877, 0.769 gives me the value of the share, which is going to be how much? It is going to be 564.58. Is this clear, everyone? Okay, once I've calculated the value of the share, now second part question is asking me to comment, tell me the value of the share. Value means the benefit. If I purchase the share, how much benefit I'm getting? I'm getting a benefit of 564, but tell me at what price it is available? 550 only, boss. So tell me, isn't it cheap? Yes, boss, it is undervalued or underpriced. Yes or no, everyone? Yes, it is undervalued, hence it is suggested to buy the share. Is this clear, everyone? Yes, you guys can see the answer also. 3B. Okay. Yes. 564.54. Yes, undervalued. Is this clear, everyone? Yes. So with this, all questions from the past 5 attempts done. We have completed, my dear students. Yes, it is time for us to go ahead to model question papers. Giving you guys 1 minute to let this sink in. Then we will go ahead and solve questions from MQPs as well. Yes, everyone, now let us go ahead to solve questions based on model question papers. June 25, there is question number 4A. Yes, quickly let us try seeing this question. The question has come for 7 marks. Again, it's a similar question to the one we have solved. Yes, our students should be in a position to easily do it. Okay, you have been reading about Software Limited, which currently retains 90% of its earnings. Yes, how much it is earning? 90% it is retaining. Only 10% it is declaring, distributing as dividend. 5 a share this year. What is this talking about? Yes, 90% of its earnings, 5 a year. Earnings is 5 rupees a year. Yes or no? In this year, that is EPS is 5 rupees. Okay, it is earning a return on equity of almost 30%. Tell me, retention ratio is given, return on equity is given. I will be getting the growth. Yes or no, everyone? Assuming that the required rate of return is 14%, calculate the amount you pay for the share on the basis of earnings multiplier model. Okay, boss. Now calculate the amount you pay for the stock if the retention ratio was 60% and the return on equity was 19%. Same thing, only with different data I'll have to be calculating. First one, let me try doing it. Okay, very simple bingo calculation. Tell me, students, where are we? Okay, question number 6, model question paper, 7 marks. All questions are 7 mark question. Tell me, students, from my EPS, if I reduce the DPS, dividend, I will arrive at the retention ratio. Yes or no, everyone? Tell me in terms of percentage, what is question telling? That companies are retaining 90%. Yes, 90% it is retaining. That means how much it is declaring? Only 10% it is declaring out of total 100%. Yes or no, everyone? In amount to rupees, tell me what is the EPS earning per share? Question is telling it is 5. That means how much dividend is distributed? Yes, 10% of that 0.5. How much is retained? 4.5. Yes or no, everyone? Or else this way also I could have done. I could have also told, yes, EPS 0 is equal to 5. Yes, dividend is going to be 10%, which is 5 into 10%, 0.5. Retained earning is 90%, which is 4.5. Yes or no, everyone? However we want, we can be doing it. Okay, simple, boss. This is over. Okay, now what else is needed? Tell me, students, I know the dividend D naught. Today's dividend D naught is equal to 0.5. Now I want growth. Yes or no, everyone? Tell me what is growth? Growth is going to be retention ratio into return on equity. Tell me, retention ratio is 90% into the return on equity, question is telling is 30%. So it is going to be 0.2727%. Yes or no, everyone? Perfect. Now tell me, yes, we have to calculate the value of the share. Yes, I will be calculating the value of the share as per dividend growth model. Now question has told, yes, calculate it as per earnings multiplier model. Tell me one nonsense of a calculation that they've done, but ultimately they're doing dividend growth model only. So yes, just remember, even if question is asking apply earnings multiplier, basically here they will first somehow using some, yes, nonsensical approach, they will calculate the P ratio. Then based on P ratio again they will multiply. All is ultimately going to give you the same answer. Pay attention. Yes, we will finish it off in a very simple approach. Then I'll tell you, okay, yes, an alternate way wherein I am actually using the earnings also. Don't worry about that. Is this clear, everyone? Earnings multiplier, wherein I'm using the earnings multiple, basically the P ratio. Yes or no, everyone? Yes, PE. Yes, earnings multiple, price earnings multiple. Okay, fine, boss. Come here. Yes, tell me, students, I just need to calculate. Yes, just very simple. Yes, today's dividend is given. Constant growth rate is 27%. Required rate of return is also given in the question. So I can directly calculate, yes, value of the share P naught. It is a D1 divided by KE minus G. Tell me, today's dividend is going to be how much? 0.5 D naught. How much is the growth? 27% into 1.27 divided by cost of equity is going to be how much? 14%. Minus 0.27%. Yes, tell me, students, yes, this mathematically how much is it coming to? Mathematically how much it is coming to? 0.5 into 1.27, it is going to 0.635 divided by 0.14 minus 0.27, it is coming to minus 0.13, which is 0.635 divided by minus 0.13 which is coming to minus 4.88. Yes, tell me students, is it logically possible? Is it logically possible that a share price, that the price of a share is going to be negative? It is never possible. Yes or no, everyone? Simple. Yes, we know. You want to purchase a share. Either you pay amount or max to max, you are getting it for free. Will it happen that company is telling, Macha, take this share also, take this 5 rupee cash also? Will it ever happen? No, boss. Yes or no, everyone? Perfect. Now, what is the flaw? Yes, this is a the fundamental limitation of dividend growth model. Yes, in dividend growth model, basically we had told dividend growth model will apply if and only if the cost of equity is greater than the growth. Yes or no, everyone? Basics from interdays we've been learning. Yes, that the cost of equity should be greater. That is, say for example, if the growth is 27%, cost of equity should be at least 30%. Only then this formula will make sense. In this case, yes, my entire denominator will become negative. That means value of the share will become negative. It will not be giving me a meaningful answer. Yes or no, everyone? Since the required rate of return is less than the growth rate, this model cannot be used. Look at this, everyone. Yes, let me come to the solution also for A. Look at this. For A, where is the solution? Okay, here itself we are having solution below that. Okay. Yes, since the required rate is less than the growth rate, the earnings multiplier model cannot be used. The answer is going to be meaningless. Is this clear, everyone? Okay. Now let me come to the second requirement. Calculate the amount you will pay for the stock if the retention ratio is 60% and its return on equity was 19%. Okay, boss. In second situation, let me try doing. Tell me if the retention ratio was 60%. Tell me, everyone. Yes. Percentage total rupee. Yes, EPS minus DPS gives me retention ratio. Yes or no, everyone? Tell me, EPS was 5 rupees. If retention is 60%, means dividend how much you are paying? 40%. 5 into 40%, 2 rupees dividend I am paying, 3 rupees is the retention ratio. Yes or no, everyone? Okay, fine. Growth is equal to retention ratio into the return on equity. Retention is 60% into the return on equity. What is question trying to tell? 19% into 0.19. Yes, 0.6 into 0.19, which is going to be how much? 11.4%. Yes or no, everyone? Now can I calculate the value of the share? Yes, boss. It is a D1 divided by K minus J. Tell me already how much dividend currently we are giving? 2 rupees. It is a D naught. D naught is equal to 2. 2 into how much is the growth? 11.4%. So 1 plus 0.114 divided by cost of equity. Yes, which is going to be how much? Whether question has told in the second requirement? No. Let me see what is the cost of equity. That question is trailing here 14%. It is 0.14 minus growth 0.114. Yes, so it is going to be 2 into 1.114 divided by 0.14 minus 0.114. Yes, which is going to be 0.026. Yes, which is going to be how much? 85.69. Yes or no, everyone? Therefore, the value of the share is going to be 85.69. Is this clear, everyone? Look at this. Am I getting the answer as 85.69? Yes, boss. Therefore, yes, we will be willing to pay 85.69. Is this clear, everyone? Very simple answer this has been. Yes or no, everyone? Perfect. So with this question is also over. Now we are going ahead to the next question. Pay attention, which is December 25, question number 3B. December 25. December 25 3B. Look at this very simple question. It is going to be, yes, Textile Limited is a major player in the textile industry. Yes, looking at the question, do we remember anything? Yes, boss. Yes, it is similar to the question that we have already solved. Wherein, okay, return on equity we had to calculate, D0 we had to calculate, and dividend I could not have directly calculated because yes, payout ratio is changing. Yes or no, everyone? See this, 40% dividend payout. After that, it is going to change, become 55%. Same story. Now see the level at which your CMA institute is operating. Now generally what will happen is question will first come in the model question paper. That time it will be a new question. Then it will come in the examination. Here what CMA institute is doing is first the question is coming in the past examination. Then subsequently when they are preparing model question paper, they are very lazy. They are telling, let me just copy and paste the question. Yes or no, everyone? So yes, in June 2025 this question had come for 5 marks. You guys can try it by yourselves. Okay, boss. This is also over. Bingo. Yes, now comes June 2026, sorry, December 25 it was. June 26 question number 3B. That is also a similar question, but still, nevertheless, let me just show it to you guys quickly so that you guys will be done and through with it. Question 3B. Look at this, everyone. Investor is considering purchasing shares of Delta Limited, whose current market price is 172.45. Linearly decline. Thereafter, it will stabilize at a certain growth rate per annum indefinitely. Question number 4 that we had solved. Yes or no, everyone? Same question they have copied. Is this clear, everyone? So this is going to be same as question 3, same as question number 4. So with this, we have successfully completed solving all the questions from the past examination papers as well as model question papers for the chapter equity valuation, my dear students. Now, the scribble notes also, if you guys want, I will upload it on the Telegram group Think with Tabish, so you can just go there and get access it from there, my dear students. Is this clear? Anyways, the question PDF of the questions, all the questions compiled together, as well as the question list chart which all questions has come in the past examination, how questions are going to come, all that PDF is anyways available on the Telegram group. You can take a PDF of that. Is this clear, everyone? With this, we are ending this session. See you guys in the next session. Until then, keep studying, keep smiling, keep working hard, keep making your parents proud, and see you in the next session. Take care. Bye. Yes, everyone, so welcome back, my dear students. It is a time for us to solve all the past examination questions for the chapter bond valuation. For students who purchased our classes, who are watching these classes on the app, I hope that you guys have watched the chapter bond valuation. We have solved all the questions, done cumulative revision, are completely confident on the chapter. Now we will go into the past examinations as well as model question papers which the CMA Institute has come. Trust me, we will solve this. It is going to be very simple halwa for you guys. Now, from the examination perspective, bond valuation, how questions are going to be there? Yes, every attempt, one compulsory 7 marks questions will be there. With that, one MCQ of 2 marks will be there. Is this clear, everyone? Yes. Now, bond valuation question 4A. Any of the past examination you pick question 4A, it is going to be a question on bond valuation. Is this clear, everyone? Okay. So without wasting any time, in 3, 2, 1, let the maja begin. Question number 4A. So we will come to the past examination December 23. Yes, boss. Question number 4A. Yes. Look at this, everyone. Yes, following information is related to convertible bond of Sonta Limited, which is currently priced at 1060 per bond. It is a question based on convertible bond. And trust me, students, last 7 out of 10 attempts minimum, a question on bond valuation is just coming from convertible bond. Yes, very simple. And the way we have done, yes, so many formulas are there, but we have finished it off in a very simple way without having the need to by heart even a single formula. And trust me, all all questions are similar, repetitive only. Look at this, everyone. Okay. Now, yes, market price of the convertible bond is given. Yes, market price is 1060. Okay, boss. Conversion parity price, if I'm converting into share, yes, effectively for one share, how much it is? 53. Conversion premium is given 10.41667 percentage of downside risk. With respect to straight value is given 12.766. Yes, you are required to calculate the number of shares on conversion ratio, analyze the current market price per share, as well as calculate the straight value. Is this clear, everyone? The moment we see the question, our heart should start singing. Dil jumping, japang, jampak, jampak, thumping, tapang, thampak, thampak, gili, giliya. Why? Because this is a question which we have solved. Exactly similar question, my dear students. Yes or no, everyone? See how simple it is going to be. Tell me how much I am paying for a convertible bond. Yes, for students who are watching it on YouTube, if you guys are not having clarity about convertible bond, on YouTube, security evaluation marathon I have uploaded, wherein this concept beautifully. Yes, some 15-20 formulas are there. Not even a single formula you need to by heart. Easily we have understood. Please do watch it, then come here. Good number of questions are there. Okay. Tell me what is the total price? Yes, 1060. Effectively for one share, conversion parity price, if I convert into a share, for one share how much I am paying? 53 only. That means 1060 means how many shares? Look at this, everyone. Number of shares or conversion, I can very well tell, boss, for one share effectively I am paying 53 only. Conversion parity price. That means if I paid 1060 means, yes, effectively how much shares if I convert I will be getting? Simple, it is 1060 divided by 53. Yes, is it going to be 20 shares? Yes or no, everyone? That means my conversion ratio is equal to 20. Is this clear? Again, I'm telling here, my intention is not to sit and explain all the logics again. Yes or no, everyone? Please do watch the marathon. Only questions I'm going to solve. Okay, boss. Conversion parity price. Yes, there is a convertible bond. If I convert into share, for one share the price is effectively 53. Boss, I'm paying total 1060 for a convertible bond. That means it is effectively getting converted into how many shares? 20 shares. Okay. Then question is asking, okay, calculate the market price of one share. Now there are two different approaches. Tell me, students, question has given me the market price of the convertible bond, yes or no, everyone? And question has given me the conversion premium, yes or no, everyone? Tell me, how do I calculate it? Very simple. Yes, I have my conversion value. Pay attention. Assume this is the conversion value. Now I have the market price. Market price is how much? 1060. Yes or no, everyone? Now assume randomly, I'm telling, assume the conversion value. If I convert into shares, yes, the value of the shares is going to be, say, for example, 1000. Can I calculate the premium? Yes, boss, 60. Can I calculate the premium percentage? Yes, boss, 60 upon 1000. Always increases from a lower value. Yes or no, everyone? Okay, fine. Now I don't know the conversion value. Let me assume conversion value is equal to X. Look at this, everyone. Conversion value is equal to X. Therefore, the conversion premium, yes, it is 1060 minus X. Yes, therefore the conversion premium percentage, yes, it is a conversion premium divided by conversion value. Yes, people who have no idea of what is a convertible bond or our approach in which we are solving, boss, I am again recommending, please watch marathon, come back here, only then it will be making sense. It is going to be 1060 minus X divided by conversion value is 6X. Yes, if you do into 100, it will be in the form of a number, or else it is going to be in the form of a decimal. Yes, which is a 10.10416667. Yes or no, everyone? This one you take it to the other side, it becomes 0.1041667X is equal to 1060 minus X. This comes here, so it becomes plus 1. It is 1.1041667X. Therefore the value of X is 1060 divided by 1.1041667. Therefore the value of X is going to be 960 rupees. Yes or no, everyone? Now remember students, who is your X? Who is your X, students? Don't tell me the name of that person who we have assumed as X. Conversion value, that is, if I convert my bond into shares, what is its value today? Yes or no, everyone? Therefore the conversion value is equal to X is equal to rupees 960. Okay, boss. If I am converting into shares, its value is 960. Tell me, students, one bond, when I am converting into shares, how many shares I am getting? 20 shares. So what is the market price per share? Okay, boss. If I am converting the bond into shares, what is the market price of the shares? So it is basically market price per share into number of shares. It is equal to 960. Yes, market price is what I want to calculate. If I convert, I am getting 20 shares. Yes, therefore the market price per share, it is 960 upon 20. Yes, it is going to be how much? 960 upon 20. Yes, it is going to be rupees 48. Is this clear, everyone? This is one approach. Boss, there is one more approach. Tell me, students, previously I did it on a total basis. Now let me do it on a per share basis. Tell me, firstly, I have the market price per share. That is, if I actually go to the market and purchase a share, how much I have to pay? That is what I want to calculate. That I don't know. It is X. Or option number 2, I purchase a convertible bond. How much I am paying? Yes, I am paying some 1000 to 1060. I convert it into shares. How many shares I can convert it into? 20. That means effectively per share in that case, how much I am paying? 53. Yes or no, everyone? So it is a conversion parity price. Tell me, in this case, how much is going to be the premium? Yes, it is 53 minus X. So if I want to calculate premium as a percentage, 53 minus X divided by X, that premium percentage should be 0.1041667. So take it, it becomes 0.1041667 into X. Yes, minus X comes here, becomes plus X. It becomes 1.1041667X. Therefore X is equal to 53 divided by 1.1041667. Therefore the value of X this way is also 48. Is this clear, everyone? If you are understanding, great. Otherwise, no issues. Normal approach only you guys can be following. Is this clear, everyone? Again, I am repeating, in the regular class I have already solved. This much I am explaining only for our YouTube students who are watching it on YouTube. Yes or no, everyone? Okay, fine. Now what else question is asking me? Question is also asking me to calculate the straight value of the bond. Tell me, question has told the percentage of downside risk. Tell me, students, how we are going to do it? Okay, boss. Here I am having the current market price, which is how much? 1060. Yes or no, everyone? From there it will fall down. Yes, if in case the equity option is not working out and come down to the straight value, which is just the bond value. Yes or no? Straight value I don't know, that is what he is asking. So let me assume it as X. So how much is the downside risk? Downside risk in the form of rupees. From 1060 it is falling to X. Okay, if I want a downside risk as a percentage, it is basically downside risk. How much is the downside risk? Yes, and the question is telling, yes, the downside risk as a percentage with respect to the straight value. That means where the base is the straight value. Yes or no, everyone? Yes, with respect to straight value, it is basically downside risk divided by straight value. Tell me, how much is the downside risk? It is 1060 minus X divided by straight value is equal to x. The downside risk percentage is going to be how much? 12.766 percentage, which is 0.12766. Yes, x goes this side, becomes, yes, 0.12766x. This minus x comes here, becomes plus x. So 1.12766x is equal to 1060. Therefore the value of x is equal to 1060 divided by 1.12766. Yes, which is going to be how much? The value of x is equal to rupees 940. Therefore the straight value of the bond is equal to, yes, 940. Is this clear, everyone? My intention is to just quickly solve and finish it off. Look at this, everyone. Is question 4a. Let us come to the solution. Yes, number of shares on conversion is going to be 20. Yes, current market price of per share is 48. Straight value of the bond is 940 rupees. Yes, 7 marks has been credited to your CMA Final SFM account. Devyar Sajano, Dhanyavad. Yes or no, everyone? First question was very simple halwa question for us. Let us proceed further to the next attempt. June 24, question number 4a. June 24, question 4a. June 24, question 4a. Tell me. Yes, everyone. Okay. Now this is also very simple question, students. Yes, basic question only. Yes, on convertible bond. Look at this, everyone. Following parameter pertaining to 8% fully convertible debentures issued by Dazin Limited at 1000 rupees. Okay, fine, boss. What is the current market price? 1200. Conversion ratio. If I'm converting, yes, how many shares I'll be getting? 25. What is the straight value? 1000. Market price of the equity shares, it is going to be 40. Expected dividend per share is going to be 1 rupee. Yes, everyone, come here. It's exactly a similar question. Now I've told you what all is required in the question. Yes, question is asking what is the conversion value, market conversion price, basically the conversion parity price. Yes or no, everyone? Conversion premium per share, premium I want on a per share basis. Okay, the ratio of conversion premium ratio I want, premium over the straight value I want, favorable income differential I want. I told whenever we are doing calculations, we will always be doing calculations in 3 buckets. First is conversion related calculation. Yes or no, everyone? Let me try doing the calculation. Tell me, students, first conversion and its related calculation. Pay attention, everyone. Firstly, tell me, students, what is the conversion ratio? It is given in the question, conversion ratio. If I am converting a bond into shares, how many shares I will be getting? 25 shares. Now let me try calculating the conversion value. If I convert into shares, what is the value of the shares? It is a market price per share into the conversion ratio. Tell me, if I am converting into share, what is the market price of the share? 40. If I convert, how many shares I am getting? 25 shares. So 40 into 25, it is going to be 1000. Yes or no, everyone? Okay, so let me try calculating the conversion premium ratio. Tell me, students, conversion premium in the form of rupees. Tell me, let me just do it. Yes, conversion value is 1000. Tell me, students, what is the market price of the share? It is going to be 1200. Yes or no, everyone? So tell me, conversion premium in the form of rupees. How much premium I am paying? 200. 1200 minus 1000. It is going to be 200. Yes or no, everyone? So if I want in the form of a ratio, how much extra I am paying? 200. From where? Premium is always from a lower value. It is from 1000 into 100. It is going to be 20%. Yes or no, everyone? Okay, fine. This is also over. Then comes conversion parity price. Question is telling market conversion price. Tell me, students, how much you've paid to purchase the bond? 1200. Yes, if you are converting, how many shares you will be getting? 25 shares. So can I tell, effectively for 25 shares I have paid 1200. That means for 1 share, how much I am paying? It is going to be 1200 divided by 25, which is going to be rupees 48. Yes or no, everyone? Perfect. Now if question is asking conversion premium per share, yes, how much premium is there on a per share basis? Now 2 different approaches are there. Either I can tell, boss, I am having the conversion premium, 200 premium I am paying. It is for how many shares? It is for 25 shares. Yes or no? So 200 divided by 25, it is going to be 8. Yes or no, everyone? So it is a conversion premium. 200 I paid. Yes, it is for 25 shares. That means it is going to be 8 rupee per share. Or else, boss, there is another way of calculating it as well. Tell me actually what is the market price of the share? 40. But effectively, yes, if I'm buying a bond and converting it into share, means effectively how much I'm paying there? 48. That means how much extra I paid? 8 rupees. That way also I can be doing the calculation. Is this clear, everyone? Okay. All conversion related calculations are over. Now we are going to the second bucket, which is a straight value and its related calculation. Now question is asking, boss, calculate the premium over the straight value. Tell me, students, question is telling straight value is how much? 1000. Tell me market price is how much? 1200. So what is the premium? 200. Yes, I want the premium over the straight value, over and above the straight value, how much it is? So it is a 200 upon 1000. into 100, it is going to be 20 percentage. Is this clear, everyone? Okay, this is also over. Pause. Now next comes calculation of favorable income differential. Yes or no, everyone? Tell me, students, what all options are there? Yes, if I ultimately want those equivalent shares only, tell me what all I could have done. Yes, either I can purchase one optionally convertible debenture, or I am telling no, boss, I don't want. Yes, let me purchase equivalent shares. Tell me, yes, how many shares my bond can be converted into 25. So let me purchase 25 shares. Tell me, students, if I am purchasing a bond every year, how much income I will be getting? Tell me, students, every year how much income I will be getting? Tell me. Yes, this is a 8% bond. Yes, having a face value of 1000. So every year I will be getting interest income, which is 8% of 1000, which is going to be 80 rupees. Yes or no, everyone? Perfect. But boss, instead of buying a convertible bond, if I just went and purchased the share, every year it will only be giving me the dividend income. Yes or no, everyone? Tell me how much dividend income it is going to give me. 1 rupee per share. That means if I'm purchasing 25 shares, means it will have given me 1 per share into 25 rupees. Yes or no, everyone? That means, tell me, instead of buying shares directly because I purchased the bond, yes, how much is the favorable income differential? How much extra income I'm getting? Boss, if I would have purchased shares directly now, only 25 I would have got, but here I'm getting 80. Therefore favorable income differential is going to be rupees 55. Yes or no? If I want favorable income differential per share, boss, 55 extra I'm getting. It is effectively for 25 shares. So 55 upon 25, it is going to be 2.2. Yes or no, everyone? Yes, this is a logical way for us to do it, or else, yes, you can do it in the form of a format also. Yes, tell me interest on the convertible debentures, optionally convertible debentures. It is 80. Yes, minus dividend on equivalent shares. If I would have purchased 25 shares, means 25 into 125 I would have got. That means how much extra income I am getting, favorable income differential, it is going to be 55. Yes, divided by conversion ratio number of shares. 25 gives me the favorable income differential per share. It is going to be rupees 2.2. Again, I am reminding to our students here what is our agenda, because this video we are planning to upload it on YouTube as well. Simple, students. Here, for our students who purchase the classes, the entire chapter is over. We just want to additionally solve just past paper. So I will not be explaining again. These are just basic things. If there is any crazy adjustment, that I will explain. These basic things, yes, if you have taken classes once, already you should be knowing. Or else, boss, our marathon is there wherein I have explained concept that you can see. Here it is only question solving. Is this clear, everyone? Okay, boss. Till here we have done. Now look at, let us try tallying the answer. Pay attention, students. Question 4a. Each of the answer we would have got. Yes, look at this. Conversion value is going to be 1000. Market conversion price is 8. Conversion premium per share is 8. Yes, ratio is 20%. Premium or state value is 20%. Favorable income differential is 2.2. All those answers we have also got. Yes or no, everyone? 2.2, 20%. Yes, 8 per share, 48. This is 20%. Conversion value is 1000. Simple, bingo. Yes or no, everyone? So 8 marks has been credited to your CMA Final SFM account. Devyar Sajjano. Dhanyavad. Yes or no, everyone? Now we are proceeding to December 24, question number 4a. Yes, everyone, December 24, question number 4a. Yes, everyone, this is again a similar question. Yes, let us read. Yes, giving you guys some time to read, then we will together solve this, my dear students. Yes, everyone, let us proceed further to the next question. Now this is a question number 3. Basically we are picking question from December 24 paper. Question had come for 7 marks. Again, yes, this question includes certain new adjustments, but still based on the concepts we've explained, you should be in a position to easily solve this. Okay, everyone? Yes. Now we are at the final level. We cannot be expecting that every question should be exactly the way we have solved in the class. Yes or no, everyone? We are the final, boss. Some of the new adjustments would be there, but concept wise it is same. Absolutely nothing. If you read the question second time, yes, write down the data, you will be in a position to answer. Let us quickly see this. Paulson Limited has issued a convertible bond. Okay, boss, convertible bond only they are talking about. Yes, which is having a face value of 1 lakh rupees. Bond pays a coupon of 6% per annum with interest payment made semi-annually. Semi-annually. Okay. Bond has a term of 3 years and will be redeemed at 1,10,000 at maturity. Alternatively, bondholder has the option to convert it into 50 shares at the end of 3 years. Okay, required rate of return for the bond is 12% per annum. Currently, the share price is 2,000 rupees. Shares are expected to grow at an annual rate of 8%, shares will also be paying an annual dividend of 50 rupees each. Okay, present value factor is given 3%, 6%, 8%, 12%, 1, 2, 3, 4, 5, 6. Calculate the value of the bond if it is redeemed on maturity. Calculate the value of share at conversion. Calculate the value of conversion option. Advise which is more beneficial. Is this clear, everyone? Now, understand what we have to be doing. Some bond related data is given, some share related data is given. Let us bifurcate and write down the data. Then everything else will follow. Yes or no, everyone? Okay. So first, let me write down the bond related data. Tell me, students, bond related what all is given? Boss, face value is 1 lakh. Okay. Coupon is 6% per annum, payable semi-annually. Yes. Term is 3 years. Redemption is 1,10,000. Okay. Let me just write down. Look at this, everyone. Bond related data. First, face value is equal to 1 lakh. Yes or no, everyone? Coupon 6% per annum, payable semi-annually. Okay. Term is equal to 3 years. Yes, redemption price is going to be 1,10,000. Yes or no, everyone? Required rate is 12%. Question is telling everything. Okay, now share related data. Tell me share related what all is given. Firstly, conversion ratio is given. If I'm converting means how many shares I will be getting? 50 shares. Yes or no, everyone? Okay. Current share price is 2000. Growth rate is 8%. Dividend is 50. Yes or no, everyone? Can be converted into 50 shares. Okay, boss. Tell me current market price rupees 2000. Growth is equal to 8%. Dividend, current dividend D naught is equal to rupees 50. Is this clear, everyone? Okay, fine. Now based on this, what is the first requirement? Calculate the value of the bond if it is redeemed at maturity. Okay, boss, on redemption on maturity, I am telling, okay, I want to redeem the bond. That means it is a normal bond. What is the value of the bond? Very simple, boss. Yes, calculate the present value of future cash outflows. Yes or no, everyone? Yes, tell me, remember here, yes, if it is just a purely a bond, coupon is 6%, which is paid semi-annually. In case of semi-annual, I told every data convert into 6 months. Yes or no, everyone? That means tell me everything I will convert into 6 months. Coupon is equal to 6% per annum. That means it is 3% for 6 months. Yes or no, everyone? Yes. Life or required rate. Question is telling it is 12% per annum. That means it is 6% for 6 months. Life or term, it is 3 years. That means it is going to be 3 into 2, 6 periods of 6 months each. Yes or no, everyone? Okay, fine. Now tell me, yes, let me draw a line and accordingly try estimating the cash flows. 0, 1, 2, 3, 4, 5, 6. Tell me, if I purchase the bond, tell me every year how much coupon it is going to pay. Yes, boss, every 6 months it will give me a coupon of 3%. So 1 lakh into 3%. Every year I'll keep on getting an interest of 3,000, 3,000, 3,000, 3,000, 3,000, 3,000. In the 6th period, I will get back my redemption price of 1,10,000 also. Yes or no, everyone? Semi-annual, convert into 6-month period, 3 years. It is 6th period. Yes or no, everyone? Okay, boss. Now tell me year 1 to 6. Yes, every period. This is not year, this is period. Every period I'm getting a cash flow of 3,000. Present value factor I want at the rate of 6%. Yes, now additionally, apart from this, in the 6th period, I'm getting 1,10,000 also. Present value factor of 6% is given. Use the same factors. Yes, 6 years 4.917. This is 0.705. So value of the bond is going to be, yes, 92,301. Is this clear, everyone? Okay, fine. So first one is over. Calculate the value of the bond. Next, assess the value of the share at conversion. Tell me, students, when will the bond be converted into share? At the end of 3 years. Question is asking, boss, at the end of 3 years, what will be the value of the share? Tell me, students, how do we calculate? Very simple, students. Question is telling me today what is the value of the share? 2000. Question is telling me every year share will grow at 8%. So can I tell at the end of 3 years what is going to be the share price? Very simple, boss. Yes, this is a logical shortcut. Pay attention. I will give you a detailed approach also. 0, 1, 2, 3. Tell me today what is the price of the share? It is 2000. Yes or no? Yes. Question is telling every year it will grow at 8% into 1.08 into 1.08 into 1.08. That means at the end of 3 years how much it should be? 2000 into 1.08 to the power 3. It is going to be rupees 2519.42. Yes or no, everyone? This is the answer. Very simple. Look at this everyone, first two requirements. Yes, the answers we have got. Yes, you guys can tally with the answer. That is going to be the answer. Yes, now sir, but this way we have not done na sir. Yes, what we had done was a, yes, a logical approach, but here because today's price is given and question is telling every year 8% it will grow, directly also I can do. Or else logically if you want to do, how you can do, tell me boss. Today's dividend is given, yes or no everyone? Yes, currently we are paying a dividend of 50 rupees. That means d naught is equal to 50. Can I calculate the price today? Yes, p naught is equal to d1 divided by ke minus g. Yes boss, price today I know it is 2000. Dividend at the end of first year, which is d naught into 1 plus g. Tell me students, growth I know every year there is going to be a growth of 8%. So 15 to 1.08 divided by cost of equity is missing, ke minus 0.08. I told if ke is missing, all other data is given. Yes, calculate ke as a missing figure. If you do that, cost of equity is going to be 10.7%. Not explaining. Yes, calculation is there here. Now boss, once you've got cost of equity, what is it I want? I want price at the end of third year. How do I calculate price at the end of third year? It is next year dividend, d4 divided by ke minus g. Yes, d4, it is d0 is 50 into 4 year. I should incorporate growth, yes or no, into 1.08 to the power 4 divided by ke, which is 10.7% minus 8%, comes to 2519.42. Same answer only I got. Is this clear everyone? If you want a long approach you do, or else directly, boss, today's price I know, question is directly telling you that the share price will grow by 8%. Directly incorporate growth, calculate the value, as simple as that. Bingo. Yes or no everyone? Okay. First two requirements you should be in a position to do. Now the third requirement, yes, it is a new one. Pay attention. Nothing new per se as such, but still, yes, we will highlight and keep this. Assess the value of the conversion option. We are telling that, boss, if I convert the bond into shares, what is the value that I am going to generate today? Is this clear everyone? Okay. Assess the value of the conversion of option. If I convert my OCD, optionally convertible bond, into share, what is the value that I'm going to generate? Okay boss, very simple it is going to be. Look at this my dear students. Where is it? Okay. Tell me, if I'm converting, suppose today I'm having a bond, assume this is a bond that I'm having. I'm telling today itself I'm going and telling Macha, I don't want this, I want to convert into shares. What I will be getting? I will be getting me the equivalent shares, yes or no everyone? Tell me how many shares I'll be getting? I will be getting 50 shares, yes or no everyone? Tell me. Now I'm purely a shareholder. How many shares I'm having? 50 shares. Tell me, every year what I will be getting? I will be getting dividend income every year. Tell me, for one share how much dividend they are distributing? For one share, if you see 50 rupees dividend they are giving, yes or no everyone? Perfect. So it is a 50 rupees per, yes, per share, into how many shares I'm having? 50 shares. 50 into 50, it is going to be rupees 2500. Yes or no everyone? Okay. Now at the end of third year, yes, tell me, optionally convertible bond is there. Yes, at the end of third year, yes, when I'm converting, I will be converting it into shares. So I will be arriving at the value, yes or no everyone? Tell me, what is going to be the value at the end of 3 years? Boss, for one share the value is going to be 2519.42. Yes, if I'm converting means I'll be getting 50 shares. Tell me students, value of shares at the end of third year. Yes, at the end of third year I am getting 2519.42 or 2520, 2520 per share. Boss, when I am converting, I will be getting 50 shares, which is going to be how much? It is going to be rupees 1,26,000. Yes or no everyone? Okay, perfect. Now I'll have to calculate the value. Pay attention everyone. Let me just draw a line. Pay attention. Yes, this is logically flawed. I will tell you why also, don't worry. Right now let me just show the calculation. 0 1 2 3. Yes, tell me, every year, tell me, yes, I had an optionally convertible debenture. I told Macha, I don't want this, let me convert it into shares. I got 50 shares. Yes, on every share I'm getting a dividend of 50 rupees. That means 50 shares means every year I'm getting a dividend income of 2500, 2500, 2500. At the end of 3 years, what I'm doing? Yes, these shares I am selling. When I'm selling, what is the market price of the share? Yes, the market price of each share is 2520. I'm having 50 such shares. That means I will be getting 1,26,000. Yes or no everyone? 1,26,000. So I have to bring it to the present value. Yes or no everyone? Tell me, question has told me that the required rate is 12%. So let me discount it at 12%. So I will tell year 1 to 3. Every year I'm getting 2500. In the third year, additionally I'm getting 1,26,000. Present value factor 12 percentage. Yes, for 1 to 3. Here it is 2.402. Here it is 0.712. That gives you the value which is going to be equal to rupees 95,717. Is this clear, everyone? Yes or no? Perfect. Now what did the question ask? Question ask, assess the value of the conversion option. Boss, if I opt for conversion option, what is the value? I will tell boss, if I convert means I will get equivalent shares. On that every year I will get dividend. Yes, at the end of the year, question told me that boss, I can sell. Yes, what is going to be the price at that particular point in time? We have calculated 2,520 per share into 50 shares gives me the sale price. Bring it to present value by discounting at the required rate of 12%. You will arrive at the value of the share. Is this clear, everyone? Okay. Now comes the next one, which is advise which option is advantageous for the bondholder. Tell me, students, two options he is having. Either he can continue it as a bond. If he is continuing it as a bond, tell me what is the total value he is going to derive. Straight value, it is 92,301. But boss, if he is going to convert it into shares, tell me what is the value he is getting. 95,000. Tell me, value means benefit. Benefit should be more, yes or no? Where it is more, boss, if I'm converting, yes or no? So I'll tell present value of cash flow, if we are keeping it as a bond, is 92,300, but if I'm converting into share is 95,700. So it is better to convert them into shares. Is this clear, everyone? This is the answer, question number 4A. Yes, first one is 92301. Second one, expected price is 2,520. Yes or no? 2,000, add 8%, 8%, 8%. Yes, value of the conversion option is 95717. So it is better, yes, to convert it into shares. Is this clear, everyone? Yes, bingo. This question is also done over, my dear students. Now let us go ahead to June 25 examination, wherein question number 4A had come. Yes, June 25 examination. Yes, question number 4A. Yes, this is the question. Yes, this is again a beautiful simple question. Yes, but a beautiful question. Okay, yes, slight adjustments institute has added. Yes, when it has given the question in the examination, very simple. If your basics are strong, easily you can close your eyes and do it. But still, yes, because the question is there, we have told we will solve it. So let us together solve it, my dear students. Giving you guys 1 minute to read the question, then we will together solve it. Yes, everyone, so it is time for us to proceed further. Yes, one of our online live students has given a comment. Sir, the way you create a beautiful line, same way you are teaching us also in a beautiful way. Yes, the most important thing in life, your line should be straight, whether you are straight or not. Yes or no, everyone? Okay. Yes, everyone, let us proceed further. This is a question from June 25 examination, question 4A. Basic question, but yes, small, you'll have to put in your brain. Is this clear, everyone? Okay, let us try reading the question. Very simple it is. Astera Utilities Limited, a leading energy infrastructure company, has issued a 25-year zero coupon bond. 25-year zero coupon bond. I know what is a zero coupon bond. It doesn't pay, yes, any coupon. It is issued at deep discount, redeemed at par. Okay, bingo. To raise capital for large-scale hydroelectric power project. Okay, bond does not offer any interim interest. We know it, boss. Yes, and will be redeemed at face value on maturity. We know it, boss. However, it comes with an embedded option designed to mitigate the interest rate risk for both the issuer as well as the investor. The moment students see this, so embedded option, so optional knowledge can simple alvada. Forget. Yes, we will see. Nothing is there in this. Yes or no, everyone? Yes, we had discussed the concept called callable bond or bond refunding. Yes or no, everyone? Yes, similarly, there is something called as puttable bond also. That thing is there. Even if a person doesn't know, he can get it. Understand? Don't worry, I will explain to you guys. Okay, bond is having a face value of 1 lakh and follows annual compounding. Okay, investors required yield to maturity is structured in a tiered manner. Okay, 8% per annum for the first 10 years. So year 1 to 10, it is 8%. 9% per annum for the next 10 years. Year 11 to 20, it is 9%. And 10% per annum for the final years. Year 21 to 25, it is going to be 10%. Is this clear, everyone? This is the required rate of return. Okay, fine, boss. Now, in addition to the maturity value, okay, the bond includes two embedded options. First is a call option. Yes, allowing Astera Utilities to redeem the bond early at the end of year 15 for 1,01,000. Second is a put option, enabling the investors to sell back the bond to company at the end of year 18 for 80,000 if market conditions warrant. Present value factors are given. Yes, 5, 8, 10 for 5 years, for 8 years, for 10 years, 8%, 9%, 10%. Okay, fine. Now let me just come here. Let me just write down the required rate. Pay attention, everyone. Everything we will do. required rate. Let me just to paste these figures. Okay, fine. Yes, everyone. Now understand what is happening here. Very simple question, my dear students. Pay attention. Okay. Astera Utilities Limited. Let me write it as AU Limited. AU Limited. And assume you are the investor. Investor. Yes, in this you, me, all these people are there. Now, Astera Utilities Limited. Company wanted to raise money. They could have issued shares or they could have issued bond. Okay, they went for bond. Is this clear, everyone? Okay, company has issued bond. Yes, and it has raised money. What kind of bond it has issued? Zero coupon bond. Is this clear, everyone? Tell me, normally what will happen when we have issued a bond? Say if it is a normal redeemable bond, okay, we will issue a bond, say for example 1 lakh. Yes, we raise 1 lakh rupees. Suppose 10% is a coupon. Every year 10% interest we will pay. At the last year we will pay the redemption price. If it is a zero coupon bond, what we will be doing? Yes, we will issue the bond at a deep discount. Suppose 1 lakh is a face value. Yes, right now today I will collect 40,000 only. I will not pay any interest. Yes, in the last year when I'm redeeming, I will repay to them 1 lakh rupees. Is this clear, everyone? Okay. Now here understand, whenever the bond is issued for a very long period, there is an inherent risk. What is the risk? I will just give you a very simple example for you guys to feel. Now assume I issued a normal bond. Just assume I issued a normal 10% bond for 25 years. Is this clear, everyone? Okay. I issued a normal 25% bond for 10 years. Okay, AU Limited has issued. Right now the interest rate is 10%. They don't have the problem. Suppose in future, yes, the market interest rates have fallen. Suppose after 5 years the market interest rate is 5%. That means if they take a loan in the market, now 5% is sufficient. 5% interest only they have to pay. But boss, here how much they are paying? Because they issued a 25 years bond. Yes, they are paying, yes, 10%. Are they happy? Yeah, sad? Sad, yes or no, everyone? Perfect. So they are at a disadvantage, yes or no, everyone? So what they do, because it is a long term, I don't know what the interest rate is going to be for a long term. So company sometimes keeps a feature called a callable bond. Yes, students who have purchased our CMA Final SFM classes, yes, and are watching on the application, yes, callable bond, call put. Yes, right now you may not be knowing, but we are having a chapter called derivatives. There in detail we will understand and discuss. Call means the right to buy. Now AU Limited, yes, it is a company. It has issued the bond. Look at this, everyone. Suppose this is a bond. Yes, this is a bond. Yes, it has issued the bond to the investor. Yes or no, everyone? Yes, right now they are paying 10%, but in the market interest is 5% only. Now callable bond means, yes, AU Limited is having the right to buy those bonds back. That means I'm telling Macha, yes, I know it is for 25 years, but I'll have to be paying a higher interest. Yes, I am cancelling these bond. I am calling these bond. I am buying back these bond. Is this clear, everyone? Okay. What is callable bond? It is a bond wherein issuer of the bond is having the option to buy back or cancel the bond. Is this clear, everyone? Okay, understood. Sir, there is one more thing called as puttable bond, sir. What is it? I will tell you, very simple. Why we are here? Okay. Assume, yes, company has issued a 10% bond for 25 years. Yes or no, everyone? Okay, fine. So imagine we are all the investors. Yes or no? You, me, all of us are investors. Okay. Yes, every year we are getting 10% interest. 10%. We were very happy because the market interest rate was 10%. Now assume after 5 years, yes, there is inflation. Yes, global recession. Yes, things are not going right. Okay, what is happening? USA, Iran, so many things are happening. You know, okay, I don't want to tell anything. Because of that, what is happening? Yes, the market interest rates, inflation is increasing. Because of that, the market interest rate is increasing. Now, this money, right now the market interest rate is 20%. That means right now I as an investor, if I have invested this money, means I would have got 20%. But I invested 5 years back for 25 years. Because of that, I'm getting 10% only. Am I happy? Sad? Sad, yes or no, everyone? Perfect. Yes, investor is telling, boss, I invested for a long term bond, assuming that it gives me good return. But right now the market interest rate has increased. So if I'm investing now, means I should have got 20%, but he is giving me 10% only. I don't want this bond. I want to discontinue. How do I discontinue? Yes, there is an option called as puttable bond. Put means the right to sell. Yes or no, everyone? Tell me, I am the investor. So originally when company has issued the bond, I would have received the bond.
Now I don't want this bond. Nonsense bond. It is giving me 10% only. Market is giving me 20%. So I have the right to sell, the right to return the bond. To whom I will return? Back to the company. I'm telling Macha, don't want this bond. Take it back. Yes or no, everyone? That is a puttable bond. Is this clear, everyone? I hope in short, I've explained what is a callable bond and what is a puttable bond. Okay. Now what is the question trying to ask? Three different situations. First, calculate the value of bond today if it is a normal bond which is held till maturity, 25 years. Calculate the value of the bond if the issuer exercises the call option. Okay, yes, at the end of year 15. Calculate the value of the bond if investor exercises the put option at the end of year 18. Advise which option is best. Simple. Each of the situations we will do. Draw a line, you will get an answer. Pay attention, students. Normal, what is the value of the bond if issuer is holding till maturity? Pay attention, everyone. Come here. Yes. First one, let us draw a line. Pay attention, my dear students. Okay. Year 0, year 25. Okay. Now tell me, students, what is the interest rate? Yes, first 10 years, the interest rate, required rate is 8%. Next 10 years, year 11 to 20, the required rate is 9%. Year 20, 21 to 25, the required rate is 10%. Yes or no? Tell me, assume it is a normal zero coupon bond. Call option, put option, nothing is there. That means today the bond is issued at a deep discount and it is redeemed at maturity at the end of 25 years. At what value it will be redeemed? At the face value. Tell me, students, what is the face value? 1 lakh. Now I want to know, if I'm getting 1 lakh at the end of 25th year, today how much I should be investing? Yes or no, everyone? I will discount it. Tell me, students, simple. I am coming back. Basics. I have told you in case of different interest rate what to do. Yes, boss. Here I am coming back. How many years I am coming back? From 25 to 25 years I am coming back. Tell me what is the interest rate? 10%. So divided by 1.1 to the power 5. Yes or no, everyone? Okay. I reached 20th year. But boss, I want to come to 0th year. Slowly we will come back. Again, here 10 years, the interest rate is 9%. So 10 years I am coming back. At which interest rate I need to discount? 9%. So divided by 1.09. How many years? 10 years. To the power 10. Yes or no, everyone? Okay. I reach 10th year. I want to come to the 0th year. So again, I will do it this way. Divided by, yes, what is the interest rate here? 8%. So 1.08 to the power 10. Yes, in basics we have done this. Yes or no, everyone? Same interest rate, different interest rate, going front, coming back. So it is going to be very simple. So how it will be? It is going to be 1 lakh divided by, yes, 1.1 to the power 5, 1.09 to the power 10, 1.08 to the power 10. Either I can write it this, like this, or instead, alternatively, can I also write it this way? Boss, 1 lakh is there. Yes, I am bringing it back. Yes, either I can directly write divided by 1.1 to the power 5, or I can write it this way, into 1 divided by 1.1 to the power 5. Simple, boss. Either you can write 100 divided by 10 is equal to 10, or you can write 100 into 1 by 10. This is also 10 only. Yes or no, everyone? Same. Till now, always whenever we are calculating present value, this way I used to write. Now I'm just writing it this way because the factors here are available. Yes or no, everyone? Very simple. Okay. 5 years back I came into 1 divided by 1.09 to the power 10 into 1 by 1.08 to the power 10. Yes, pay attention, everyone. 1 lakh. Yes, 1 divided by 1.1. 10% for 5 years. If you come here, 10% for 5 years. It is given how much it is? 0.6209. 0.6209. Yes, 9% for 10 years. Look at this, everyone. 9% for 10 years. 0.4244. 0.4244. 8% for 10 years. 8% for 10 years. 4224. This is 4224 into 0.4632. So how much is the value that you are going to get? It is 12,148.26. Yes or no, everyone? Perfect. Is this clear? Yes. So value of the bond is going to be 12,148.26. Okay, boss. Now comes the next requirement. What is the next requirement? Calculate the value of the bond if the issuer exercises the call option at the end of year 15. See, try seeing what is happening in case of call option. Yes, either normal case, today the bond is issued, at the end of 25th year 1 lakh, yes, you are getting back. Okay. Or else there is an embedded call option. Yes, in call option, issuer, that is AU company limited, yes, it is feeling, no boss, I am paying them higher interest, they can cancel, call back the bond. Yes or no, everyone? When they can call back? Yes, first is a call option,
Yes, allowing Estera Utilities Limited to redeem the bond early at the end of year 15 for 1 lakh 1000. Tell me, if call option is there, means what will happen, students? Tell me, draw a line. Line should be straight. At the end of 15th year, they can call back, cancel the bond by paying how much? 1 lakh 1000. Now this is a value here. I want to calculate the value here. I want to come back. Yes, tell me, students, what is the interest rate? For the first 10 years, the interest is 8%. For the next 10 years, the interest is 9%. Yes or no, everyone? See, very simple. I am coming back. Tell me, year 15 to year 10. 5 years I am coming back. Yes, 9%. Divide by 1.09 to the power 5. See how simple it is if our basics are strong. Here 10 years I am coming back at 8%. Divide by 1.08 to the power 10. So it is going to be 1 lakh 1000 into 1 divided by 1.09 to the power 5 into 1 divided by 1.08 to the power 10. It is 1 lakh 1000 into 1 divided by 1.09 to the power 5. Yes, 9% for 5 years. It is 0.6499. 0.6499. Yes, 8% for 10 years. Sorry, 8%. Where is it? Okay, 8% for 10 years. It is going to be 8% for 10 years is 0.4632. 0.4632. Yes, it is going to be how much, my dear students? It is 30,404.4. Is this clear, everyone? Okay, fine. Yes, now comes the third one. Yes, what is the third one, my dear students? Yes, calculate the value of the bond if investor exercises the put option at the end of year 18. At the end of year 18, investor is going for the put option. Tell me, in that case, what is the story? Yes, in case of put option, which is enabling investors to sell the bond back to company. They're telling, this is not giving me, yes, good return, I'm giving it back to company at the end of year 18 for 80,000. Okay, yes, in that case, 18th year, yes, we can give it back to company 18th year, and we can be getting 80,000. Tell me, I want to come to 0. So year 0 to year 10, first 10 years 8%, next it is 9%. Yes or no, everyone? Tell me, 18th year to 10th year, 8 years I am coming back at 9%. Divide by 1.09 to the power 8. Here 10 years I am coming back at 8%. Divide by 1.08 to the power 10. So it is going to be 80,000 into 1 by 1.09 to the power 8 into 1 by 1.08 to the power 10. Yes, tell me how much it is going to be. It is going to be 80,000 into, yes, 9% for 8 years. Present value factor 9% for 8 years. 0.5019. 8% for 10 years. 0.4632. Yes, which is going to be how much? 18,598.41. Is this clear, everyone? Very simple calculation. Just read and solve. Just a different interest rate. Basics. Lecture 1. I told you, in case of different interest rate, how do you calculate present value? Just that is there. Yes or no, everyone? Okay. Come here. Look at this, everyone. Yes. Advise which option is best from investor's point of view. Yes. 4A the question was. Let me try tallying the answer. Pay attention, students. 4A. Yes, in the first case it is 12,148.26. 12,148.26. Second one 30,404. 30,404. Third one it is 18,598. Yes, it is going to be 18,598. Is this clear, everyone? Okay. Now, which option is better for the investor? What the institute has done? Institute's answer. Yes, tell me, they have seen. Okay, here the option value is 12,148, 30,400, 18,598. Wherever it is the cheapest, they told, boss, in the first case it is the lowest, go for that. So 12,148. Yes or no, everyone? As option 1 has the lowest value. Yes. So the best option, yes, is to buy and hold it till maturity. This is the answer, to be held till maturity, because it is having the lowest present value. Is this clear, everyone? This is the institute's answer. Now, first 3 calculations institute has done it absolutely correct, no problem. But in the fourth one, I personally do not agree with the institute's answer. Why, sir? Tell me, what are we calculating? We are calculating value. Tell me, what is value? Value means benefit. How much benefit I am getting? or how much I should be paying, yes or no everyone, how much benefit I am getting. Tell me students, in the first case, today you are purchasing the bond, at the end of 25 years you are getting 1 lakh. That means in today's term, how much is the benefit? Only 12,148, yes or no everyone. Tell me, if issuer is exercising call option, then understand what is happening, boss. Today you are issuing the bond, at the end of 15th year only you are getting 1 lakh 1,000. Tell me students, yes, in that case what is the benefit you are getting? 30,000 for not. Simple. I am telling you, two options are there. Today you pay me 10,000 rupees. Price is reference student. Today you pay 10,000 rupees. Now, two options. Either first option, at the end of 25 years I will give you 1 lakh. Or second option, at the end of 15 years I will give you 1 lakh 1,000. Which one will you opt for? You will opt for 1 lakh 1,000, boss. Early I am getting, more I am getting. That means my benefit is more here. That means ideally, if question would have asked which one is better, I would have told, boss, here, if call option is exercised by the issuer, in that case value means benefit. Here I am getting the maximum benefit, so this option is the best for me. But institute has told, institute just thought it is a price. It is not price, boss, it is a value. Value means benefit. Benefit should be more. Yes or no everyone? Yes, I told you the logical answer. I have written the institute's answer. Yes or no everyone? You guys do whatever you want. Yes, it is better to write down the institute's answer only. Is this clear everyone? Okay, boss, this one is over. Now let us proceed further to question number 5. Yes, December 25 examination. Yes, not a very old attempt. Yes, question number 4a. Again, question number 4a is on bond valuation. Now, yes, beautiful. Yes, students felt that when the question had come, they felt, yes, out of syllabus question has come in the examination. This is not there in our syllabus. All those things students were telling. Trust me students, very simple. Yes, we have already covered it in the classes. Yes, a question had come on the concept of duration and volatility. Simple question. But if students are ignoring everything, this was there in the study material, it was there in the workbook, it was there in the workbook, yes, the question had come. But if students are not doing full coverage, they are only selectively studying, then okay, students will feel it is difficult. But our students should not be feeling it difficult, because we are covering each and everything, my dear students. So look at this, December 25, 7 marks question. Following data is available for a corporate bond. Face value is 1000, coupon is 11%, that means every year, yes, 110 is going to be the interest, years is going to be 6, redemption at par 1000, yes, YTM is going to be 15%. Calculate the current market price. Can I calculate? Yes, boss. Calculate the duration of the bond. Now, people are watching it on YouTube. If you guys don't know what is duration, it is a weighted average duration. Yes or no, everyone? Yes, on YouTube, security valuation marathon is there, 6 hours, wherein duration logically I have explained, approximately 1 hour explained. Please do watch that. Here I am only going to solve it. Is this clear, everyone? Calculate the volatility, calculate the market price. If yes, YTM will increase by 100 basis points, calculate the price if YTM will decrease by 75 basis points. Yes, round off your answer to 3 digits. Present value anti-factor for 15% for 6 years is given. Present value factor for 15% for 6 years is also given. Is this clear, everyone? Okay, fine, boss. Bingo. Now pay attention how we will be doing this. Very simple. Yes, quickly let us try doing the calculations. Tell me students, what was the question trying to tell? 1000 into 11% for 6 years, that means 110 110 110 110. So up to 6th year 110. Yes, in the 6th year 110 also I will be getting. In addition to that, 1000 also I will be getting. Yes or no, everyone? Now let us try calculating the value of the bond. Tell me students, when we are calculating duration, I told I cannot be using annuity factor, because I want to get the weighted average for each of the years. Yes or no? So I will write each of the years individually only. So in a single table I will calculate the current market price also, duration also. See how I am going to write. Year, cash flow, present value factor at 15%, present value. Okay. Yes, cash flow every year. Yes, 110 110 110 110 110. 6th year, yes, 110 also I am getting, 1000 also I am getting, so it is 1110. Present value factor at the rate of 15%, take 3 decimal digits only, we will arrive at the present value, which comes to 848.62. That is the current market price of the bond. Yes or no? Small rounding of error could be there. Now I have to calculate the duration. So what I am telling? I am telling, boss, yes, the value of the bond is 848.62. Yes, the total benefit I am getting from the bond is 848.62. In that, 95.65 benefit I am getting in the first year. So how much percentage I am getting in the first year? I will calculate the weights or proportion. Yes, it is 95.65 divided by 848.62, 0.113. Yes, 83.18 benefit I am getting in the second year out of total 848.62, which is 0.098. Similarly, I will calculate the weight. Yes or no, everyone? Now I want the duration, which is a weighted average duration. I will tell, boss, yes, 0.113. Yes, I will be getting in the first year into 1. 0.098 I will be getting in the second year, 0.085 I'll be getting in the third year, 0.074 I'll be getting in the fourth year, 0.064 I'll be getting in the fifth year, 0.565 I'll be getting in the sixth year. Do a weighted average. The weighted average duration is going to be 4.576. Is this clear? Again I am repeating, I don't want to explain the concept. This is a question solving marathon wherein we solve questions. I am not going to explain the concept. I've already explained the concept. Yes, primarily for students who purchase the classes on the app, we will be making it available, but I decide we will make it available free of cost for all our students on YouTube as well. So here I am just solving questions, students. Concept, a separate video is there. Is this clear? So duration is 4.576. so look at this, everyone. First, yes, current market price, it is going to be rupees 848.62. then duration, it is always going to be in the form of years, 4.576 years. Now based on duration we can calculate volatility. Volatility is a duration divided by 1 plus YTM. Yes, it is a 4.576 divided by 1 plus YTM is 15%. Yes or no, everyone? 15%, right? Yes, 15%. 1.15. Yes, it is going to be how much, my dear students? It is 3.979. Yes, what is the interpretation of volatility? What is volatility telling? Volatility is telling that, boss, if my YTM is changing by 1%, then the market price will be changing by 3.979% in the opposite direction. If YTM changes by 1%, price changes by 3.979% in the opposite direction. Is this clear, everyone? Okay. Now, yes, first three requirements we have completed. Yes, calculation of current market price, duration, volatility. Now, calculate the market price if YTM will increase by 100 basis points. Okay, in that case, what is going to be our answer? Pay attention, very simple, my dear students. How do we do? First, tell me, students, what is the volatility? What is happening? Volatility is 3.979%. Okay. Tell me what is happening if YTM is increasing by 100 basis points. YTM is increasing. If YTM is increasing, what should happen to the price? Price should decrease. Yes or no, everyone? Now let me try calculating the percentage decrease in the price. 100 basis points means 1%. Tell me what is volatility? 3.979. What it means? It means that YTM, change in YTM, change in price. It means that, boss, if YTM changes by 1%, price will be changing by 3.979%. Yes or no, everyone? Now question is telling, yes, what is going to be the revised price if YTM will increase by 100 basis points? That means how much percentage YTM is changing? 1%. How much percentage price should be changing? Should be changing by 3.979%. Yes or no, everyone? So can I calculate the revised market price? Tell me right now, what was my existing market price? 848.62. 848.62. Tell me my YTM is increasing. That means what should happen to price? Price should decrease. Minus how much percent it should decrease? Yes, 3.979% it should decrease. That means what is the revised price? It is 814.85. Is this clear, everyone? Yes, boss. Bingo. Now comes the next situation. Yes, what is a market price if YTM decreases by 75 basis points? Tell me, students, same approach. Volatility is 3.979%. Tell me, if YTM is decreasing, what should happen to the price? Price should increase. Yes or no, everyone? Therefore, the percentage increase in the price. Tell me, students, volatility is how much? Volatility is 3.979. Yes or no, everyone? So what does volatility mean? Volatility means that if my YTM is changing by 1%, price will change by 3.979%. Here, yes, YTM is changing by how much percent? 75 basis points, which means 0.75%. That means my price will be changing by how much? It is 0.75 into 3.979, which is going to be how much? 2.984%. Yes or no, everyone? Perfect. That means what is my revised market price? Tell me, students, what was my existing market price? 848.62. Tell me what happened to YTM? YTM decrease. That means what will happen to price? Price will increase plus how much percentage? 2.984%. That means how much we are going to get? 873.94. Is this clear, everyone? Yes, boss. Let us try tallying the answer. Pay attention. 7 marks. This question has come. Very simple question. 4A. 4A. Okay, fine. Look at this, everyone. Current market price is 848.40. We got 24 here. It is duration is going to be 4.575. Yes, we also got 4.576. Okay, volatility is 3.979. Yes, here it is 3.978. Okay, expected market price if it is changing means 814.5. We got 814.85. Here it is 873 point. Yes, 873.55. Is this clear, everyone? So 7 marks has been credited to your CMA Final SFM account. Devi or Sajano, dhanyawad. Yes or no, everyone? So for the students who purchased our classes, see, we are solving all the questions from the past papers also. Are you guys facing any challenge? No, boss. That is how comprehensive our preparation is. Yes, so whatever is needed for your examination, in fact, slightly more than what you need, we have done. So that even if the paper becomes difficult, our students don't fumble when everyone else is fumbling. Yes, the way it happened in December 25. Okay, yes, every student was telling it is out of syllabus. No, boss, it was there in your syllabus, it was there in your workbook. And institute has every right, whatever is there in the CA, yes, whenever they want, they will add and they will be putting it here. Is this clear, everyone? Okay, now coming to model question papers. Yes, June 25 model question paper, there is no question. December 25 and June 26, question number 4A. But I think as far as I remember, all these are again going to be similar questions, but nevertheless, let us quickly try seeing. December 25 4A. Yes, December 25 4A. Look at this, everyone. This question we have done already. Paulson has issued convertible bond with a face value of 1 lakh. Yes or no, everyone? Yes, either here coupon is 6% per annum. Yes, payment made semi-annually. Yes or no, everyone? Calculate the value of bond if it is redeemed. Calculate the value of, yes, share at conversion. Yes, 2000 share price was there. 8% I directly added and got the answer. Yes or no? Calculate the value of the conversion option. If I'm converting into share, what is the value? Dividend as well as, yes, the conversion value, bring it to the present value. Which option is advantageous? Boss, we have done it already. It is a exactly similar question. Yes or no, everyone? Bingo. Yes, question number 3. Now comes, okay, June 26 model question paper. That is also similar question only. Where are we? June 26 question. Yes, this one. Question 4A, June 26 model question paper. Astera Utilities Limited, we have discussed already. Yes or no? Normal zero coupon bond, callable bond, puttable bond. Yes or no, everyone? Yes, same question is there. Yes, answer is also there here. Yes, 12,148, 30,404, 18,598. Lowest one should be preferred. Is this clear, everyone? Perfect. So with this, all the questions from the past papers as well as the model question papers for the bond valuation also done. We have completed, my dear students. So I hope you guys have thoroughly enjoyed. This way we are going to complete the entire subject logically, yes, as well as do maximum question solving, my dear students. So for the students who purchase the recorded classes, first, yes, in the class, yes, we are solving all the questions from our question bank. Yes, now what we have done in our CMA Final SFM classes is for the chapters which are common, where the portions are common. Now there could be some places wherein there are certain concepts which is there only for CA, not there for CMA, that I have removed for you. There are some concepts which is there extra for CMA that I have added for you. But for the common concepts, what we have done is we have prepared a question bank wherein good number of questions are there. We will be solving them. In addition to that, if there is any extra questions which have come in the past examination paper, just to give you guys that confidence, yes, all the questions from the past paper also we are solving. So that's it for this session. See you guys in the next session. Until then, keep studying, keep smiling, keep working hard, keep making your parents proud, and see you in the next session. Take care. Bye.
Yes, everyone, so welcome to question solving series, my dear students. This is an exclusive series for our CMA final students. So we are now going to proceed further to question solving on the chapter portfolio management. A beautiful chapter, scoring chapter. Students tell that there's so many formulas in this chapter we have to sit and by heart, but our students tell that, boss, portfolio is JJB. Without even by hearting a single formula, we will be learning the entire chapter. We've learned the entire chapter, in fact. Now it is just a matter for us to solve the recent questions from the past examinations of the CMA Institute as well as the recent model question papers of the CMA Institute. Again, reminding you guys, people who are watching it subsequently on YouTube, our intention here is not to explain the concepts. The entire chapter of portfolio, without having the need to even by heart a single formula, we have understood. But for that, yes, either it is available in our classes, regular class, exam oriented fast track, or on YouTube. I've uploaded a marathon as well on portfolio management. Beautiful. Okay, even in the marathon, even if you are a first time learner, yes, you have not understood the chapter, or you watched the chapter, you have not understood, you can watch the marathon. Yes, there beautifully, logically, everything we have understood. Here I will not be telling logic for any of the formulas. I will just pick the question, solve the question, pick the question, solve the question. Okay, boss. Now from the examination perspective, what is the approximate weightage for the chapter portfolio? It is going to be approximately 18 to 20 marks. So what will happen, every attempt 2 7 marks questions compulsorily will be there. Look at this, my dear students. Yes, December 23 question 5A 5B 7 7 14. Yes, here 4B 5A 5B 21 marks, 14 14 14. Yes, model question papers 21 14 21. Is this clear, everyone? Yes, that in a descriptive portion 21 marks is allotted for portfolio and mutual funds. Most of the times, 90% of the times, 14 marks comes from portfolio, 7 marks from mutual funds. Sometimes all 3 will be from portfolio itself. Is this clear, everyone? So approximate examination weightage is 14 marks in descriptive. Now 2 to 3 MCQ questions will be there. That means 4 to 6 marks. So total weightage is going to be around 18 to 20 marks. So one of the most important chapters from the examination perspective, and yet, yes, one of the simplest chapters, my dear students. So let us quickly start. Yes, in 3 2 1. Let the maja begin. So we are going to start with December 23, question number 5A. Pay attention, everyone. We will come directly. Question number 5A, December 23. People are watching it on YouTube. If you guys want this PDF of all these questions, yes, we have shared it on our Telegram group, Think with Tabish. You guys can go there and download it from there. So we have created a beautiful index wherein page numbers we have given. Yes, all those things we have arranged it as well so that you guys can easily access it. Okay, boss. Look at this. Mr. Ahona. Tell me, students. Ahona. Ahona. Okay. An investor has made investment in 2 mutual funds. Following information is available. Mutual fund, smart as well as growth. Jensen's alpha, how much extra return? Okay. Trainer's ratio is given, actual return is given, risk premium is given. Okay. For 2 different mutual funds. Calculate beta for both the funds. Determine the risk-free rate. Identify the security market. Similar to the question that we have already solved. It is a similar question, but still we will solve this. Now, how exactly do we approach? Beta they are asking, as well as risk-free rate. I will pick only for one of the mutual funds. Others you guys can do it by yourselves. Tell me, students, Jensen's alpha. This is telling how much extra return we have earned. Yes or no, everyone? Actual return is given. Extra return is given. So can I calculate the required return? Yes, boss. Required return as per CAPM, it is RF plus beta into RM minus RF. Yes or no? So I will write RF plus beta into RM minus RF is given. Yes or no, everyone? 2 data is missing. Now trainer ratio is also given. Tell me what is trainer ratio, students? It is basically actual return minus risk free return divided by beta. Yes or no, everyone? Perfect. Trainer's ratio is given. Okay. Actual return I know. Yes. Risk free I don't know. Okay. Beta I don't know. Again, if I rewrite this equation, it will be again in the form of RF plus beta into something is equal to 1 return. I will be having 2 equations solve a simultaneous linear equation. Very simple. Look at this, students. We will together solve instead of telling this. Look at this for smart. Let me pick up the trainer ratio. Now understand, we will maintain uniformity in data. Look at this. Here data is given in percentage. But just the ratio they have given in the form of decimals. Tell me, students, randomly I am giving you guys numbers. Look at this. Suppose actual return is equal to 10%. Risk free is equal to 5%. Beta is equal to 2. I want to calculate the trainer ratio. Yes. So tell me, or else beta is equal to, say for example, 10. I want to calculate the trainer ratio. Tell me, students, it is actual return minus risk-free return divided by beta. Tell me, actual return is 10 minus risk-free is 5. That means 5% extra return I got for taking 5 units of risk. Yes or no, everyone? So that means it is going to be, sorry, for taking 10 units of risk. That means I am getting 0.5% extra for taking 1 unit of risk. Yes or no, everyone? Perfect. Now this is 0.5%. If I want it in the form of decimals, yes or no, everyone? It is in the form of decimals. If I want it in the form of percentage, I will multiply by 100. Yes or no, everyone? Perfect. Yes, it is going to be 0.5 into 100. It is going to be 50%. Yes or no, everyone? Simple. Whenever, just a second. Yes, whenever I just do the equation in the form of A divided by B, it will always be in the form of decimal. If I want to convert it into percentage, I should be multiplying by 100. Yes or no, everyone? Okay. Here, look at the data. Why am I telling all these things? Look at the data, students. Here, this is in percentage. this is in percentage, but this is in the form of decimal. Either everything I have to convert it into percentage, or everything I'll keep in the form of decimal. Only then I will be in a position to solve it. Is this clear, everyone? Okay, boss. Simple, bingo. No issues. So let us try doing it. Okay. Let me try to quickly solve this. Okay, for smart. Yes, tell me students, let me just write down trainer ratio. Trainer's ratio, it is actual return minus risk-free rate of return divided by beta. Tell me, actual return is going to be how much? 10.2 minus risk-free rate of return divided by beta. I'm only doing for smart. Yes, for growth you guys can, yes, replicate it by yourselves. Yes, what is the trainer ratio, students? It is 0.086. It is in the form of decimal. If I'll have to write it as a percentage, can I tell 0.086 into 100, which is going to be 8.6%? Yes or no, everyone? Okay, so now let me do it this way. Yes, beta is in the denominator. I will take it to the other side. It becomes 8.6 beta is equal to 10.2 minus RF. Yes or no, everyone? If I bring RF to the other side, yes, it becomes risk-free rate RF plus 8.6 beta is equal to 10.2. Is this clear, everyone? Yes or no? Give me a confirmation, students. Yes, everyone. Is this clear, everyone? Okay, fine. So one equation I created. Now I need to create one more equation. Now how do I try creating one more equation? Look at this, students. Actual return is given. Alpha is given. Can I calculate the required return? Yes, boss. Now look at this. This is equation number 1. Okay, now let me try. Okay. Look at this, students. Alpha, it is actual return minus the required return. Yes or no, everyone? Tell me, how much is my alpha? My alpha is 1.32 in case of smart. Yes, how much is actual return? 10.2 minus the required return. Therefore, if I have to calculate the required return, can I tell it is a 10.2 minus 1.32, which is going to be 8.88%? Yes or no, everyone? Give me a confirmation, students. Yes or no? Yes, boss. Simple. Look at this, everyone. Yes, actually I am earning 10.2. Actually, how much I'm earning? 10.2 I'm earning. Okay, but in this, how much extra return I have generated? 1.32. That means ideally how much return only was required? It is 10.2 minus 1.32. Yes or no? As simple as that, bingo. 10.2 minus 1.32 is 8.88. Now tell me, this is a required rate. Tell me, what is the formula for calculation of required rate as per CAPM? Yes, required return as per CAPM. Required return as per CAPM, it is RF plus beta into RM minus RF. Tell me, required return is 8.88%. It is RF plus beta into RM minus RF. It is a market risk premium. Risk premium is given, which is 5%. Yes or no? Into 5. Yes, therefore can I tell? Yes, 8.88 is equal to RF plus 5 into beta. Yes or no, everyone? Yes, I got the second equation. So I have two equations wherein two figures are missing. If I solve, I will be arriving at my answer. Look at this. First equation is RF plus 8.6 beta is equal to 10.2. Second one is 8.88 is equal to RF plus 5 beta. Look at this, everyone. Yes, 10.2 is equal to RF plus 8.6 beta. Yes, here 8.88 is equal to RF plus 5 beta. Yes, let me do equation 1 minus equation 2. Yes, pay attention, everyone. Minus 10.2 minus 8.88, it is 1.32. RF minus RF gets cancelled. What is left is 8.6 minus 5 beta, which is equal to 3.6 beta. Therefore, the value of beta, it is 1.32 divided by 3.6. Therefore, beta is equal to 0.3667. If I round it off, it is 0.37. Is this clear, everyone? Yes or no, everyone? Perfect. Now once I have calculated the beta, I have to calculate the risk-free rate as well. Yes, that is very simple. Yes, I will substitute in any of the equation. Okay, substitute. Yes, beta is equal to 0.37 in equation 1. Yes, what is equation 1? 10.2 is equal to RF plus 8.6 beta. Yes, 10.2 is equal to RF
plus 8.6 into 0.37. Yes or no? Accordingly, we will arrive at risk-free rate as 7.018 percentage. If you round it off, yes, I can write it as risk-free rate is equal to 7%. Is this clear, everyone? Yes or no? Simple. Come to the solution. Yes, we have to calculate beta, risk-free rate. Yes, come to the solution portion, my dear students. Question number 5a. Yes, beta is 0.37, risk-free rate is equal to 7%. Yes or no, everyone? Yes, growth rate for other mutual fund. You guys please try it by yourselves. Same steps we'll have to do for growth mutual fund. Yes, try by self. Simple. What I did, point number one, know that everything else is in percentage, but just the trainer ratio, it is in the form of decimal. That I wrote it as percentage. Point number one. Point number two, trainer ratio is actual return minus RF divided by beta. Yes or no, everyone? Is equal to the ratio. Ratio is given. Yes or no, everyone? Actual return is given. RF and beta is missing. I will create it in the form of an equation wherein I will get it as RF plus beta into something is equal to one value. Okay, fine. Y is equal to mx plus c. Next, actual return is given. Yes, alpha extra return is given. Based on it, I will calculate the required rate of return. Based on it, I will apply the CAPM. Two equations I got. I will solve. I will arrive at the beta. I will also arrive at my, yes, what is it? Risk-free rate. Is this clear, everyone? Okay. Now, what more question is asking? Question is asking, derive the security market line. Tell me what is security market line. Basically, the CAPM equation. Yes or no? SML. It is RF plus beta into Rm minus Rf. Yes or no, everyone? Okay, fine. Now tell me, yes, the CML which I am going to derive, yes, here, yes, it is going to be 7%, risk-free rate is 7%. Yes, now here, plus, where is the question for smart? Where is it? Question number 5a. Okay, 5a. Risk premium is 5%. Anyways, it is not going to change. Yes or no, everyone? Okay. Yes, plus beta into Rm minus Rf is equal to 5. Yes, it is a 7 plus 5 beta. Security market line. For both, it is the same. Yes or no, everyone? Okay. Now, this is how we will be writing. Now, institute has written it in the form of decimal, the final value. Yes, or. So, that is why. Let me just write the alternative answer. Or I can also write it as 7%, 0.07. Yes, 5%, 0.05 into beta. This will be giving me, yes, in the form of decimal. Is this clear, everyone? Yes, you guys can tally the answer. We will be getting the same answer. Don't worry. Question 5a. 0.07 plus 0.05 beta. 0.07 plus 0.05 beta. Is this clear, everyone? Okay, fine. Question is done over. Now let us proceed further to the next question. Question number 2, which is basically question 5b in December 23 examination. Look at this, everyone. Okay. Yes, read the question, then we will together solve it, my dear students. Quickly giving you guys 1 or 2 minutes. Yes, everyone, question number 2, have a look at this. Yes, December 23. Yes, it has come for 7 marks. Again, look at this, everyone. Look at this. Following details are of a portfolio of BOI Limited consisting of 3 shares. Okay. Share BG, BZ, DN. Okay. Weight is given, beta is given. If I want, I can calculate the portfolio beta. Okay. Expected return in percentage is given. Total variance. Variance is given in the form of decimals. If you guys can see. Yes or no, everyone? Generally, variance will be in the form of number. 15% square. Here it is in the form of decimal. Okay, bingo. Standard deviation of market portfolio return is 14%. Covariance, if you see again, covariance is percentage square. Here they have given in the form of decimal. If you try seeing here, a major chunk of data they have given in the form of decimal. Okay, we have solved a similar question previously. So wisdom lies in doing all the calculation in the form of decimal. Is this clear, everyone? So whatever is in percentage, I will convert it into decimal. Look at this, students. Here the data is in percentage. I will convert it into decimal. 12%, I will write it as 0.12. This is 0.18. This is 0.10. This is 0.14. Is this clear? Because data is in decimal. Okay. Yes, I am not going to solve each and everything. I will just show you how the calculations are going to come. First one, calculate the portfolio beta. Portfolio beta is nothing but the weighted average. Yes or no, everyone? Tell me here, weight is given, beta is given. So it is a 0.3 into 0.4 plus 0.3 into 1.2. Plus 0.4 into 0.5. Okay, boss. Bingo. First one is over, 1 or 2 marks. Second one is calculate the residual variance for each of the 3 shares. A residual variance. Tell me, students, what is a residual variance? Total risk, systematic, unsystematic. Unsystematic, I have to calculate for each of the shares. Yes, boss. Let us try doing the calculation. Look at this. Calculation of unsystematic risk. Okay, each of the security I will write. Total risk, systematic risk, unsystematic risk. I am just going to show you guys. We will not be solving it. Let me just take the hard copy of the question. Yes, everyone, look at this. I have to calculate the residual variance. First, for company BG, total risk, it is nothing but variance 0.015. For company BG, total risk is variance 0.015. Systematic risk, tell me students, how do we calculate systematic risk? It is beta square into sigma market square. Yes or no? Do I have the beta? Yes, boss. 0.4 square into sigma market square. Tell me, what is the sigma market? Standard deviation of market. It is a 14%. I have told you, boss, my data is in decimal, means everything has to be in the same base. 0.14. Yes or no, everyone? Yes, into 0.14 square. So it is going to be 0.4 into 0.4. 0.4 into 0.14 into equal. It is a 0.003136. Is this clear, everyone? Unsystematic risk is going to be balancing figure. So minus 0.015. It is going to be 0.011864. Is this clear, everyone? Similarly for the second security BZ, similarly for the third security DN, you guys will be doing. Again, I am telling, I am not here to solve each and every question. It is going to take a lot of time. Every question is a 7-mark question. We will be taking around 15 minutes to explain as well as solve. I am only going to give you guys the approach on how to solve it. Okay, boss, bingo. Yes, third one. Calculate the portfolio variance using sharp single index model. Okay, boss, I have to calculate the portfolio variance using the sharp single index model. Portfolio variance. Now for the portfolio, what can I be doing? First, I will calculate the systematic risk for the portfolio. It is beta square into sigma market square. Yes, I want beta of the portfolio. Tell me, students, here in the first requirement, have I calculated the beta, the weighted average beta? Yes or no, everyone? Yes, boss, I would have done 0.3 into 0.4, 0.3 into 1.2, 0.4 into 0.5. Yes, it is coming to 0.68 if I am not wrong. Yes, I could be wrong. Yes, 0.68 square into sigma market square, 0.14 square. That gives me the systematic risk. Yes or no, everyone? Now tell me, unsystematic risk of the portfolio. Yes, it is nothing but a square plus b square plus c square. Yes, it is weight a square sigma ea square plus weight b square sigma eb square plus weight c square sigma ec square. Yes or no, everyone? Tell me. Weight a, it is 0.3 square into sigma ea square. Here I have calculated, it is already in square terms. Yes or no, everyone? 0.011864 plus weight of b square. Weight of b is 0.3 square into sigma eb square. This calculation that I am doing here. Yes, plus weight of c square, which is 0.4 square into sigma ec square. This is already in the form of square, so please do have it on the back of your mind. Yes, do a summation, you will arrive at the unsystematic risk. Yes or no, everyone? Now how do I calculate the total risk? It is systematic risk plus unsystematic risk. Is this clear, everyone? Okay, boss, bingo. That is also over. I have told you again, I am just here to show you guys the approach. Yes, in our classes portfolio chapter, around 70 questions we have solved, different types of questions, and all these are just similar. Yes, one simple thing hack for you guys for the chapter portfolio. All questions that we are going to solve here as a part of past examination questions, all are similar. Not even one question has a new adjustment. But just for practice purpose, we are again solving it. Is this clear, everyone? Okay, fine. Nevertheless, third one is calculate portfolio variance based on modern portfolio theory. Okay, boss, I have to calculate as per MPT. Tell me how many securities are there? 3 securities are there. In case of 3 securities, yes, variance as per MPT, it is basically a square plus b square plus c square plus 2ab plus 2bc plus 2ac. Yes or no, everyone? Which is basically weight of a square. Yes, weight of a sigma a the whole square plus weight of b sigma b the whole square plus weight of c sigma c the whole square plus 2 into weight of a, weight of b, sigma b into correlation of a between b. Tell me here, am I having correlation or covariance? Covariance. If in case of covariance, what I should be doing? I should be rewriting the formula this way. Instead of this, basically instead of this, I should be using covariance AB. Yes or no, everyone? Simple. Yes, RAB. Yes, correlation. It is a covariance AB divided by sigma A, sigma B. So this if I take it to the other side, RAB into sigma A, sigma B. Yes, RAB into sigma A, sigma B. It is nothing but covariance AB. Yes or no, everyone? Again in the regular class, so much time we have spent. Yes, so no need to again explain. Into covariance AB plus 2 into weight B, weight C, covariance BC plus 2 into weight A, weight C, covariance AC.
Tell me, is there any data which is not available? No, boss. Weight of A, B, C. I'm just writing, yes, BG, BZ, DN as A, B, C. Whether weight is given? Yes, boss. Now, whether the standard deviation is given, variance is given, yes or no, everyone? Either you can take a standard square root of that, get the standard deviation, again do a square, or else, boss, better option is going to be to rewrite the formula this way. Weight of A sigma A the whole square, it is basically weight of A square sigma A square. Yes, weight of A, yes, in the first security BG, it is a 0.3 square, 0.3 square into, yes, sigma A square, yes, variance of A, which is given, into 0.015, plus weight of B square, 0.3 square into 0.035, plus weight of C, 0.4 square into 0.020, plus 2 into, yes, 0.3 into 0.3, A and B, yes, into covariance is 0.030. Similarly, BC, AC, you guys do it, you will be arriving at the variance. Is this clear, everyone? Yes, boss, bingo. If you guys are telling, sir, you're doing it fast, boss, yes, people who are watching it on YouTube, please know the intention. This is for our regular batch students. We've solved all 70 questions just to give them the confidence. Again, I am just showing them the past examination questions. My intention is not to solve. Again, I am repeating. Is this clear, everyone? Bingo. Yes, with these two questions are over. So first question also was simple, second question also was simple. So if these questions are coming in the examination, think of it, students, 14 out of 14 marks. 14 marks has been credited to your CMA Final SFM account. Devi or Sajano, Dhanyavad. Isn't it simple, everyone? Yes or no? Tell me, students, in the comment section. Maja is coming. Hello, honey bunny. Yes or no, everyone? All the online naive students, give me a confirmation. Accordingly, we'll proceed further. Yes, everyone, let us proceed further with our discussion. Yes, everyone, look at this. December 23, both the questions we have solved. Now coming to June 24, 3 questions have come, 21 marks. Let us try seeing if we were in the exam center, how much marks we will be getting. Are we ready, everyone? Yes or no? So we are going to question number 4B. Have we done 4B? No, 4B is basically on, it's a mixture of mutual fund as well as this thing. So this one we will keep it for mutual funds only. 4B we will keep it here in mutual funds. 5A and 5B we will be doing. Okay. Yes, everyone. We will come to question number 5A. Look at this, everyone. Okay. Mr. Sanum is advisor for Max Mutual Fund. Okay. A study by Max Mutual Fund has revealed the parameter in respect of the 3 securities given below. AB, BM, CX. Standard deviation is given. Okay, boss. Risk is given. Sigma. Correlation with the index. Correlation R of security X with the index market is given. Yes or no, everyone? Okay, fine. Standard deviation of market is observed to be 15%. Sigma market is equal to 15%. Okay, boss, bingo. Yes, tell me, standard deviation is given in the form of percentage. This is also given in the form of percentage. Okay. Yes, analyze the sensitivity of return of each stock with respect to market. Yes, boss, I have told you, whenever question is giving you the wording, analyze sensitivity of return of stock with respect to the market. What is it we should be calculating? We should be calculating beta. Yes or no, everyone? Perfect. Beta we should be calculating. Now tell me, how do we calculate beta? Yes, beta formula. Yes, it is systematic risk of X divided by systematic risk of market. How do I calculate systematic risk of X? I will take the total risk of X into how much percentage it is coming because of market, RXM, divided by systematic risk of market. I will take the total risk of market. Entire risk is because of systematic factors only. Yes or no, everyone? Tell me, do I have the standard deviation for each of the security? Yes. Correlation with the market? Yes. Sigma M? Yes. So can I be calculating? Yes, boss, bingo. So only for one security I will do it. I will do it for AB Limited. Look at this, everyone. AB, yes. Sigma X here, standard deviation is 25 into 0.6 divided by sigma M is 15. So 25 into 0.6 is 15 divided by 15. Beta is equal to 1. Yes or no, everyone? Similarly, you can be doing 20 into 0.95 divide by 15. 15 into 0.75 divide by 15. Is this clear? Accordingly, I will calculate the beta. Yes, boss, bingo. First one is over. Second, yes, calculate the covariance amongst the various stocks. Covariance, joint deviation. Tell me, students, how do we calculate the covariance? Now tell me, one, the normal logical approach that we had seen to calculate covariance. Calculate the joint deviation. Yes, covariance between X and Y. Take X minus X bar. How X is moving from its average? Y minus Y bar. Yes, in the meantime, how Y is moving from its average, I want to know how both are moving. X minus X bar into Y minus Y bar. I will arrive at the individual covariance. I want the average. Take a summation, divide by n. Sigma X minus X bar into Y minus Y bar divided by n. Yes or no? In case of past data. In case of future data, instead of divide by n, I will multiply by p. Yes or no, everyone? Perfect. But boss, to implement this, I want the data, I want the deviation, whether these figures are given. No, boss, these figures are not given. Now there is one more way to calculate covariance, which we have learned with sharp single index model. Yes or no, everyone? Tell me yes. How did we understand the formula? Yes, covariance of x and y. Yes, it is the net risk of x, systematic risk of x, into the systematic risk of y. Yes or no? Systematic risk of x, systematic risk. I want this in the form of percentage, this also in the form of percentage, so that it both becomes percentage square. Yes or no, everyone? Okay, fine. Systematic risk, it is beta of x into sigma market. Here it is beta of y into sigma market. So total when I'm doing, I will get beta of x into beta of y into sigma market is sigma market square. Yes or no, everyone? Again, yes, almost 30-45 minutes I've explained the formula. I'm not here to explain the formula. Yes, based on this we will be calculating. Calculation of covariance among stocks. Yes, covariance of x and y, it is beta x into beta y into sigma market square. Is this clear, everyone? Okay, now I have to calculate the covariance amongst various stocks. Tell me, first I will calculate covariance amongst AB and BM. Then I will calculate the covariance amongst AB and CX. Then I will calculate the covariance amongst ABs over BM and CX. Yes or no, everyone? Tell me what I want. Beta of x into beta of y into sigma market square. Beta of x, which is beta of AB. Tell me, have I calculated beta above? Yes, boss. Tell me, here it is how much? 1. This one is how much? Let me just calculate this. 20 into 0.95 divided by 15. It is 1.267. So tell me, first one, beta of x 1 into beta of y 1.267 into sigma market square. Sigma market is 15 square. So 1 into 1.267 into 15 into 15, it is going to be 285.075 percentage square. Similarly, I can do, yes, beta of B, beta of C into sigma market square, beta of A, beta of C into sigma market square. Yes or no, everyone? Calculations, please do it by yourselves, my dear students. Yes or no, everyone? Okay, fine. Now that is over. Third one, calculate the total risk of the portfolio consisting of all three securities equally, means weight is 1 by 3, 1 by 3, 1 by 3, or 0.3333. Tell me, students, in case of three securities, how do I calculate the total risk? A plus B plus C square, A square plus B square plus C square, plus 2AB plus 2BC plus 2AC. Yes or no, everyone? Which is weight of A sigma A the whole square plus weight of B sigma B the whole square plus weight of C sigma C the whole square plus 2 into weight of A weight of B sigma A sigma B into RAB, correlation. Tell me in this question whether I am having correlation. No, boss. But have I calculated covariance? Yes. So I have already discussed. So into, I can also write it as weight of A weight of B into covariance AB. Yes or no? Plus 2 into weight of B weight of C covariance BC plus 2 into weight of A weight of C covariance AC. Simple. Yes, weight of each of the securities is equal, so 1 by 3, 1 by 3, 1 by 3 you can write, or 0.3333. Okay, sigma A, sigma B, sigma C, is it given? Yes, boss, it is given. Now what else is needed? Covariance we have calculated in the above requirement. Accordingly, I will calculate the variance. Is this clear, everyone? Similarly, if you want, you can calculate the standard deviation. Bingo, boss. Now what else question is asking? Assess the systematic risk of portfolio. Yes, in 3. Calculate up to 2 decimal points. Yes, calculate the systematic risk. Tell me, students, I want to calculate the systematic risk of the portfolio. Tell me what is the formula for systematic risk? Beta square into sigma market square. Yes or no? In the above portfolio, all the three securities I'm investing equally. So firstly, I want to calculate beta of the portfolio. Yes or no, everyone? Which is weighted average. Tell me, weight A, beta A, plus weight B, beta B, plus weight C, beta C. Weight of A, weight of B, weight of C, it is 0.333 each equally. Yes or no, everyone? Beta A, beta B, beta C. In the first requirement, we have calculated beta. Based on that, I will arrive at the beta. Yes or no? So do beta square. Sigma market, question is giving sigma market is 15 into 15 square. You will be arriving at the answer. Is this clear, everyone? Now portfolio questions are lengthy. Too many calculations are there. Every question, if it's a 7-mark question, means you will be taking roughly around 12-13 minutes. We do not have that much time. That is why I'm just showing you guys how the answers are going to come. Again, I've told you at the start of the chapter itself, portfolio management for the students who purchased our classes, we have solved around 70 questions. Trust me, not even one question is new, or not even one question has one new adjustment. Everything is just a replica. everything is just a duplicate. Still we are doing so that you guys get more confidence. Yes or no, everyone? So here two questions had come. Tell me, students, both these questions were very simple for our students. Yes or no? So if in case these are going to come in the examination, we are going to for sure score 14 out of 14. Yes or no, everyone? Give me a confirmation, students. So accordingly we will proceed further. Yes, now let us proceed further to December 24 examination. Again two questions have come. December 24 we are having, sorry, I had solved only one question, sorry, we are having one more question here. Sorry, hurrying is not good. Okay, yes, one more question is there. Question number 5b. Yes, let us read and together solve question number 5b, my dear students. Giving you guys a minute, read the question. Yes, everyone, question number 4. Yes, it is again from, yes, June 24 examination, question number 5b, 7 mark question. Again, it's a similar question. What is this question all about? This is a question on arbitrage pricing theory. There, yes, it's just one of the basic questions that you have solved. Quickly, let us try seeing. Mr. Ron is an investor who owns a portfolio with the following characteristics. And it is assumed that security returns are generated by a two-factor model, two-factor or multi-factor model, APT. Okay, fine. With the information of Mr. Ron, the newly inducted trainee Miss Ayana has been asked to analyze with comments, if any. Okay, fine. Factor 1 sensitivity is nothing but beta. Yes, this is beta 1. Yes, factor 2 sensitivity, this is beta 2. Security MB is there, security KN is there. Okay, risk-free security, risk-free rate of return is 10%, expected return is also given. Yes, beta 1, beta 2 for both of the securities is given. Okay, boss, bingo. Now, if Mr. Ron invests 1,80,000, how much money is Mr. Ron having? 1,80,000. And he sells short 90,000 of KN. 1,80,000 he had. What he did, he short sold 90,000 of KN. So when he did a short sell, he received that also. So total how much money he is having? 2,70,000. And purchases 2,70,000 of MB. 2,70,000 of MB purchase. Calculate the sensitivity of Mr. Ron's portfolio for two factors. Yes or no, everyone? I have to calculate the weighted average beta for both the factors. Yes or no, everyone? For both the factors, I should be calculating. Yes, boss. Let us try quickly calculating. Look at this, everyone. Very simple. First, I will write down which all securities are there. Tell me, I am having MB, KN. Tell me what is the investment? Yes, in MB it is 2,70,000. In KN I did a short sell. This is invest buy. I showed it as plus. Short sell I will be showing it as minus 90,000. So effectively my 1,80,000 is invested. So 1,80,000 means 2,70,000 means 1.5. That means minus 90,000 means minus 0.5. Yes or no, everyone? Okay, fine. Now I want to calculate the, what is the question asking? Yes, the sensitivity beta for both the factors. First, let me pick factor number 1. Okay, I want to calculate the factor 1 sensitivity. Tell me for MB how much is beta? 0.8. For KN how much it is? 1.5. 0.8, 1.5. So I want to know the factor 1 beta for my portfolio. Factor 1, let me assume factor 1 is randomly inflation. Yes, what is the total weighted average beta for inflation? Tell me, students, for the first security factor 1 is beta is how much? 0.8. For the second security it is 1.5. Which one should I take? Take the weighted average. Yes or no, everyone? Tell me. Weight is anyways available. So it is 1.5 into 0.8 plus minus 0.5 into 1.5 gives me weighted average beta of 0.45. Yes or no, everyone? Okay, now coming to the second factor, factor number 2. Yes, be very careful when you are picking the data. Yes, I want to calculate the factor 2 weighted average. Okay, factor 2 where all the risk is there in MB as well as KN. In MB it is 0.6, 1.1, 0.6, 1.1. Yes, boss, I want to do the weighted average. It is basically weight into beta plus weight into beta. I will do this here. I will arrive at the weighted average value, which is going to be how much? 0.35. Is this clear, everyone? Yes or no? Simple, bingo. Yes or no, everyone? So the first requirement is over. You guys can tally the answer. It is the same answer. Yes or no, everyone? Even if the answer is changing or if the institute's answer is wrong, I will tell you. Don't worry on that. Is this clear, everyone? Okay. First one is over. Second one is going to be, if Mr. Ron borrows 1,80,000 at risk-free rate and invests the amount he borrows along with his original amount of 1,80,000 in security MB and KN in the same proportion as described, analyze the sensitivity of portfolio for two factors. Okay, now understand what is happening. Yes, I am Mr. Ron. 1,80,000 my own money I'm having. Okay, what I did, I borrowed 1,80,000 at risk free. So I borrowed that, I got the money. Now tell me total how much money I'm having for investment? 3,60,000, 1,80,000 my own money, 1,80,000 borrowed money. Yes or no, everyone? Total 3,60,000 is there. This 3,60,000 in which ratio I am investing? I am investing in MB and KN in the same proportion as described above.
Tell me above in which proportion we were investing. Yes, 1.5 and minus 0.5. So now also we should be investing in the same ratio. Okay. Tell me total 3,60,000 is there. Yes, MB and KN. I will be investing in the ratio of 1.5 is to minus 0.5. So that means MB, security MB is going to be, yes, 3,60,000 into 1.5, which is 5,40,000. Yes, KN, yes, it is going to be 3,60,000 into minus 0.5, which is going to be minus 1,80,000. Is this clear, everyone? Okay. So I need to calculate the, yes, a revised weighted average beta for each of the factors. Okay, let me try doing it. Now tell me, now there are three different securities. Security MB, KN, and risk free. Yes or no, everyone? Tell me, in MB how much we are putting? We are putting 5,40,000. Yes, in KN minus 1,80,000. In risk free, again risk free I have borrowed 1,80,000. That means ultimately how much it is? Yes, 1,80,000. Yes or no, students? Tell me, ultimately my fund is 1,80,000 only. Yes, what I did, I borrowed 180, so that also I got. Yes, I did a short sale of 180, so that also I got. So total 540, 540 invested here. Is this clear? If I'm calculating the weight, 540 divided by 180 is 3, minus 1, so that gives me 1. Is this clear? For factor 1, if I'll have to calculate the beta, tell me factor 1, be very, very careful. Factor 1 for MB is 0.8, 1.5. Yes, this is 0.8. This is 1.5. Yes, risk free is anyways 0. Yes or no, everyone? So how much it is going to be? 3 into 0.8, 2.4. Yes, minus 1 into 1.5 and minus 1 into 0. So 2.4 minus 1.5, is it 0.9? Yes or no, everyone? Perfect. For factor 2, how much it is coming? Yes, it is 0.6, 1.1. So 0.6, 1.10. Yes, weighted average beta, weight into beta, weight into beta, weight into beta. How much are we going to get? We will be getting it as 0.7. Yes or no, everyone? Yes. 3 into 0.6, 1.5 into 1.1. Is it? Wait a minute. 3 into 0.6. This is minus 1. Sorry. Yes, 1 minus 1 into 1.1. Grand total 0.7. Perfect, everyone. Yes or no, everyone? Okay, fine. This is also over. Yes, if you guys want, you guys can tally it also. Now comes the third one. Calculate the expected return premium for factor 2. What are they asking? They are telling, boss, calculate the return premium. Premium basically is the lambda. Yes or no, everyone? For factor 2. Now, very simple, my dear students. Tell me. Yes, as per APT. Yes, the required rate is calculated using two factors. Yes or no, everyone? Okay, so I will tell expected rate of return or required rate. It is risk free plus beta 1 lambda 1 plus beta 2 lambda 2. Yes or no, everyone? Now tell me, for each of the security, for security MB as well as for security KN, do I have the expected return? Yes, boss. Do I have the risk free? Yes, boss. Question is giving me. Do I have beta 1? Yes, beta I have. Do I have lambda 1? No, lambda 1 I don't have. Beta 2 do I have? Yes. Lambda 2 I don't have. So basically lambda 1 and lambda 2 is missing. Yes. Two equations are there. I can solve the simultaneously in the equation. Yes or no, everyone? Tell me, for security MB, expected return is 15%. Risk free is given as 10% plus beta 1. Look at this, everyone. Be very careful. Yes. Expected return here is 15%. Yes or no? RF is 10. Yes. Beta 1 for MB. Beta 1 is 0.8 into lambda 1. Beta 2 is 0.6 into lambda 2. 0.8 lambda 1 plus 0.6 lambda 2. For security KN, look at this, everyone. For security KN, expected return is 20%. RF is 10. 20 is equal to 10 plus, yes, beta 1 for security, second security, beta 1 is 1.5 into lambda 1 plus 1.1 into lambda 2. So you will have to be very careful. It is 1.5 lambda 1 plus 1.1 lambda 2. Is this clear, everyone? Okay, let me try simplifying. See, both the places I'm having numbers. Let me simplify it. Yes, 10 comes to the other side, becomes minus. 15 minus 10 is equal to 5, is equal to 0.8 lambda 1 plus 0.6 lambda 2. This is going to be equation number 1. Here 20 is equal to, sorry, 20 minus 10 becomes 10, is equal to 1.5 lambda 1 plus 1.1 lambda 2. Is this clear, everyone? Okay, fine. Now what is it I want? I want the figure of lambda 2. Yes or no? One of the lambda I want. Okay, very simple. Now I have to solve the simultaneous linear equation. Yes or no, everyone? What I will do? Tell me one of the figure I want to nullify. Here I am having 0.8. Here I am having 1.5. Simple. Yes, multiply equation 1 with 1.5. Multiply equation 1 with 1.5. Multiply equation 2 with 0.8, so that this becomes simple. Yes or no, everyone? So 5 into 1.5, it is 7.5, is equal to 0.8 into 1.5, it is 1.2 lambda 1, plus 0.6 into 1.5, 0.9 lambda 2. Second equation, 10 into 0.8, 8 is equal to 1.5 into 0.8, which is 1.2 lambda 1, plus 1.1 into 0.8, which is 0.88 lambda 2. Simplify. 7.5 minus 8, it is minus 0.5. Yes, this gets cancelled. 0.9 minus 0.88 lambda, it is equal to 0.02 lambda 2. I want the figure of lambda 2. It is minus 0.5 divided by 0.02. Yes, which is equal to minus 25. Therefore lambda 2, yes, it is minus 25%. Yes or no, everyone? Give me a confirmation, students. Yes, everyone, is this clear? Yes, quickly. Yes, this is over. Simple bingo. Let us try seeing if you are getting the same answer that the institute is trying to give here. Yes, look at this. First requirement, 0.45, 0.35. 0.45, 0.35. Second one, 0.9, 0.7. 0.9, 0.7. Third one, yes, expected return premium for factor 2. It is minus 25%. Minus 25%. Is this clear, everyone? Bingo. Yes, question is over. 7 marks have been credited to your CMA Final SFM account. Devi or Sajino, dhanyavad. Yes or no, everyone? Perfect. So till here questions are over. Yes or no, everyone? Perfect. So which all attempts we have covered? December 23, June 24 is over. Now let us go ahead to December 24, my dear students. Again question number 5A, 5B. First let us go to question number 5A. December 24. Okay, fine. December 24. Question number 5A. Perfect. Yes, giving you guys a minute. Please pause, read the question, try it by yourselves, get a feel of the question, then we will together solve it, my dear students. Yes, everyone. Now let us go ahead to the next question. Question number 5. Past examination. It is December 24, 7 marks. Trust me. Simple question, students. If this question comes to our students, they'll tell you, they'll be dancing and solving. They'll tell, oh, Maja is coming. Look at this question, everyone. Miss Shritana, an investor, is evaluating the prospects of investing in two companies, SN Limited and GB Limited. Projections of returns for the stocks of two companies with their probabilities are given below. Probability is given. Return for company is given. Yes or no, everyone? Tell me, for company SN, return could be 46% also, 38 also, 25 also, 15 also. Which one should I take? Do a weighted average. Yes or no, everyone? Probability is given, X is given, P into X gives you the weighted average return. This I can do for each of the companies, for SN, for GB, as well as for the market. Yes or no, everyone? Okay, fine. Risk-free rate is 6.5%. Additional return is given for each of the securities. Variance is given. Okay, covariance with the market is given. Okay, bingo, boss. Yes, first one. Analyze the expected return of SN Limited, GB Limited and the market using the probability distribution. Boss, expected return we want. Yes or no, everyone? Tell me, probability is given, return is given. P into X I need to do. Yes or no, everyone? Look at this, everyone. I am not going to do the calculation. This is how I will do. First one, calculation of expected return. Tell me, first I will write down the probability. Tell me, students, what is the probability? Probability. Okay. I will just show for one of the security. Okay. Yes, it is going to be 0.32, 0.26, 0.24, 0.18. For company SN Limited, first I will write down the returns X, which is 46, 38, 25, 15. Now I will calculate the weighted average P into X. Yes, 46 into 0.32 plus 38 into 0.26 plus 25 into 0.24 plus 15 into 0.18. Yes or no, everyone? I will arrive at the expected return. Similarly for GB Limited, I will write down the X. Returns is given. I will do the weighted average P into X. Yes, similarly for market, returns is given 25, 18, 11, 7. Yes, I will do the weighted average P into X. Yes or no, everyone? This way I will arrive at the expected return. Yes, again I am telling calculations are lengthy. I am not going to do the calculation. I will show you the approach. Yes or no, everyone? Okay, fine. Bingo, boss. Now second requirement, calculate the beta of company stock and GB Limited stocks. Tell me, students, I want to calculate the beta. Beta is always calculated in relation to market. Yes or no, everyone? Tell me, students, how all we can be calculating our beta. Now Yes, what is the formula for calculation of beta? Tell me students, beta of the security. Yes, it is going to be sigma x into rxm divided by sigma m. Yes or no everyone? Perfect. So here, wait, why are we doing all these calculations? Do I have the sigma x? Yes, Shritana, right? Just a minute students, why am I doing so much nonsense? Okay, fine. Second one is a calculation of beta. Tell me for SN limited. Same question I'm solving, right? Yeah, same question. Okay, fine. Yes, calculate beta for SN as well as GB. Now, yes, what I did is I drew the tables for doing all the calculations. But boss, that is not needed. Why? Tell me ultimately what is the formula for beta? Beta, it is systematic risk of X divided by systematic risk of market. Yes or no everyone? Yes, this is sigma X total risk into RXM divided by sigma m. Yes or no everyone? Perfect. Yes, tell me, do I have a standard deviation of the security? Standard deviation, I have the variance. If I take a square root, I will get the standard deviation of security. Yes boss. Do I have standard deviation of the market? I have variance of the market. If I take a square root, I will arrive at the standard deviation. Okay boss. Do I have the correlation coefficient? No boss, I am not having the correlation coefficient. Yes or no everyone? So either I will calculate the correlation coefficient, or else I had given you an alternate formula. Yes, tell me students, what was the alternate formula? Instead of this, I could have written it as covariance xm divided by sigma m square. Simple boss. This is sigma x divided by sigma m. Rxm, correlation of x with the market, it is covariance xm divided by sigma x sigma m. This gets cancelled, so what is left is covariance xm divided by sigma m square. Yes or no everyone? Perfect. So tell me, covariance xm divided by sigma m square. This is beta of security x. Tell me, for firstly I want to calculate beta for Sn. Yes, covariance, it is given covariance with the market, it is 78.64. Yes, divided by sigma market square, variance of the market, it is 47.20. Yes or no everyone? This is going to be the answer. Similarly for the next company, which is going to be GB. Yes, covariance of G with the market, it is 64.61. Yes, divided by sigma m square, it is 47.20. Is this clear everyone? That way we will be calculating beta. Okay. Yes, when I was solving, I think when I was drawing the columns, I had not seen that data that variance and covariance is given, so I had drawn all these columns. Not needed boss. Yes or no? Yes, as per this column lengthy approach, how you will do? First you will write down the probability. Yes, for each of the security you will write down the individual return. Different returns are there. Calculate the weighted average return P into X. Calculate the deviation X minus X bar. Yes, take the variance P into X minus X bar the whole square. This gives you the expected return, this gives you the variance. Same you will do for the market. Yes, you will write down the return. Yes, weighted average return, expected return of the market, deviation X minus X bar, or basically M minus M bar. Yes, calculate the variance P into M minus M bar the whole square. Yes or no everyone? Variance. Then you calculate the covariance, which is P into X minus X bar into Y minus Y bar. Here M minus M bar. That gives you the covariance. Yes or no everyone? Why we were doing? Because we wanted these figures. Variance of X, variance of Y, covariance. But boss, if that is given, why chumma will we be doing this calculation? Yes or no everyone? Directly we will arrive at the answers. Is this clear everyone? Yes boss. Now comes the next requirement. What is the next requirement? Calculate the expected return. Yes, under CAPM. Yes or no everyone? Tell me, CAPM required return, how do I calculate? It is RF plus beta into RM minus RF. Yes, tell me students, for first security, yes, what is the risk-free rate of return, which is given 6.5 plus beta we would have calculated above. Yes or no everyone? Here for SN 78.64 divided by 47.2, it is 1.67, 1.666. Yes, it is 1.666 into RM, market rate of return. Boss, here in the first one we would have calculated market's expected return. Yes or no everyone? This minus RF, this is how much? 25 into 0.32, 18 into 0.26, 11 into 0.24, 7 into 0.18. Yes, I think it is 16.58. 16.58 minus 6.5. Is this clear? This gives you for security SN. Similarly, you can be replicating for security GB. Is this clear everyone? Okay, fine. Now
Then comes justify whether the stocks are underpriced or are they overpriced. Now how do I calculate whether they are underpriced or overpriced? Okay, let me do it for one of the security so that you guys get a feel. Yes, 16.58 minus 6.5 into 1.666 plus 6.5, it is coming to 23.29%. Yes, this is the required rate. What was the expected rate that we have calculated here? We have not calculated here. Okay, fine. 46 into 0.32, 38 into 0.26, 25 into 0.24, 15 into 0.18. Grand total it is 33.3%. Yes, boss. Tell me, yes, what is the first one? Was calculation of expected return. Okay, simple, weighted average P into X. Second one is calculation of beta, covariance XM divided by sigma market square, both are available. Okay, third one, they are calculate the required return as per CAPM and suggest whether they are underpriced or overpriced. Okay, fine, boss. Single in a single table we can do and finish it off. Tell me, for company SN, yes, required rate of return as per CAPM, it is RF plus beta into RM minus RF. Yes or no, everyone? Okay, copy. So based on that, risk-free rate is given in the question 6.5. Yes, beta we have calculated 1.666 into RM minus RF. RM, yes, in the above data and probability was given. Based on that, I calculated the expected return is 16.58 minus RF. Give me the required rate of 23.29. That means in security SN, for the risk I'm taking, I want 23.29%. Okay, boss, bingo. Yes, expected. Actually, how much return I'm expecting? Returns are given, probability is given. Yes, as per modern portfolio theory, I can calculate the return, expected return, which is a weighted average, 33.33%. Yes or no, everyone? Perfect. Tell me whether the security is underpriced or overpriced. Tell me, for the risk that I'm taking, how much return I want. I want 23 point something percent. Yes, actually how much it is giving me? 33%. Is it giving me more return or less return? More return. So is it a good security, bad security? Good security. Should I be buying? Yes, boss. If I'm buying, means it should be underpriced. Yes or no, everyone? It is underpriced. That is why we are buying. Yes or no, everyone? Perfect. I could be wrong with respect to the numbers. Yes, but yes, the calculation, the feel is something which I have explained it to you guys. Look at this, everyone. Question number 5A. Yes, look at this, required rate is 23.33%. Yes, only for first security. Look at this, everyone. Expected rate is 33.3%. Okay, beta is 1.666. We have taken here 1.67. Yes, required rate is 23.33%. That means they have calculated alpha, extra return. Yes, 33.3 minus 23.33. 33.3 minus 23.33. Yes or no, everyone? Yes, you calculate alpha, based on that you give a comment, or else directly you can give a comment. Is this clear, everyone? Okay, boss, bingo. Question is done over, my dear students. Again, I'm repeating, my intention here is not to solve all the numericals. Yes, numericals you guys will be in a position to do, just to give you guys a feel, a confidence that okay, it's the same question. And trust me, all questions are just the same. There is absolutely nothing new. Okay, boss, bingo. Now comes the next one. A study by Mr. Pisam, an analyst of VKC Securities Limited, has revealed the following parameters of two securities and Sensex as given below. Okay, boss, bingo. What is given? Excel Limited. Next question. Question number 6. Okay. Yes. Excel Limited, Deluxe Limited, Sensex. Sensex is market. Okay. Beta is given. Okay, bingo. Variance is given. Okay. Covariance with the Sensex. Covariance of the security with the market. Sensex is basically the market. Yes or no, everyone? Okay, it is given. Yes, coefficient of correlation, yes, between the portfolio and Sensex is given, and covariance of E with D is Excel with Deluxe. Yes, covariance between the stocks is given. Okay, boss, great. Covariance between the stocks is also given. Okay, bingo. Yes, you are required to analyze the coefficient of correlation between return of Excel Limited and the return of Sensex. Yes, the return of Deluxe Limited and the return of Sensex. Basically, what they are trying to ask, they are trying was calculate the correlation coefficient R of Excel with the market. That is basically the security with the market. Yes or no? Tell me, students, how do I calculate correlation? Yes, correlation basically for the first security. What is the first security? It is Excel. With market.
Tell me students, how do I calculate correlation of a security with market? Yes, it is a covariance xm divided by sigma x sigma m. Yes or no everyone? Okay, tell me, am I having a covariance? Yes boss, covariance xm is given. Covariance xm is 2.25. Yes, tell me, do I have a sigma x, sigma of xl? No, I have the variance. Yes, variance is how much? 12.25. So take a square root of 12.25. It is going to be 3.5%. Yes, sigma m. Yes, I am having the variance of the market. How much it is? 4. So take a square root of 4. It is going to be 2%. Yes or no everyone? So it is covariance xm, which is 2.25. Divide by sigma x is 3.5 into sigma m is 2. Therefore, the correlation coefficient is 0.3214. Similarly, you can do for the next company, which is going to be company deluxe. Is this clear everyone? Yes, try by self. Okay boss, simple. Okay, first requirement is over. So yes, this will be having around 3 marks weightage. So we have got 3 marks. Okay, now second one is assess the variance of the portfolio formed by using excel and deluxe in the proportion of 3/4 and 1/4. Yes, they're asking variance of the portfolio. Yes or no everyone? Two securities, a plus b whole square. Yes or no everyone? Yes, variance of the portfolio, it is going to be a plus b whole square. Yes, look at this, weight of x, weight of y, sigma x, sigma y, and I'm having the covariance of x and y. Tell me, weight of x, first security is going to be how much? 3/4, 3 by 4, which is 0.75. Second security is 1/4, which is 0.25. Tell me, sigma x, standard deviation of x, first security, it is a square root of 12.25, which is 3.5%. Second security, it is 16%. Square root of 16 is 4%. Now I have the covariance between the two securities, covariance of excel and deluxe, it is 2.912%. Yes or no everyone? Okay, now how do I calculate? Yes, it is weight of x sigma x the whole square, a square, plus weight of y sigma y the whole square, plus 2 into weight of x weight of y sigma x sigma y r x y. Tell me, do I have the correlation between x and y? Sir, we have calculated now. That is a correlation with the market. Look at this everyone, correlation with the market. If you guys see, correlation between the security and the market. Between the two securities am I having? No. But I am having the covariance. Yes or no everyone? Perfect. Now either using the covariance you calculate the correlation, or boss, instead of writing this, what we can do, instead of this much, directly I can write the covariance xy. Yes or no everyone? Perfect. I have weight of x, yes, sigma x, yes, weight of y sigma y, 2 into weight of x weight of y, covariance xy. Yes, do the calculations, you will be arriving at the number as, yes, 0.75 into 3.5 whole square plus 0.25 into 4 whole square plus 2 into 0.75 into 0.25 into 2.912. Yes, we will arrive at it as 8.982625 percentage square variance. Therefore, take a square root, standard deviation. Yes, it is going to be 2.997 percentage. Is this clear everyone? That is going to be our answer. Is this clear? Okay, fine. Yes, note institute has done the calculation in the form of decimals, not in the form of percentages. Throughout, we have seen all questions of portfolio. Generally, if nothing is given, means we will be doing all the calculations in the form of percentage. Yes or no? Directly percentage we will be doing. But here the final answer, institute has written in the form of decimal. Just divide by 100 will be their answer. Is this clear everyone? Okay, fine. Yes, we will tally it also in the end. Don't worry. Now comes the next one, which is telling analyze whether unsystematic risk of the portfolio is less than that of the individual company stocks. Now tell me students, as per sharp single index model, even without calculating, tell me logically, when I create a portfolio, whether unsystematic risk reduces? Yes boss, unsystematic risk will reduce. Yes or no everyone? But here I cannot just be telling the theory, the story, I should be doing the calculation and showing to okay boss. So what I will do, whether unsystematic risk of portfolio is less than the individual company stocks. So first I will calculate the unsystematic risk of the individual security. Then I will calculate the unsystematic risk of the portfolio. Then I will tell, okay boss, it has actually reduced. Is this clear everyone? Yes boss. So let me try calculating this. Look at this everyone. First, whether unsystematic risk of the portfolio has reduced or not. Step number 1, calculate unsystematic risk for each of the individual securities. I am having two companies, Excel, Deluxe. Firstly, the total risk. Yes, in case of Excel, where is Excel? Okay, total risk is a variance which is 12.25% square. Systematic risk, it is beta square into sigma market square. Tell me how much is beta of deluxe, sorry, Excel? It is 0.56 square into sigma market square. Variance of market is 4. So 0.56 into 0.56 into 4, it is 1.2544% square. That means unsystematic is balance. 12.25 minus 1.2544, it is a 10.9956% square. Is this clear, everyone? Coming to deluxe, tell me total risk, it is nothing but the variance. Variance of deluxe is 16% square. Yes, systematic risk, it is beta square. What is a beta? 1.3 square into sigma market square. Variance of market is already given, which is 4. Yes, here it is going to be 6.76% square. Yes, boss, that means unsystematic is going to be the balancing figure. 16 minus 6.76, it is going to be 9.24%. Is this clear, everyone? Okay, now I have calculated the unsystematic risk for individual securities, boss. For Excel it is 10.99%, for Deluxe it is 9.24%. Now I have to calculate the unsystematic risk for the portfolio. Now how do I calculate for the portfolio? Okay, boss, very simple. Tell me, do I have the total risk of the portfolio? Yes, boss, for the portfolio I have calculated here the total risk variance, which is 8.982625% square. Yes, boss, it is 8.982625% square. Yes or no, total risk. Now we have to calculate the systematic risk, which is beta square into sigma market square. Tell me what is a sigma market square? Variance of market, it is 4. I have to calculate the beta square. Tell me beta of the portfolio. Yes, it is weight of A, beta of A plus weight of B, beta of B. Tell me, yes, in what proportions I am going to invest? Yes, 75%, 25%, 0.75, 0.25. What is the individual beta? First one, Excel is going to be 75% into 0.56. This is into 1.3. Yes, it is going to be how much? 0.745. Yes, therefore it is beta square 0.745 square into 4. So 0.745 into 0.745 into 4. What is going to be the answer, my dear students? Systematic risk is going to be 6.76255% square. Therefore unsystematic risk, it is total risk minus systematic risk. Total risk is going to be, yes, 8.98265 minus this is 2.2201. Therefore the unsystematic risk is 6.76255% square. Yes or no, everyone? Okay, fine, boss. Tell me individually for the individual securities, unsystematic risk was how much? 10.9, 9.24. But in the portfolio, unsystematic risk is how much? 6.76. Therefore unsystematic risk of the portfolio has reduced. Is this clear, everyone? Answers, if you guys want, you guys can tally. Look at this, everyone. Very simple only it is. Answers should be tallying. Question number 5b. Tell me, first one was calculation of coefficient of correlation. Have I calculated? For the first security, 0.3214, 0.32. Yes or no? For the second security, you guys do it by yourselves. Okay, variance of the portfolio. Next one we had seen was variance of the portfolio. Yes, we got it as 8.982625%. Yes, 8.98. I told you we got it directly as a number. They've got it as a decimal. Basically, this answer that you're getting, 8.98 divided by 100, you will be getting 0.0898. Same answer, 0.0898. Yes or no, everyone? Okay, fine. Now, unsystematic risk. Individually for Excel Limited, it is how much? Unsystematic risk is 10.99%. Sorry. Yes, here 10.99%. Deluxe Limited 9.24%. Yes, we also got the same thing. For the portfolio, 6.76%. 6.73. Okay, 6.76%. Yes or no, everyone? Okay, same answers we've got. The only difference is Institute has done the calculation in the form of decimal. Okay, Institute. Yes, CMA Institute is great. Yes, most of the questions, all the questions, they've done the answer in the form of yes, percentages, direct number. But in the past examination, 1 or 2 times they've done it in the form of decimal. But ideally the, yes, evaluator should be giving you guys the marks. If you're still having doubts, okay, do it this way, 6.76255% square. Okay, then write it in the form of decimal also. Is this clear, everyone? Okay, boss, bingo, question is over. Till here things are absolutely crystal clear. I hope. Yes or no, everyone? Give me a confirmation. Accordingly we'll proceed further. Yes everyone, now we are coming to June 25 attempt, question number 5a, 7 mark question. Quickly let us come to the question. Now this is a question on levered unlevered beta, also called as asset beta, equity beta. Yes everyone. Yes, again a simple question. Yes, we have discussed the concept of asset beta, equity beta, levered beta, unlevered beta. Yes, miscellaneous portions in the chapter portfolio. Based on that one, 7 mark question has come. Pay attention everyone, not going to explain it again here. Quickly we will discuss. You are assessing two capital intensive engineering companies, Omega Hydraulics Limited and Vertex Industrial Solution Limited, that have recently restructured their capital to support expansion plan. Bingo. Yes, management of both the company wants to elevate whether their actual equity returns align with the investors' expectation based on risk profile. Okay, following is given. Omega vertex, only one I will be doing. Okay, unlevered beta, ungeared asset beta is given. Okay, bingo, 0.9. Yes, proposed capital structure, debt divided by equity 0.6, debt divided by equity is 0.6. Basically it is 0.6 divided by 1. Yes or no? That means total if 1.6 I am raising, 0.6 I will raise from debt, 1 rupee I will be raising from equity. Okay, actual return that it is given 16%. Okay, treasury bill details, face value of the treasury bill is 100. Okay, coupon rate is 6.5%. Yes, current market price is 95 rupees. Okay, based on this I think this data is given to calculate risk free rate. Okay boss, the expected market return is 14.5%. Okay, required, yes, analyze the levered beta for each company. Yes, based on the proposed capital structure. What is levered beta? It is equity beta. Calculate equity beta. Okay boss, bingo. Now second one is analyze and assess the expected return for each company using the CAPM model. Obviously once I've got the equity beta, using that I will be doing RF plus beta into RM minus RF. Yes boss, bingo. Third one, analyze which company is overperforming or underperforming based on the return. Is this clear everyone? Okay, very simple. Now let us get into the calculation. Only for one company I will do, the other company you guys please replicate it by yourselves. Okay everyone, now again not going to explain what is asset beta, equity beta. Is in the recorded class, is approximately 3 hours, beautifully logically everything beautifully one explained. Yes boss, come let us come to Omega Hydraulics. Pay attention everyone, what is given for me? Asset beta is given. Asset beta is how much? 0.90. Okay, debt is to equity, debt divided by equity, debt divided by equity, it is a 0.6. Basically it is 0.6 divided by 1. Yes or no everyone? Tell me normally what we used to be doing. Yes, whenever asset beta, equity beta calculations were there, we were calculating weights. Yes or no everyone? Perfect. So I will first tell equity, debt into 1 minus tax gives me total. Yes, I will tell in the form of rupees as well as in the form of weights. Tell me equity is how much? Here look at this, equity is 1 rupees, debt is how much? 0.6. On that, yes, is there tax adjustment? Question is telling you very clearly, ignore tax. That means this one I need not consider. I will ignore. How much is debt? 0.6. Yes or no everyone? 0.6. So total 1.6 is there. Is this clear everyone? Okay, so tell me, yes, total if I want to raise 1.6 rupees, 1 rupee I will raise from equity holders, 0.6 only I will be raising from debt holder. So what is the weight of equity? It is 1 divided by 1.6. Weight of debt, it is a 0.6 divided by 1.6. Is this clear everyone? Okay fine. Now tell me, how do I calculate the equity beta? Yes boss, very simple. I know that the asset beta, it is the weighted average. Simple boss. Yes, do your balance sheet. Yes, if you're doing the balance sheet means, yes, in the left hand side from where all I'm raising capital, equity, debt. In the right hand side, whatever capital I've raised, where am I investing? In the asset. Yes or no everyone? So whatever is the asset beta, it should be the weighted average of the equity beta as well as the debt beta. Yes or no everyone? Okay, simple. So it is going to be, yes, beta of equity into weight of equity plus beta of debt into weight of debt. Is this clear everyone? Okay, beta of asset, is it given? Yes boss. How much it is? 0.9. Beta of equity, is it given? No boss. That is what I want to calculate. Beta of equity into weight of equity. How much is the weight of equity? It is 1 divided by 1.6 plus beta of debt. What is beta? Beta is a measure of risk in the debt. Nothing is given. We will be assuming that the beta of debt is 0. So 0 into 0.6 divided by 1.6. This entire thing becomes 0. Yes or no everyone? Okay. Now I want to calculate the equity beta. Take these things to the other side. Yes, I will keep it here. Beta of equity 0.9. Yes, 1.6 is in the denominator, goes to the other side, becomes to the numerator into 1.6 divided by 1, yes or no? Therefore beta of equity is 0.9 into 1.6, which is going to be 1.44. Is this clear everyone? Yes or no? Perfect. Yes. So we have calculated for omega. Same steps I will be repeating for the next company vertex. Is this clear everyone? Okay. First requirement is over, which is calculation of levered beta. Okay. We will tally also, don't worry. Second, calculate the expected return based on CAPM and tell which is overperforming or which is underperforming. Okay, boss. Tell me for the company omega, I have to calculate the expected return. How do I calculate? It is RF plus beta into RM minus RF. Tell me students whether risk-free rate is directly given. No boss, it is not directly given, but this adjustment we have already seen. Yes, wherein the interest is given. Tell me students, I am having a treasury bill which is a government security. Tell me how much coupon treasury bill is giving me. 6.5%. Yes or no? What is the face value? Face value is 100. So therefore it is a coupon divided by current market price into 100. I have told this. Yes, boss. At what price the treasury bill is available? 95 rupees. So if I purchase a treasury bill today for 95, every year how much income I will be getting? I will be getting a 6.5% coupon. Coupon is always on the face value. On 100, 6.5%, 6.5 will be getting. Yes or no everyone? 6.5 interest I will get. Yes, today I am investing 95 for that. So it is going to be how much? Yes, 6.5 divided by 95. It is going to be 6.842%. Yes or no everyone? Okay, that is my risk-free rate. So risk-free is 6.842 plus beta I have calculated. Equity beta I want. Yes, it is 1.44. I am calculating as per CAPM the required rate for equity holders. That means the beta should also be for equity holders. Yes or no everyone? Okay, again small things I'm again repeating. Okay, RM, which is 14.5 minus RF, it is 6.842. Simplify this, I will arrive at the expected return as 17.8695. Yes, this is the required rate of return. Yes or no everyone? Expected return or actual return is given, which is 16%. Now what is the question asking? Whether the security is overperforming or underperforming. Tell me students, omega. Yes, for omega company, based on the beta, equity beta, that is the risk that my equity holders are taking, ideally how much return they should be getting? They should be getting 17.87% return, boss. But in reality they are getting how much only? 16% only. Good da, bad da? Bad. Yes, whether the security is overperforming or is it underperforming? It is underperforming. Yes, is it giving me more return or less return? Less return. So the security is underperforming. That is what question is asked. Performing. Yes, in terms of pricing, if question is asking whether it is overpriced or underpriced, tell me students, very simple. Yes, by comparing the return, how do you tell is it overpriced or underpriced? Simple. You see, as a logical rational person, will you buy? If you are buying means it should be underpriced. If you are not buying means it is overpriced. Simple. Tell me students, for security omega, based on the risk you are getting, na, ideally how much return you should be getting? 17.87% you should be getting, but you are getting 16% only. Are you getting the required return? No. Are you happy? No. Will you invest? No. Why you will not invest? Because it is overpriced. Yes or no? Because it is overpriced. Simple. Because it is overpriced, it is not giving me the required return. That is why it is underperforming. Yes or no everyone? Okay, fine. Let me try comparing the answers. Look at this. I have only done for one security. For the other security, you guys can repeat the steps by yourselves. Question number 5A. Okay, first calculate the levered beta, which is the equity beta. Yes, for the first company was 1.44. Same as answer we got, 1.44. Based on that required rate of return 17.86 something, 17.87%. Yes or no everyone? Okay, fine. Now yes, the security is underperforming. 87% security is underperforming. Yes or no everyone? Similarly you can be doing it for the next security as well. Is this clear everyone? Okay boss, bingo. Question is over. Now coming to the next question, my dear students, pay attention. Yes, questions are lengthy and we are solving major chunk of questions, that is why. Okay, now next question. Yes, Mr. Ketan, a portfolio manager at Helix Capital Advisor, holds portfolio NZ consisting of the following securities. Yes, 3 securities. Weight is given, beta is given. Yes, weighted average beta I can do, expected return is given, total variance. Exact same question we have seen already, question 1 or question 2. Yes, covariance is given. Yes or no everyone? Standard deviation is 12%. Okay, present value factor calculation, do up to 4 decimals. Calculate the portfolio beta, simple boss, it is a weighted average. Next one, calculate the residual residual variance for each of the three securities. Yes, how do we calculate the residual variance? Boss, total variance is there. It is in the form of decimal. That means everything should be in the form of decimal. Okay. Systematic risk. It is beta square into sigma market square. Yes, sigma market is given. Yes, this also keep it in the form of decimal, 0.12 square. You will get the systematic risk. Balance is going to be unsystematic risk. Okay. Calculate the portfolio variance based on MPT. Yes, what is the weight that they've given? Okay, weight is given. Okay, fine, no issues. Yes, weighted average. Yes, I have to calculate as per MPT. Yes, a square plus b square plus c square plus 2ab plus 2bc plus 2ac. Yes or no? Weight of a sigma a the whole square plus weight of b sigma b the whole square. Yes, weight is there. Yes, standard deviation. It's already there in the form of square. Yes, plus 2 into weight a. Yes, weight b sigma a sigma b. Yes, into r a b. Yes or no, everyone? Yes, sigma a sigma b rab. I am not having directly covariance is given. Yes or no? Based on this we can be calculating exact replica of question 2 that we have solved, so I am not going to solve it again. Is this clear, everyone? Okay. Yes, already all these questions are similar, that too in this video only above I have solved. Why should I again unnecessarily be solving? Is this clear, everyone? So with this, okay, June 25 paper questions are over. Again, trust me students, till now whatever questions we had seen, not even one question is new. Everything is just similar. Yes or no, everyone? Now what is left for us in terms of past paper is just December 25 papers, my dear students. Yes, everyone, let us go ahead to the next question. Yes, we are currently discussing December 25 past examination question number 5a. Okay. Yes, again a similar question only. Look at the students. Returns of two portfolios, moon and sun, for the past 4 years given. Year 1, 2, 3, 4, portfolio moon, portfolio sun. Tell me different returns are given. Can I calculate the average return? Yes, boss, I can be calculating. Beta factor is given for both of the securities. Okay, great. Market portfolio is giving 11%. RBI bond, which is risk free, is going to give me a 5.5% return. Okay, boss, simple. Now calculate the expected rate of return under CAPM. CAPM return I will calculate. Okay, boss. Second, calculate the alpha adjusted return. Okay, what is alpha adjusted return, boss? I will tell you, don't worry. Third, recommend which of the above two portfolios investor will be preferring. Okay, boss, simple. Now tell me students, for portfolio moon, last 4 years return is given. Based on this, can I calculate the expected return? Yes or no, everyone? Okay, let me try doing. Yes, year 1, 2, 3, 4. 1, 2, 3, 4. Yes, return is 14.2. 14.7, 13.7, yes, 15.2. If you add, yes, total return is going to be 57.8%. Yes, total. Yes, average return. This is the X bar or expected return. Yes, it is 57.8 divided by 4. It is 14.45%. Yes or no, everyone? Same I will do for the next security, which will come to 14.1575%. Is this clear, everyone? Sir, but this one is not asked, na, sir. But still, dear, yes. Whenever data is given, the basic calculation we will do and finish it off. Yes or no, everyone? Okay, fine. Now, what is the question asking? First thing question is asking is calculate the expected rate of return as per CAPM, required rate as per CAPM. Yes, let me try calculating the required rate as per CAPM. Yes, it is simple, boss. RF plus beta into RM minus RF. Tell me risk free rate is how much? 5.5%. Plus beta into, yes, RM is how much? 11. Yes, minus 5.5. Yes or no, everyone? 11 minus 5.5. Basically, this is 5.5. So tell me for the first company, moon. Yes, RF is 5.5 plus what is a beta? 1.8 into 5.5. Yes, for sun 5.5 RF plus beta is how much? 1.4 into 5.5. So how much value we are getting? 15.4%. Yes, as well as this is going to be 13.2%. Simple, boss. Yes or no, everyone? Yes, let me do it only for one of the securities. Pay attention, I will not do it for both the securities. Okay, now tell me students, I know the expected return, I know the required return. Can I calculate the alpha? Yes or no, everyone? Yes, alpha is extra return. Yes, I will tell Jensen's alpha, it is expected return minus required return. So for moon, sun. Tell me, yes, for moon, yes, what is the expected return? How much return I'm expecting? 14.45. But boss, how much return is required for the risk we are taking? 15.4. That means how much extra rated I'm getting? I'm not getting extra, boss. In fact, I'm getting less. Yes, I'm getting 0.95% less. Yes or no, everyone? Okay, fine. In case of sun, yes, what is the required expected return? 14.1575. But required rate of return is 13.2 only. So the alpha is 0.9575. Yes or no, everyone? Okay, fine. Okay, now understand. Yes, what the institute is asking. Yes, first one, calculate the expected rate of return under CAPM. Second one, they're asking calculate the alpha adjusted return. Now understand students, what is basically alpha adjusted return. Tell me students, I know the formula for alpha. What is alpha? Alpha is how much return I am getting minus how much return bare minimum I want. Yes, extra return, it is expected return minus required return. Yes or no, everyone? Tell me, if I want to calculate the expected return after adjusting for alpha, can I tell it is required return plus alpha? Therefore expected return it is the required return plus alpha. Yes or no, everyone? Simple. I am telling I am investing in Reliance. For the risk I am taking, I want 15%. Required rate is 15%. But Reliance is giving me 5% extra. That means actually how much it is giving me? 15 plus 5, 20. As simple as that. Yes or no, everyone? Okay. So tell me students, for moon and for sun. Yes, how much is the required return that we have calculated? 15.4 and 13.2. How much is the alpha? In case of moon, it is minus 0.95. Yes, in case of sun, it is 0.9575. Yes, it is going to be how much? 14.45%. Yes, here it is going to be how much? 14.1575%. Is this clear, everyone? Yes, this is one way of doing the calculation, alpha adjusted return, which is I calculate the required return. Yes, add the alpha. Accordingly, I will get how much return I'm expecting. Yes or no, everyone? But boss, what I can also be doing is, tell me this same answer without any calculation I will get. How? Yes, it is nothing but my expected return as per MPT. Yes, tell me students, as per MPT, how much return I got? 14.45, 14.1575. Tell me, is it the same? 14.45, 14.1575. Simple, boss. Yes or no, everyone? Very simple. Tell me students, simple. Okay, look at this. I know expected return. I know required return. Using this I calculated alpha. Now I know alpha. I know the required return. Using this I will add and arrive at the expected return. Same story only, na boss? Yes or no, everyone? Yes, how much return you are expecting? How much return I want, bare minimum, which is the required return, plus how much extra return I am getting, alpha. I will arrive at the expected return. Is this clear, everyone? Okay, fine. Because the institute has asked, we have done it. This was the simplest way for us to do it. Institute has done a slightly lengthy approach, but still we will be getting the same answer. Okay. Now the next requirement that the institute is asking is, recommend which of the above two portfolios investor will prefer. Tell me students, ideally, which portfolio investor will prefer? Investor will prefer that portfolio where alpha is positive, because alpha is denoting extra return. Yes or no, everyone? Tell me where alpha is positive. Yes, only in sun. That means we will tell, okay boss, yes, portfolio sun is better, because in portfolio sun, how much return for the risk I am taking, how much return I want, 13.2, but in reality how much it is giving me, 14.15. So basically 0.95% extra it is giving. So logical answer is that portfolio sun should be better, because the alpha is positive. But the institute's answer is different. Institute is in a different when they are preparing the answers. Trust me, basic logical things they are not doing. Okay, yes, nothing can be done. Now look at this, everyone. I will show you guys the answers. Basically try tallying question number 5a. Yes, institute is in a high ganja. Yes or no, everyone? When they're preparing all these answers, trust me, so many mistakes. Okay, now pay attention, everyone. Look at this first one. Okay, expected return or required return, 15.4, 13.2. Where is it? 15.4, 13.2. CAPM required return, first requirement. Okay. Second requirement was calculate alpha adjusted return. Now how they have calculated alpha? See, so much nonsense they have done. They have compared the actual return for each of the year, yes, with the expected return, calculated the abnormal return, taken a summation of that, done an average of that, and they got that alpha here is minus. Oh, there is no charge in the iPad. Just give me a minute, students. Let me connect it for the charge. Yes, everyone. So what is it that I was telling? Okay, yes, what we did,
we first calculated past returns were there. Based on that, I calculated the average return that I told as expected return. I calculated the CAPM required return. Based on that, I directly calculated my alpha. Here what they are doing is, for each of the year they are seeing how much extra return they've got, then they are doing the average of that. Based on that, they are calculating alpha, but still the alpha is going to be the same only, absolutely no issues. Based on that, they are giving alpha adjusted return, which is a required rate of return, plus the alpha, which is basically expected return. You will get here 14.45, 14.16. Yes or no, everyone? 14.45, 14.16. Same thing directly. It is nothing but the expected return as per MPT. Yes or no, everyone? Okay. Now comes the recommendation. Now in the recommendation, what they are telling? They are telling, boss, alpha adjusted return for portfolio moon is higher than sun. Alpha adjusted return is the expected return. For moon, expected return is 14.4. For sun, expected return is 14.16. So where return is more in moon, so they are telling, boss, go for portfolio moon. Yes or no? This is the institute solution. Absolute nonsense. The basics in portfolio we've understood. Yes, I cannot be comparing return in isolation. Return has to be taken in relation to risk. Yes or no, everyone? Yes, understand. Yes, for portfolio moon, yes, the expected return is more. Yes, it is giving me 14.15 percentage, 14.45 percentage return, but boss, it is more risky. Yes or no? Risk beta is 1.8. So based on the risk, how much return it should have given me? It should have given me 15.4. It is only giving 14.4. It is giving me less return. But whereas, yes, portfolio sun, yes, it is giving me 14.16%. For the risk, it is less risky. Even if I get 13.2, I am happy. In fact, this is giving me 14.16%. It is giving me 0.95% more. So logically, rationally, I would have told that alpha is positive, means that is better. I will be going for portfolio sun, but institute is doing nonsense. Is this clear, everyone? Perfect. If institute is committing a mistake, I cannot be telling, okay, that is right. Yes, but still, I will be telling each and everything how the institute has done the solutions. Is this clear, everyone? Okay. We are having one final question, my dear students, from past paper. Yes, which is question number 5B. Yes, of December 25 attempt. Pay attention, everyone. Question number 5B. Yes, question number 5B. Look at this, everyone. What is the question trying to tell? Yes, Miss Taima. Tell me, students. Taima. Okay. A mutual fund analyst has collected past performance of 3 funds and the Sensex. Okay. Rocks fund, SEZ fund, Tom fund. Okay. Return is given. Okay. Bingo. Standard deviation is given. Okay. Bingo. Correlation with the market return. Correlation, which is R of the security with the market, is given. Okay. Bingo. Market risk is given. Okay. Standard deviation sigma m is given. Okay. Fine. Market rate of return is given. Risk free rate of return is given. Analyze and assess the rank of the 3 securities funds in tabular form for Sharpe ratio, trainer ratio, Johnson's alpha. Yes or no, everyone? The moment we see this question, our heart should start telling, dil jumping, japang, jumpak, thumping, tapang, tampak, gili giliya. Tell me, students, gili giliya. Sir, simple halwa question, sir. Yes or no, everyone? Absolutely nothing is there. Tell me, students, Sharpe ratio. Yes, what all is the formula? First, let me just write down. Sharpe ratio, it is actual return minus RF divided by sigma. Trainer ratio, it is actual return minus risk free divided by beta. Johnson's alpha, it is actual return minus required rate of return. Is this clear, everyone? Tell me whether actual return is it given. Yes, boss, actual return for each of the security is given. So this one we know, no issues. Yes, whether risk free rate we know. Yes, boss, that is also given. Risk free also we know. Tell me whether standard deviation sigma is given. Yes, boss, sigma is also given. This also we know. Yes, whether beta is given, whether beta is directly given. No, boss, beta is not directly given. So step number 1, I will calculate beta. Okay, boss. Now to calculate Johnson's alpha, it is actual return minus required return. Actual return I know. Required return, it is a CAPM required return. Yes or no, everyone? Yes, it is RF plus beta, yes, into RM minus RF. If I get the beta, yes, accordingly I can be calculating the required rate of return. Accordingly, all the ratios I can calculate and finish it off. Yes or no, everyone? Okay, fine. Quickly, let us try doing the calculation. Pay attention, everyone. First calculation is going to be calculation of beta. That is how our brain should work. Yes or no, everyone? Beta, it is systematic risk of X divided by systematic risk of market. I will take the total risk of X sigma X into how much percentage is because of market related factors into RXM divide by sigma M. Yes or no, everyone? For rocks, yes, it is going to be 2.5 into 0.84 divide by 1.2. It is 1.75. Similarly for SEZ, yes, it is 2 into 0.54
divide by 1.2, it is 0.9. Similarly for third one, Tom, yes, it is going to be 0.65. Is this clear, everyone? Okay, once you've got this, now if you want, you can be calculating the required rate of return, yes, and accordingly you can proceed further. Now look at this, students. Now calculation of ratio and the ranking. Yes, three of the mutual funds I am writing in the three columns. First one, as per Sharpe ratio. Firstly, calculation of Sharpe ratio. It is actual return minus risk-free return divided by sigma. Tell me for rocks, how much is the actual return for rocks? Which question are we doing? December 25, 5B. Okay, fine. Yes, actual return is 19 minus risk-free return is 9 divided by sigma. Sigma is given in the question. It is 2.5. Yes, therefore Sharpe ratio is 4. Similarly, I will do for SEZ and Tom, yes or no, everyone. Now based on this, I will be giving the ranking, yes or no, everyone. Tell me, Sharpe ratio, trainers ratio, Jensen's alpha. Yes, how do I give the ranking? The higher it is, the better it is, yes or no, everyone. Yes, once you get these numbers here, ranking also you guys can give. I am not doing, I am just here to show you guys the approach. Okay, boss, bingo. Next one comes trainer ratio. Trainer ratio. First one is calculation of the ratio. Tell me what is the formula. It is actual return minus risk-free rate of return, gives me extra return for 1 unit of systematic risk divided by beta. It is 19 minus 9. 10 divided by beta is going to be how much? 1.75. Yes, which is going to be how much, my dear students? It is going to be 5.7143. Similarly, I will be doing for two other mutual funds. Based on that, I will be giving the ranking. Again, a ranking is very simple. Yes, the higher it is, the better it is, yes or no. So based on that, first, second, third ranking you guys can be doing it. Okay, fine. Yes, third one is calculation of Jensen's alpha. Yes, to calculate Jensen's alpha, it is actual return minus required return. So let me calculate the required return as per CAPM. Yes, it is nothing but RF plus beta into RM minus RF. Yes, tell me how much is the risk-free rate? Risk-free rate is 9 plus beta into, yes, RM is 14 minus 9, it is 5. So can I tell 5 into beta? 9 plus 5 into beta. So in case of the first one, it is 9 plus 5 into, what was the beta that we have calculated? 1.75. So yes, it is going to be how much? 1.75 into 5 plus 9, it is going to be 17.75%. Yes or no, everyone? So can I calculate the alpha? Yes, it is actual return minus required return. Tell me the first one, which is going to be rocks fund, it is giving me 19%. For the risk I am taking, I want 17.75. So how much return extra it is giving? 1.25% extra. Yes or no, everyone? Yes, I have got the alpha. Based on that, I have to give the ranking. Again, the higher it is, the better it is. Based on that, I will be assigning the ranking. Is this clear, everyone? Yes or no, everyone? I have told you again multiple times, 70 plus questions from the question bank we have done. This is just repetition. All questions are similar, so I will not sit and solve each and every bit of every question, but wherever, just to get an approach, a feel, that is why we have done this. Is this clear, everyone? Okay, so with this, all questions from the past papers we have done, my dear students. Now we are having model question papers as well, and trust me, there is absolutely no questions which is new even in model question. Each and every freaking question is covered, so I will not unnecessarily waste my time in reading this. You guys please try doing this by yourselves. Is this clear, everyone? So with this, the past examination and model question paper discussion for the chapter portfolio is done and done over, my dear students. A chapter which is going to give you a short weightage of 18 to 20 marks in the examination. Each and every question, concepts anyways we have done beautifully, 70 plus questions we have done. Again, just to give you guys that added confidence, we have picked directly from the CMA Final past examination papers, model question papers, solve those questions. Is this clear, everyone? Okay, now coming to the next chapter, which is going to be mutual funds. Again, a very simple chapter, and if you guys know how we have taken up that chapter, each and every different variety of questions we have solved, yes or no, everyone? And trust me, students, absolutely not even one question, not even one adjustment is new. So there is no need for me to separately solve it, yes, by myself. But still, if you guys want to see it, yes, you guys can please try it once by yourselves, just to get that added confidence. Yes or no, everyone? December 23 to December 25, as well as model question papers, questions are available. If you guys want, you guys can please try
try it by yourselves. So with this, we have successfully completed past papers as well as model question papers question discussion for the chapter portfolio and mutual funds. I hope you guys have thoroughly enjoyed. So that's it for this session. See you guys in the next session. Until then, keep studying, keep smiling, keep working hard, keep making your parents proud, and see you in the next session. Take care. Bye. Yes everyone, so welcome back to question solving series, my dear students. It is time for us to take our discussion forward. We are now taking a group of chapters. Sorry everyone, I'm having a bit of cold. So we are now going to take 3 chapters together. What are all going to be those chapters? Now there is a chapter called Advanced Capital Budgeting. Beautiful chapter. We have a beautiful chapter, Advanced Capital Budgeting. Then yes, in your CMA Final SFM, there is a chapter called Analysis of Risky Proposals. Sir, but when you have listened to the regular class, sir, we have not seen this chapter at all, sir. Because I have told you, yes, in CA Final, there is one chapter called Advanced Capital Budgeting, where everything is there. In CMA Final, the same chapter, they have split it into 2. One is Advanced Capital Budgeting, wherein basic NPV calculations and regarding that questions is there, replacement decision is there. Basically, your unit number 0 as well as unit number 2 of our, yes, Advanced Capital Budgeting chapter. Unit number 1, yes, risk analysis in capital budgeting. Therein we had different things. Yes or no everyone? Yes, we had RADR, certainty equivalent, sensitivity analysis, scenario analysis, yes, simulation. Then we had probability distribution, perfectly independent cash flows, perfectly dependent cash flows, moderately dependent cash flows. All those things CMA Institute has brought it into a separate chapter called as risky proposals. Okay, we have discussed it in one shot. Everything we have covered. Now with that, there is one more chapter called leasing. These are a group of chapters. Now ideally this video I want you guys to watch after you finished all these. That is basically you finished Advanced Capital Budgeting regular class, wherein Advanced Capital Budgeting as well as risky proposal is done, as well as you finished this leasing chapter. Okay, now what is the examination weightage? Advanced Capital Budgeting chapter 7 plus 2, this is again 7 plus 2, this is again 7 plus 2. So basically it is going to be 21 plus 6 to 8. So it is 27 to 29 marks. Is this clear everyone? Okay. Now understand one thing, my dear students. When we have covered the chapter leasing, leasing is a chapter which is there only for CMA Final. It is not there for CA. Okay, so in this chapter we have taken exclusively for you guys all the past paper questions of CMA Final. We have covered it already, so there is no point in me trying to, yes, again solve the same set of questions. For people who are watching it on YouTube, yes, on YouTube also the entire chapter of leasing 12 hours video we have uploaded. Crazy discussion. Everyone tells leasing is difficult, we are not understanding, so many things are there. We have made it into the simplest chapter, my dear students. So please do watch that if in case you have not watched. Yes or no everyone? So what is left is this. This segment is a core cream scoring segment for us. We will be having 25 to 30 marks, and we are going to score 25 to 30 marks, my dear students. We are not even going to leave a single mark. Is this clear everyone? Okay, first we will start with the chapter Advanced Capital Budgeting. Yes, every time you get your CMA Final SFM paper, at least based on the past paper analysis, question number 2A is always going to be a question on Advanced Capital Budgeting. Simple NPV calculation, max to max profitability index calculation. That's it. The questions are coming. Okay, but beautifully, yes, Institute has been framing questions. So yes, it is good that we once try having a look at those questions. Is this clear everyone? Yes, the audio video is clear. Yep. Yes everyone, so with this on the back of our mind, yes, let us start with the first chapter. Leasing anyways we are not going to do because we have already covered, yes, all the past papers, model question papers, everything is covered. Yes, now Advanced Capital Budgeting is what we are going to cover right now. Okay, yes everyone, so in 3, 2, 1, let the maja begin. Yes, every attempt it is question number 2A. So we will come firstly to the past paper. We will come to December 23 examination. Question number 2A. It is going to be on Advanced Capital Budgeting. Are we ready everyone? So in 3, 2, 1, let the maja begin. Yes everyone, beautiful question. Let us try seeing. Okay, what is the question asking? Frantic Limited is considering replacement of its existing machine. Okay, there is an existing machine with a new machine. Okay, replacement decision we have seen. Purchase price of the new machine is 36,40,000. Expected life is 8 years. Company follows SLM for depreciation on the original investment. Okay, scrap value is not considered. Okay, boss, bingo. Other expense to be incurred for new machine. Installation is 14,000. Consultant fee is going to be 7,000. Additional working capital required. Okay, it will be released at the end of year 8, 23,800. Okay, WDV of the existing machine is 1,06,400. Cash
salvage value 17,500. If I'm selling right now, I'll be getting 17,500 only. Dismantling cost of the existing machine will be costing 6,300. Okay. Annual earnings before tax and but after depreciation from the new machine will be 4,41,000. Company's tax rate is 35%. Cost of capital is 13%. Yes, present value factor for 8 years is given. Annuity factors is also given. Present figures to the nearest rupee. Analyze the annual cash savings and present value of cash flows. Advise on the viability of the proposal. Yes or no, everyone? Okay. Existing machine is there, new machine is there. First, before even we solve, what is our first duty? Write down the data. Yes or no, everyone? So let us first write down the data. Pay attention, students. Existing machine, new machine. Tell me, for existing machine, what all data is given? Quickly see the question and give me the figures, my dear students. Firstly, WDV is given. How much is WDV? 1,06,400. Okay. Cash salvage value is given, which is 17,500 if I'm selling right now. Okay. Yes. Dismantling cost, it is 6,300. Okay. For the new machine, purchase cost is how much? 36.4 lakh. Yes. Installation, it is 14,000. Consultant, it is 7,000. Additional working capital, it is 23,800. Yes. Life of the asset is 8 years. So what is the earnings before interest and tax from the new machine? Yes, it is 4,41,000. Is this clear, everyone? Okay. Now the decision is, should I replace and purchase the new machine or not? Yes, always on incremental basis we will be doing the calculation. Yes or no, everyone? Tell me what all options are there. Option number 1 is continue with the existing machine. Option number 2, sell the existing machine and purchase the new machine. Yes or no, everyone? If we are selling the existing machine, purchasing the new machine, what will happen? Tell me, students. First, calculation of initial investment. Today I decided that okay, this is my existing machine, there is no need for this. I will sell this existing machine, purchase a new machine. What all I will be incurring? Firstly, cash outflows. Yes, to purchase a new machine, what all I will incur? Firstly, I will be incurring the cost of the asset. Yes or no, everyone? Tell me, how much is the cost of the asset? Purchase cost is 36,40,000. Plus with that, in order to install that, 14,000 installation cost, plus consultant charge is 7,000. So it is going to be how much, my dear students? 36,61,000. Yes, this I am paying today. Yes, is this the only amount I'll have to pay? No, boss. Boss, if I have to use the new machine, additional working capital is required. So I will have to invest in the working capital also. Investment in working capital. This is also cash outflow. How much is needed? 23,800. Is this clear, everyone? Okay. Now, boss, with that, there is one cash inflow also. What is a cash inflow? It is a cash inflow from sale of existing asset. Yes or no, everyone? Perfect. Yes, I'm purchasing new asset. For that, I should be paying cash. But boss, existing asset I sold. From that, I received cash as well. Yes or no? That gives me the net investment. Okay, boss. Now, how much cash I received by selling the existing machine? Let us prepare a working note. Okay. Net amount received. Tell me, what is the cash salvage value? Yes, if I'm selling now, boss, I am receiving 17,500. But boss, on that 6,300, I need to pay for dismantling of the asset. That means effectively in my pocket, how much money only I got? 11,200 only I got. Yes, boss. So plus or minus capital gain tax. First, let me try seeing, am I having a capital gain or a capital loss? Tell me, students, in my books of accounts, what is the book value of my existing machine? Boss, this is my existing machine, which is having a book value of 1,06,400. But when I'm selling here, ultimately, how much only I'm getting? 11,200. Happy or sad? Sad. Capital gain or loss? Capital loss. So what is the capital loss? I will tell Macha, in my books now, 1,06,400 is there. But I got 11,200 only. Mad life, Macha. Sir, what happened to you, sir? Anyways, I have to solve. Why do you have to unnecessarily be over serious when you're solving? Enjoy and solve. Tell students, Macha is coming. Crazy question it is. Yes or no, everyone? So tell me, yes, if I'm having a capital gain, I need to pay tax, cash outflow. If I'm having a capital loss, I will be getting a tax benefit. That is on other capital gain on which I had to pay tax. Now I need not pay. So I will be getting a tax benefit on capital loss, which is 95,200 into, I guess, 35%, which is going to be how much? 33320. So what is the total cash inflow? Yes, 11,200 also I received. On the capital loss, tax saving also I am getting 33,320. So total is going to be 44,520. Is this clear everyone? Okay boss. So yes, cash inflow from sale of existing asset is 44,520. That means what is my net initial investment? Net cash outflow today, it is 36 lakh 40,280. Is this clear everyone? Okay, simple. Always any NPV question, 4 steps. Step 1, initial investment. Step 2, calculate cash flow after tax. Step 3, calculate terminal value. Step 4, calculate NPV. Simple boss. Okay. Step 1, initial investment. What all I am incurring? Boss, to purchase the asset I am paying. Okay, 36 lakh 40,000 plus installation plus the consultant cost. With that, working capital is needed. That also I am paying. But boss, these I am paying. Yes, I sold existing asset, from that I am receiving the money. How much money I am receiving? Okay, boss, 17,500 minus 6,300, 11,200 I received. But boss, on that capital loss was there, on that the tax benefit also I received. That gave me the total amount. Initial investment is done over. Tell me swaha. 2 marks we have received. Boss, let us take our discussion forward. Yes, boss. Now comes the next step, which is a calculation of annual cash flow after tax. Tell me students, why did I do this? Why on earth did I do this? Because boss, my existing machine was there. It is no longer in usable condition. I can no longer use this existing machine. Yes or no everyone? Yes. So I went for a new machine. Now if I'm going for a new machine, every year how much is the benefit boss? Every year I will be getting a benefit. Where is question telling? Look at this, the annual earnings before tax but after depreciation. That means, tell me students, sales minus direct cost minus depreciation gives me earnings before interest and tax. Yes, this is that one. Yes or no everyone? After depreciation, first I'll get EBITDA. From that, if I reduce depreciation, I will arrive at EBIT. Yes or no everyone? That is this. Yes, 4,41,000. Okay, fine boss, simple. So let me write down. Yes, I got my EBIT or EBT. Earnings before paying of tax is 4,41,000. From this I will reduce tax at the rate 35%. Yes, I will arrive at my PAT. Yes, 4,41,000 minus 35%, it is going to be 2,86,650. Yes or no everyone? Now tell me, do I want profit or do I want cash flow? I want cash flow. Yes boss, depreciation, which is a non-cash, I had reduced. Sir, where we had reduced, sir? Here we have not reduced now. Understand boss, we have reduced it and only come. Look at this everyone. Ideally this is how it is going to look like. Ideally it is EBITDA. Randomly one figure will be there. From that I will reduce the depreciation. I will arrive at my EBIT. From that I will reduce tax. I will arrive at my EBT. Yes or no everyone? From that I will reduce tax. I will arrive at my PAT. Yes or no everyone? Okay, fine. Now ideally from EBIT only I will be reducing. It is called as a no PAT. All those things here not needed. Okay, yes, simple. Is this clear? Yes, depreciation is reduced. That is why question is telling my annual earnings after depreciation. After reducing depreciation, this is my earnings. Okay boss. So I have already reduced and I have arrived at my PAT. Now I need to add back because it is non-cash. I have just included it because I wanted to get the tax benefit. Yes or no everyone? So add back depreciation. Okay, tell me students, what is the asset value? Total asset value 36 lakh 40,000 is a purchase price plus installation, all these things, 36 lakh 61,000. Yes, whether we are having salvage, no, question did not give any salvage. Question told, yes, on SLM basis you depreciate across 8 years, so it is going to be every year 4,57,625. Yes or no everyone? That means what is my annual cash flow after tax? Every year I am getting a cash flow. If I purchase a new machine, every year because of that I am getting a cash flow of 7,44,295. Is this clear everyone? Okay, step number 3 comes terminal value. Yes or no everyone? Tell me what will happen at the end of 8 year. End of 8 years, project is over, new machine is also old. Yes or no everyone? I will try selling the new machine. Am I getting anything? No. Question told we are depreciating the asset to 0 salvage value, and question did not tell at the end of the life if I am getting a salvage value. Yes or no everyone? So salvage value is going to be 0. Does it mean that I'm not going to get anything at the end of 8 year? No, from the asset I'm not getting. But boss, working capital I've invested. At the end of it, working capital will be released. Yes or no everyone? Plus release of working capital. Yes, for people who are watching it on YouTube, I'm again repeating, reminding, this is not a concept discussion video. This is just a question solving.
on the presumption that we have understood concepts already. Sir, but if you have not understood concept, boss, we have already uploaded concept discussion marathons, wherein concept as well as master questions we have solved. Here we are just going to quickly solve questions. Is this clear, everyone? Any extra adjustments? Okay, how to do that only we are going to discuss. I will not be telling you guys basic things that okay, initially I will invest in working capital, cash outflow. In the end of it, I will sell asset, from that I will get money. Working capital will be released, from that I'll get money. Boss, yes, we're just solving the past examination question. This is a question solving marathon. Yes. So it is 23,800. Now I got everything. I will calculate NPV. Look at this, everyone. Draw a line. Line should be straight, whether you are straight or not. Yes or no, everyone? Tell me, students. T is equal to 0. Yes, at T is equal to 0, I am putting an investment. How much is the investment we are making? 36,40,280. This is my initial investment. Why am I doing this investment? Because every year in future I am getting a benefit. How many years? 1, 2, so on up to 8th year. Yes, every year how much benefit I am going to get, my dear students? It is 7,44,275. It is 275, not 295. 275. Yes, 744,275. So on 744,275. Is this clear? Now, in addition to this, in the last year, I will be selling the asset as well as releasing the working capital and get some extra money. How much extra I will be getting? 23,800. So what is going to be my NPV? Yes or no? Let me try calculating the present value of cash inflows. Year 1 to 8, every year I am getting 7,44,275. Annuity factor is given in the question, 4.80. So this one I have considered. Now in the 8th year, additionally 23,800 I am getting. 8th year additionally 23,800 I am getting. Yes, tell me what is the factor? 0.376. Yes, multiply. I will arrive at the present value of cash inflows. Yes, how much is it coming? It is coming to 35,81,468.8 or 469. Yes, minus my initial investment, which is 36,40,280. So that means how much is my NPV, my dear students? NPV is going to be minus 58,811. Negative. Is this clear, everyone? Tell me, NPV is negative. That means whether the project is giving me the required return? No. So should I be accepting the project? No. Yes, because NPV is a negative, I should not accept. Tell me, what was my proposal? To sell the existing machine and replace it with a new machine. So replacement of the machine is not a good decision. Replacement is not viable. Is this clear, everyone? This is the answer. Let us quickly try tallying the answer. Pay attention, students. Question 2A. Yes, everyone, look at this. 744,275. That is the annual cash savings. Yes or no, everyone? Present value of cash inflows 36,25,989. 36. Okay, they've just changed one thing. That is basically here. This one was there, right? Cash inflow from sale of existing asset. That also they've included here. But nevertheless, if you guys try tallying the NPV of the proposal, see this. NP of the proposal is 58,811. 58,811. Is this clear, everyone? Okay. Now, yes, a very simple point, students. Now, how exactly you take certain items, that depends. Now, simple point I'm telling. Yes, what was different between institute's answer and our answer? Technically, everything is tallying. Tell me, every year the annual cash flow after tax question is telling is 744,275. We also got the same thing. Okay. Now additionally, cash inflow that I'm going to get, what all? Every year, because I purchased the new machine, I'm going to get the annual benefit, cash flow after tax. In the last year, I'll be getting terminal value. Boss, today itself, when I purchase the new machine, I will be selling the existing machine. Yes or no, everyone? If I'm selling the existing machine, means if I'm purchasing new machine, on that how much I'm getting? Yes, tell me, I am getting 44,520. Yes or no, everyone? Where we had adjusted it, we adjusted it in initial investment. They are not including in adjusting in initial investment. They are adjusting in, yes, cash flow, yes, during the life. So basically here they are including 44,520. Basically this is how they are doing. Look at this. Yes, year 0, 44,520. Present value factor is 1, so it is 44,520. If you add, yes, 35,81,469 plus 44,520, how much you are getting? 3625,989. 3625,989. Yes or no, everyone? But if you are doing it that way, that time your initial investment will not be this much. Yes or no, everyone? We adjusted initial investment. They are adjusting it here. Simple. Boss, whatever you do, the answer is the same. Answer is telling, okay, life is jingalala, bingo, bingo. Yes, if this question comes for 7 marks, yes, Devi or Sajano, 7 marks has been credited to your CMA Final SFM account. Devi or Sajano, Dhanyavad. Is this clear, everyone? Give me a confirmation. With this question number 1 is done over. If this had come means our students should have compulsorily solved. Yes or no, everyone? Now we are going to June 24, question number 2A. Yes, everyone. Okay. Oh, this is a crazy question. Crazy as in crazy maja is coming. Yes, everyone. I am going to make it very simple for you guys. I will give you an alternative thought process. Trust me, we're going to make it very simple. But before that, I want you guys to read. So please pause and read the question, my dear students. Yes, everyone. Let us come to, yes, June 24, question number 2A. Trust me, one of the craziest question. Beautiful. Okay, yes, once we see a question which is slightly difficult, all of us say, it is difficult. But our students are going to say, it's a crazy maja question. Tell me, students, maja is coming. Yes or no, everyone? Trust me, beautiful question it is. Okay, I will tell you guys a logical shortcut through which we can get the answer faster than the normal approach. Pay attention, everyone. Okay, yes, if you do it through the normal approach, trust me, you will go mad. Okay, I will give you guys the shortcut. But a very simple thing is, I want you guys to try or read this question only after we've finished the leasing chapter. I've told you at the start of the video only, after you finish all 3 chapters. Yes, that is basically your advanced capital budgeting, which includes advanced capital budgeting, yes, analysis of risky proposal, as well as leasing. Only after that come here. Is this clear, everyone? Because certain things on how to calculate present value, I've given you guys some other shortcuts also in the leasing decision chapter. And if amount is payable, expense is incurred at the start of the period, tax is there at the end of the period, in that case, how to do all those things also we've discussed there. So I need not explain it again. So if in case you have not finished leasing, boss, first finish off leasing, then come to this question. This entire solving, please do it after leasing only. It will be simpler. Okay, let us look at the question. Okay, Bartek Limited is a manufacturing of computers. Okay, it wants to introduce artificial intelligence, AI. देवी और सजनों, इंडिया में अब AI भी होगा, I भी होगा. Do you guys remember that dialogue from Shri Narendra Modi? Yes, I don't want to tell anything much. Yes, I don't want to put myself into trouble. Okay, fine. Yes, while manufacturing of the computers, the estimated annual saving from introduction of, yes, AI is as follows. Okay, saving they are giving annual every year. Reduction of 5 employees with the salary of 1,50,000 each. 5 employees salary we can save. Okay, bingo. Reduction of 1,50,000 in the production delay. Previously production delay was there, because of that I was incurring a loss. That now is not happening. Okay, bingo. Reduction in lost sale by 1,25,000. Previously sale was lost, now it is not there. That is also benefit. Bingo. Gain due to timely billing 1 lakh. Yes, because we are doing a billing on timely, we are getting money on time basis. Okay, that also is a benefit. Okay, boss, benefit is given. Now, the purchase price of the system for installation of AI is 10 lakh rupees. Yes, to purchase the AI system, it is going to be 10 lakh. Installation cost is 50,000. Okay. 80% of the purchase price, read, 80% of the purchase price will be paid in the year of purchase, and the remaining will be paid in the next year. What is question telling? Yes, what is the purchase price? 10 lakh. In that purchase price, 80% is paid today. Yes, 20% is paid at the end of first year. Installation question has not told anything, so I will assume that it is done today itself. Okay, boss, bingo. This is the initial investment. Okay, estimated life of the system is going to be 5 years. Okay, boss, bingo. And it will be depreciated for income tax purpose on straight line basis. Okay, bingo. However, the operation of the new system requires 2 computer specialists with an annual salary of 2,50,000 per person. Yes, cost is also there. Okay, boss. In addition to the above, annual maintenance and operating cost for 5 years are as below. Yes, the annual maintenance and operating cost. Okay, yes, year 1 2 3 4 5. Yes, 1,90,000, 80,000, 70,000, 60,000. The maintenance and operating cost is payable in advance. Oh, if cost is paid at the start of the year, tax benefit I will be getting, but that I will get only at the end of the year. Remember something, we have done this in leasing, yes or no, everyone? That is why I told only come here after leasing. Okay, boss. Okay, company's tax rate is 30%, required rate of return is 15%, present value fact is given. Calculate the NPV, whether company should introduce or not. Now understand, students, I will come here to the solution. Pay attention. I will just open this once. June 24 paper it is. Question 2A.
Yes, look at this everyone. If I am going to logically solve this, how my cash flows are going to look like, pay attention students, see how difficult it is going to be. 0 1 2 3 4 5. Is this clear everyone? Yes, if I logically do it the way we normally do, all of them write it in the period. Tell me students, first will be my initial investment. Yes or no everyone? Yes, in that purchase price, tell me total 10 lakh is there, in that 8 lakh is here, 2 lakh is here. Installation cost, question did not tell anything, that means completely I will be incurring here only, which is going to be 50,000. Okay, now comes the annual benefit, net annual benefit. Tell me students, every year what is the annual benefit? Yes, 5 employees into 1 lakh 50, 7 lakh 50 plus 150 plus 125 plus 1 lakh. This is a benefit. But boss, cost is also there. What is the cost? Cost is 2 specialists with 2 lakh 50,000 salary. I am just giving you guys a feel. Okay, yes, which is 5 lakh is going to be the cost. That gives me the benefit every year. So every year calculation of cash flow after tax. Cash flow after tax. Yes, net benefit. Yes, here, 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 here. Okay, fine. But boss, wait. Yes, from this, I have purchased the new machine. On that, I can be charging depreciation. So minus depreciation. Why is this happening like this? Minus depreciation. I will charge it. Yes or no, everyone? Perfect. Yes, minus the maintenance cost. Okay, now tell me students, maintenance cost. Now ideally what is happening to the maintenance cost? Maintenance cost is paid at the start of the year. That means maintenance cost will be coming here, year 0 1 2 3 4. Yes or no everyone? Perfect. Yes, this gives me before tax. On this I should be showing the tax adjustment. But wait, this way I cannot be doing. Why I cannot be doing this? Because this maintenance cost, okay, I have paid at the start of the first year. Look at this. If I'm drawing a line, year 0 year 1, this is basically year 1. Yes, maintenance cost I paid here, but the tax benefit on this, yes, this amount I will be charging into my P&L here. So when I'm calculating tax, this amount should be coming here. So it becomes a complete nuisance for me. So I will not try doing my calculations like this. Instead, I had given you guys an alternate approach. I will split. Ultimately, I want every cash flow to the present value. Yes or no, everyone? Previously, what I was doing is, basically I was doing like this. I would calculate initial investment. Okay. Then I will calculate this cash flow after tax. Then I will get the terminal value. Then I would bring all these together to present value. Compare with the initial investment. Now what I will be doing is, everything separately I will bring. Look at this students. I will calculate present value of initial investment, present value of cash flow after tax, present value of terminal value. Yes, add, you will directly arrive at NPV. Look at this. I am again going to tell you guys, yes, a divide and rule we will do. Very simple it is going to be. Pay attention. What I will do. Firstly, I am having my initial investment. In that also some amount is going in the first year. I will calculate present value of initial investment. Is this clear? Okay, step number 1. Step number 2. Yes, every year I am getting, yes, a benefit, yes or no, because I am purchasing a new machine. Okay, that benefit I will convert it into post tax. Okay, and that I will bring it to the present value. Is this clear everyone? Okay, now tell me students, every year I am charging depreciation. Depreciation is a non-cash item, but on that I will be getting tax benefit. So I will calculate the tax benefit on depreciation, that I will bring it to the present value. Point number 3. Point number 4 is, every year maintenance cost I am incurring. On that tax benefit I am getting in the next year. Yes, so that gives me the net cash outflows. That also can I bring it to the present value? Yes, boss. 4th, I got all these things in terms of present value. Directly add. I will arrive at my NPV. Is this clear, everyone? I hope you guys got a small feel as to what we are going to do. Trust me, yes, if you try following the institute's approach, you will go mad. That is all that is going to happen. See how simply we are going to solve. Are we ready, everyone, for the craziest maja? People are watching it subsequently on YouTube. Once you understood this, yes, if your faculty had told a very long, lengthy, nonsensical headache approach, and now you're like, oh, this much only. You cannot leave this video as it is. Pause the video. Put your feedback. Right? Crazy maja is coming. Yes or no, everyone? Do share it to all your friends. Tell, oh, crazy class is there.
Yes or no? Because you are our only marketing. Yes, boss. Let us try doing the calculation. Pay attention, everyone. Yes, note, solve this question only after leasing. If you guys are having some doubts, you have not watched leasing decision from me. Leasing decision completely on YouTube. I've made it free of cost available for you guys. Please do watch it. After that, this question is going to be simple halwa for you guys. Okay. First one is calculation of present value of initial investment. Now, let me try doing the calculation. Tell me, students, purchase cost I am incurring. How much is my purchase cost? 10 lakh. Yes, the purchase cost, full 10 lakh. Am I paying it today? No. Question told 80% today. 8 lakh is today. Just a minute. 8 lakh today. That means 2 lakh at the end of first year. Is this clear? With that, I should be incurring installation cost also. Question did not tell anything about installation. So, I will assume installation completely I am incurring today. Is this clear, everyone? So, that gives me the total cash outflows. Today I am incurring 8,50,000. At the end of first year I am incurring 2 lakh. Okay, let me bring it to present value. Into the present value factor. Present value factor for today is 1. Yes, first year present value factor. Whether present value factor is given. Okay, into 0.870. Yes, that gives me the present value of initial investment. Yes, 8,50,000 into 1 plus 2 lakh into 0.870. Yes, it is going to be 10,24,000. Is this clear, everyone? Present value of initial investment. Bingo. Okay, this one is over. Now what is the next one we are going to pick? This is over. We will pick the net benefit because of, yes, upgrading to the, what is it, artificial intelligence. Okay, step 2. Yes, calculation of annual cash flow after tax and its present value. In that first one is calculation of annual benefit. Tell me, students, if we switch to artificial intelligence, what all benefit we will be having? Boss, first one here question is telling now what all benefit. These 5 are going to be my benefit. Yes, this is going to be my additional cost. So let me calculate the net benefit. Look at this, everyone. First one is, yes, reduction of employees. Reduction of employees. Yes, for one employee I was paying 1.5 lakh into 5. It is 7,50,000 benefit. Yes or no, everyone? I will bring it under the heading benefit. Okay, first one. The next one, next benefit is going to be, yes, reduction of production delay. Reduction in production delay. You guys can just write it in short. Yes, which is 1,50,000. Yes, reduction in lost sale. 1,25,000. That is also a benefit. Yes, gain due to timely billing. Timely billing. Yes, it is going to be 1 lakh. All these are my benefit. But boss, whenever you're incurring a benefit, there is a cost. Yes or no, everyone? You think you'll have a girlfriend? Oh, it's a benefit. But boss, you'll have to be attentive to her, take care of her. Yes or no, everyone? Investment is needed everywhere. Yes, what is the cost, boss? If you're investing in the artificial intelligence system, yes, every year I need 2 computer specialists with a salary of 2,50,000. Okay. Yes, computer specialist. I am just writing it fast. Specialist. Yes, 2,50,000 into 2. It is a 5 lakh. It is a cost. That means what is my net benefit before any tax adjustment? Yes, tell me, students, how much it is going to be. The net benefit before any tax, it is 6,25,000. Yes or no, everyone? Now, what I am doing, previously what I used to do, I used to show revenue minus cost minus depreciation. Yes, I used to arrive at my earning before tax. On this, I used to reduce my tax. Here, what I will do, on each of the items, I will directly adjust the tax benefit. Is this clear, everyone? Simple. Look at this, students. Suppose I am telling revenue is 100, cost is 70. That means profit is 30. Yes, on the profit of 30, I am paying, assume 30% tax. That means PAT. Yes, 30 into 30%, 9 I paid, 21 I'm getting. Is this clear? This is one approach. Or else what I will do, in each of the items, I reduce the tax adjustment and show revenue is 100 minus 70%, it is 70. Yes, cost is 70 minus 30%. Yes, it is 49. So directly it gives me 70 minus 49. Directly it gives me 21. Yes or no, everyone? Simple, bingo, I am getting the same answer. Yes, boss. Okay, fine. Simple. So net benefit before tax minus tax. At the rate, how much is the tax rate? 30%, right? Yes, 30% gives me the annual benefit after tax. Yes, 6,25,000 minus 30%, it is 4,37,500.
Is this clear, everyone? So tell me what is happening. Yes, because I implemented the, yes, artificial intelligence system every year. Yes, how much benefit I am getting? 437,500. 437,500. Yes, so on and so forth. Yes, till the last year I'm getting 437,500. Now what I want present value of all of these. Bring it to present value. So it is 4,37,500 into the present value annuity factor. Yes, the present value of benefit. Yes, it is 437,500 into the present value factors are given. Add them, you will get the annuity factor as 3.353. Therefore, yes, the present value of the benefit is going to be 14 lakh 66,938. Is this clear, everyone? Yes, boss. This is one of the benefits that I'm going to get because I installed the artificial intelligence system. Is this clear, everyone? Okay. Now there is one more benefit that I'm going to get. Yes, what is the benefit? Tell me, students. If I purchase and install the artificial intelligence system, boss, I have invested in the asset. Yes, can I charge depreciation on that? Yes, boss. But sir, depreciation is non-tax, sorry, non-cash item, sir. Yes, depreciation is non-cash. But because I charge depreciation, my tax payable will be less. So I can arrive at the tax benefit on depreciation. Yes or no, everyone? In each and every question in leasing, we have done that. Yes or no, everyone? I need not explain it again why we are doing. Yes or no, everyone? So let me calculate the tax benefit on depreciation. Firstly, let me calculate the depreciation per annum. Yes, firstly, on what value I will be charging the depreciation? On the asset value which is recorded in the books of accounts. Yes or no, everyone? Tell me asset value in books of accounts. Yes, when I'm capitalizing. Yes or no, everyone? Yes, Ind AS, the recognition criteria, what all? The purchase price will be there, which is 10 lakh, plus installation, any expenses required to bring the asset to the required condition should be added. So it is going to be 10 lakh 50,000. Yes or no, everyone? Whether I am paying today, whether I am paying after 1 year. Yes, in the purchase price, 2 lakh rupees I'll pay after 1 year. It doesn't change the fact that the asset value is 10 lakh 50. Yes or no, everyone? Simple basics. Tell me, total asset value is 10 lakh 50. In that, okay, 850 I'm paying today, 2 lakh I'm paying after 1 year. But to charge depreciation, it doesn't matter. Yes or no, everyone? Okay, fine. Now, asset value. Tell me what is the depreciation per annum? It is 10.5 lakh. It is for how many years? Divide by 5 years. I'm charging it to zero depreciation. Yes, it is going to be 2 lakh 10,000. Now, do I want a depreciation or the tax benefit on depreciation? I want the tax benefit. Yes, because I'm charging this depreciation to P&L. How much a tax I am saving? Boss, 2 lakh 10,000 goes as expense in the P&L. Because of that, how much tax benefit I'm getting? 30%. So it is going to be 63,000. Yes or no, everyone? Perfect. So that means every year I'm getting a tax benefit of 63,000. Yes, can I bring it to the present value? Yes, boss. The present value of tax benefit, it is 63,000 into present value annuity factor, which is 63,000 into 3.353. Yes, which is going to be how much? It is 2,11,239. Is this clear, everyone? Yes, boss. This also we have done. Now what is pending? Tell me, students. Yes, tell me. This benefit we have considered? Yes, boss. Purchase cost adjustment we have done? Yes, boss. Depreciation adjustment we have done? Yes, boss. This also we have done? Yes, boss. Now what is the only thing which is pending? Which is maintenance and operating cost. This is paid in the start of the year. Okay, but tax benefit I will be getting only at the end of the year. Boss, we have done so many times in that chapter. Yes or no, everyone? Leasing. That is why I told. Okay, fine. So particulars, I will start from year 0 to year 5. First, I will write down the maintenance cost. Tell me, maintenance cost, first year maintenance cost, I am paying at the start of the year. Yes or no, everyone? Year 0, year 1. This is basically year 1. Generally, I presume at the end of the year. Here at the start of the year, that means year 0. Yes or no? How much is it? It is 1 lakh. Yes, it is 90,000, 80,000, 70,000, 60,000. Is this clear, everyone? Okay, boss. But tell me, yes, year 1. Let me just show it here. 0, 1. This is year 1. Yes, this 1 lakh rupees maintenance cost I am paying here. Yes, if I am showing an expense, on that I will be getting a tax benefit, yes or no, everyone, which is expense into the tax rate. But tell me, students, when am I paying the tax on the income? At the end of the year. So when am I getting the tax benefit? Only at the end of the year. So on this, only at the end of the year I am getting 30% benefit. which is going to be of 30,000. Yes or no, everyone? In leasing chapter, so many times we have done, so there is no need for me to again repeat, but still I'm telling. Okay, minus the tax benefit. The rate 30%. So 1 lakh means, yes, into 30%. Always draw a line and show. It is 30,000. 90,000 means 9 3s are 27,000. Yes, 80,000 means 8 3s are 24,000. 70,000 means 30 percentage, 7 3s are 21,000. 60,000 means 30 percentage, 18,000. Is this clear, everyone? Okay, that gives me my net cash outflows. Yes, maintenance cost I am paying, tax benefit I am getting, that gives me the net cash outflows. T is equal to 0, it is 1 lakh. Here it is 90 minus 30, it is 60,000. Yes, it is 53,000. It is 46,000. It is 39,000. It is minus 18,000. Is this clear, everyone? All these are outflows, this is inflow. Okay, yes, bring it to present value into the present value factor. For year 0, present value factor is 1. Always don't randomly write down the figures. Year 0 means today, the present value factor is 1. Yes, 0.870, 0.756, 0.658, 0.572, 0.497 gives me the present value of cash outflows. Yes, do all of it. Yes, the present value of cash outflows comes to rupees 2,35,898. Is this clear, everyone? You guys can do the calculations yourself. Perfect, bingo. Now understand from here directly, easily we can calculate NPV. Yes or no, everyone? NPV, net present value, all on today's basis. First I will write down what all is there. What all is benefit, what all is cost. See how simple it is. We are not complicating at all. Tell me, students, first statement by statement we will come. Tell me present value of initial investment. Investment, is it a, yes, inflow or outflow? It is outflow. How much it is? 10,24,000. So I will write in bracket outflow. Yes, simple. Present value of initial investment. How much it is? Yes, it is going to be 10,24,000. Yes, next, what else is there? Tell me. Yes, because I made that investment. Yes or no, everyone? Every year I am getting benefit. Yes, boss. What is the present value of annual cash flow after tax? Yes, present value of annual cash flow, annual benefit, 1466,938. It is a benefit. Present value of annual benefit, it is going to be 14,66,938. Now with that, yes, every year I am charging depreciation on that tax benefit I am getting. Yes, that present value, that is also benefit. Present value of tax benefit on depreciation. Yes, how much is that? That is coming to 211,239. Yes, boss, these both are the benefit. Yes or no, everyone? Yes, because I implemented AI, every year benefit I'm getting, and because I'm charging depreciation, yes, the tax payable is reducing. That's also a benefit for me. Okay. Yes, I made an investment, present value of the investment I calculated. Then, boss, every year maintenance cost I should charge. That I'm paying at the start of the year. Tax benefit on that I'll be getting at the end of the year. Present value of that also I've calculated. Present value of maintenance is 235,898. So that is a cost. Present value of the maintenance cost. Yes, it is a 235,898. 898. That gives me the NPV. NPV Subbalakshmi ge Bariolu. Yes, there is some Kannada song. It's not MPV, it is MPV, something like that. It is 4,18,279. Yes, everyone. And if you try tallying the institute's answer, 4,18,279. Bingo, rupee to rupee we have tallied. But yes, institute has not given the, yes, approach on how they have calculated. But generally how institute does the calculation is, they will show, yes, all year 1 2 3 4 5 everything they'll write. Trust me, it is going to be such a big headache. Trust me, you will go mad. We have made it into that simple. Whenever multiple things are coming na, and on each of the things different timelines are coming, it becomes very difficult for our mind to process. So the best way is divide and rule.
So what I did, yes, otherwise I would always generally be writing the initial investment, then I will draw the line every year I will do, but this time that would become very difficult. So what I did, I split it. I told boss, first we will see initial investment. Yes, in that purchase price, some I'm paying 0th year, some I'm paying first year. Installation anyway 0th year. I will bring it all of them to present value, calculate present value of the initial investment. Okay. Next comes annual benefit. All benefit is there, but cost is also there. That gives me the net benefit. But boss, I want to adjust the tax. Yes, minus the tax gives me the benefit after tax. That I will get every year, bring it to present value. Okay. Then third one I got, boss, because I purchased the asset, when I charge depreciation, I will get tax benefit. So I calculated tax benefit on that, yes or no. Tax benefit every year I'll get, bring it to present value. I calculated the present value of tax benefit. Next one was maintenance cost. Again separately did. Maintenance cost I'm paying at the start of the year. That means 0, 1, 2, 3, 4. But the tax benefit I'll get at the end of the year. 0 means first year. That way I did. So I got the net cash outflows, brought it to present value. Each of these things is there. Yes, two benefit is there. First one is the annual benefit after tax. Next one is the tax benefit on depreciation. I added the present value. Two cost was there. First one was present value of initial investment. Second one is present value of maintenance cost. Accordingly I calculated NPV. Yes or no, everyone? All the online live students, tell me, have we not made this so-called difficult question simple? Halwa, jujube for you. Tell me, everyone. Yes, all the people watching it on YouTube subsequently, I want you guys to write. Crazy maja is coming. Yes, this was one OG question which was considered to be very difficult. We have made it very simple for you guys. Yes or no, everyone? Perfect. Yes, everyone, let us take our discussion forward, my dear students. We are now going to December 24 attempt. Yes, pin to pin, rupee to rupee, we are telling. Yes or no, everyone? Okay. Yes, beautifully, we are solving questions. Okay, we are having December 24, question number 2A. Are we ready, everyone? It's a similar question, simple question. So let the maja begin. Yes, everyone. Sian Limited, a manufacturing company, is considering purchase of a new fully automated machine to replace a manually operated one. I think it is a question on replacement. Yes or no? We have solved already, but let us see. Information about old machine is as follows. Okay, it originally had an expected life of 10 years and now is 5 years old. 10 years back, yes, 10 year was a life. I purchased it 5 years back. So simple. Yes, 0, 5. 5 years is over, 5 more years life is pending. Yes or no? It was purchased 5 years back at 4 lakh rupees. Depreciation is calculated on SLM. That means right now the written down value should be 4 lakh. Yes, divided by 10. In that 5 years is over, only 5 years is pending. 2 lakh should be the WDV. Currently it has a book value of 2 lakh. Question is telling, yes, it can now be sold for 2 lakh 20,000. Okay, boss, bingo. The difference between book value and sale value will be charged to tax at 34%. Okay, capital gain tax rate is given. It takes 1% to operate the machine and he earns 2 lakh 90,000 per year. Okay, the annual cost of maintenance is 1 lakh rupees. Okay, this is regarding the existing machine. Okay, the replacement machine being considered has a purchase price of 7 lakh 50 and has an expected salvage value of 150 at the end of 5 year life. Okay, 5 year only is a life. Okay, bingo. There will also be shipping and installation expense of 60,000. Okay, because the new machine will work faster, investment in the net working capital, working capital investment is there, will increase by 30,000. Company expects that the annual maintenance cost on the new machine is going to be 70,000. Okay, required rate of return is 15%. Yes, tax rate is 34%. Present value factors is given. Yes, 1, 2, 3, 4, 5, and annuity factor is given for 5 years. Yes, analyze the annual cash saving and NPF inflows. Yes, whether they should replace. Yes, now what are they telling? Is considering purchase of a new fully automated machine. New one is going to be an automated machine. So first thing, we will write down the data. Once we write down the data, things will be simple, my dear students. Pay attention. First is the asset related data. Tell me, students, for the existing asset, tell me what is the book value or WDV? 2 lakh. Yes, what is the sale price? Yes, it is going to be 2 lakh 20,000. Yes, what is the remaining life? It was 5 years. Is this clear? If you are purchasing a new machine, yes, what is the purchase price? It is 7 lakh 50,000. Yes, installation, it is 60,000. Salvage, it is 1 lakh 50,000. Life, it is 5 years. If I'm going for a new asset, I should invest in additional working capital, which is 30,000. Is this clear, everyone? Okay, bingo, perfect. Yes, now other cost related data. Yes, tell me, students, operating cost. Okay, tell me, in my existing machine every year how much operating cost I was incurring.
Yes, it took one person to operate the machine, and yes, we were paying him 2,90,000. Yes, per annum. Maintenance cost was how much? 1 lakh per annum. Yes or no, everyone? Okay, fine. Now if we come for the new machine, okay, because the new machine will work faster. Okay, increase, this is over. Yes, the maintenance cost on the new machine is going to be how much? 70,000. Maintenance cost will be 70,000 per annum. So that means 30,000 maintenance cost we will be saving. Now comes operating cost. Whether question has told in case of new machine what is operating cost? No. If you see in the question, yes, question was telling that okay, previously one person was needed to operate because it was a manual machine. But now what we are purchasing is a fully automated machine to replace a manually operated one. That means previously the operator who was there is now no longer needed. That means here the cost is going to be 0. Is this clear, everyone? Okay, fine. Let me try seeing the depreciation. Yes, if I was continuing with the old machine, what would have been the annual depreciation? In case of new machine, what is the annual depreciation? Tell me, students, in case of old machine, if I had continued with the old machine only, tell me what was the book value? 2 lakh. How many years was the life? 5 years. That means every year the depreciation would be how much? 40,000. Yes or no, everyone? It is a 2 lakh divided by 5, 40,000 per annum. Yes, boss. But if I replace and purchase a new machine, in that case, tell me what is the purchase price of the machine? Yes, 750 is the purchase price. Installation is 60. That means the cost of the asset is going to be 8,10,000. But boss, in that 1,50,000 salvage value I'm expecting, yes or no, everyone? That means the net depreciable value is 810 minus 150. So it is basically 6,60,000. This is going to be depreciated across 5 years. Is it going to be 1,32,000? Yes or no, everyone? Perfect. So whenever question is going to be about okay, yes, sell the existing machine, purchase a new machine, we will always be doing the incremental analysis. Yes or no? But in most of the questions for incremental, old machine related data is not given. If it is not given, okay, but if it is given, I should always be doing incremental approach only. Yes or no, everyone? Okay, fine. Now yes, each of the steps. Step number 1, calculate initial investment. Tell me, students, what we will do? Yes, we have existing machine, we will sell the existing machine, purchase the new machine. Yes or no, everyone? Tell me, to purchase the new machine, yes, cash outflow, what all I will incur? Firstly, I will incur the cost of the asset. How much is the cost of the asset? 7,50,000 is the purchase price, plus 60,000 is installation, 8,10,000. Yes or no, everyone? Tell me, if I'm going for a new machine, boss, extra working capital is needed. Yes or no, everyone? Additional working capital, how much? 30,000. So total 8,40,000 is a cash outflow. Boss, cash inflow is there. Yes, if I'm purchasing new machine means I will be selling existing machine. From that I will get cash inflow. Cash inflow from sale of existing machine. Yes, how much money I will get? Let me show a working note. Tell me, students, what is the sale price? Existing machine. Yes, I can sell at, yes, 2,20,000 rupees. Yes, plus or minus capital gain tax. First, let me try seeing the capital gain. Tell me, students, in my books of accounts, what is the value of the existing machine? 2 lakh. That 2 lakh rupees machine, I am selling at what price? 2,20,000. Happy or sad? Happy. Maja is coming or not coming? What is my capital gain? 2,20,000 minus 2 lakh, it is going to be 20,000. So capital gain tax that I'm going to pay, it is 20,000 into 34 percentage. Yes or no? 3,400. Is it 6,800? Yes, that means what is the net cash inflow that I'm going to get? Yes, it is 2,20,000 minus 6,800. It is 213,200. Yes or no, everyone? Perfect. This is the net cash inflow. So tell me, by selling the existing machine, I'm getting 213,200. Yes, that means what is my initial investment? Yes, it is going to be 8,10,000 plus 30,000 minus 213,200, which is 626,800. Is this clear, everyone? Okay. Now, yes, this cash inflow from sale of existing machine, because it is happening at t is equal to 0. Yes, either you can adjust in the initial investment only. That is the most logical approach. Or sometimes what institute does is, it shows in the next step, that is annual cash inflow. In that it shows. Okay, however you want, ultimately it's the same thing only. Okay, boss. Step 1 is over. Now comes step number 2, calculation of annual cash flow after tax. Every year, how much benefit I am getting. Tell me, students, I had the old machine only.
Then why did I go for the new machine? Because I'm getting some benefit. What is the benefit? Boss, in the old machine, na, yes, for operator I had to pay yes salary of 2,90,000. That I am not paying here, yes or no, everyone. So I am getting a savings in operating cost. Saving in operating cost. This is my benefit. Benefit. Saving in operating cost 2,90,000. Operator only is not needed. Next one is maintenance cost. Tell me, yes, the old machine was old, so every year 1 lakh I had to incur. But was new machine is new, yes, only 70,000 I'm incurring. So saving in maintenance, I'm going to write it faster. It is going to be 30,000. This is the benefit I will get. But boss, yes, if I go for the new machine, yes, there is a additional expense also which is being charged in the P&L. What is that, sir? Tell me, if I was continuing with the old machine, na, every year only 40,000 was a depreciation. But here every year 1,32,000 is a depreciation. Yes or no, everyone? So what is the additional depreciation? 132 minus 40 is at 92,000. Okay, boss. Yes, minus the additional depreciation. It is 1,32,000 minus 40,000. It is 92,000. Yes, that means that gives me the additional profit before tax. Yes, which is 290 plus 30 minus 92 is going to be 2,28,000. Yes, minus tax at the rate 34%. Yes, gives me my additional PAT. Yes, 2,28,000 minus 34%. It is 1,50,000. 480. Yes or no, everyone? Tell me, I want PAT or do I want cash flow? I want cash flow. Yes, depreciation I reduced because it was giving me tax benefit. Now it is a non-cash item. I reduce, so I will add it back. Yes, add back the depreciation of 92,000. I will arrive at additional cash flow after tax. Yes, which is going to be 242,480. Is this clear, everyone? Okay, boss. Now apart from that, yes, if we go for the new machine, yes, in the last year we will be getting additional terminal value also. What is that additional terminal value? Tell me, students. Yes, old, new. Yes, in case of old machine, whether we had expected any salvage value, no, salvage value is 0. But boss, in case of new machine, we can sell the asset, and at the end of the last year I will be getting a salvage value of 1,50,000. So this 1,50,000 I will get. That is one cash inflow. Second, yes, in case of new machine, extra investment I had to make in working capital. That extra investment I will be getting it back. Yes or no, everyone? Tell me. So what is the terminal value? First one is the salvage value. Yes, which is 1,50,000. Yes, plus release of working capital 30,000. So that means total how much I'm going to get? 1,80,000. Is this clear, everyone? Yes, boss. Now it is just a matter of drawing a line. Yes, calculating your NPV. Yes, draw a line, students. Line should be straight. Yes or no, everyone? Year 0, 1, 2, or let me just write 3, 4, 5. Yes, firstly, what is my initial investment? 626,800. 626,800. Every year it is 242,480. 242,480. 242,480. Yes, in the last year, yes, I will be, yes, selling my asset as well as releasing working capital. I will be getting 1,80,000 extra. Yes or no, everyone? Now ideally, whenever replacement of old with new comes, ideally your mind should always think two. Okay, in case of old, what is happening? In case of new, what is happening? I just want increment. Yes or no? Even here also, ideally, when we had solved on master example, yes, for students who purchased our class, yes, we had shown for old also, new also data. That was the most comprehensive example. Here institute's questions are not that comprehensive. They are just giving you a simpler version. Yes or no? We are simple. Yes, in that case, how we used to be doing? We used to be doing, okay, boss, old, new. Tell me, if I'm continuing with the old machine at the end of the life, yes, there is no scrap value, so I will not get anything. There is no working capital invested, so it will not be released also, 0. So the cash inflow will be 0. But boss, if I go for the new machine at the end of the life, 1.5 lakh I will get from this. Because for the new machine, extra working capital was needed. This 30,000 will be released, so it becomes 180. So ideally, I want the differential incremental 180. Yes or no, everyone? But in the old, because nothing was there, that itself became the incremental. Is this clear? I hope you guys are, yes, making a sense of it. Okay, boss, simple. Yes, now tell me, year 1 to 5, 1, 2, 3, 4, 5, 2, 4, 2, 4, 8, 0. Present value factor at the rate of 15%. Whether question has given me, it should have given me which question we are in right now. I think in December 24, right?
Yes, okay, question has given me the present value factor. Yes, for 5 years 3.3522. Additionally, in the 5th year I'm getting 1,80,000. Present value factor is 0.4972, gives me the present value of cash inflows, which is 902,337, minus initial investment, which is 626,800, gives me the NPV. Yes, which is 275,537. Yes, boss. NPV is positive, means accept. That means okay, replace it with a new machine. Yes or no, everyone? That is going to be our answer. Look at this. You guys can tally the answer also. Absolutely no issues. Should be tallied. Cash inflow after tax 242,480. Yes, we also got 242,480. Then terminal value. Well, there way of calculation is unnecessary nonsense. Okay, some random, but still, if you guys tally 275,538. 275,537. Yes or no, everyone? Just a 1 rupee rounding of error is there. Is this clear, everyone? Yes, everyone? Yes. Don't try to see exactly how they've done. Okay, operating cash flow from year 1 to year 5. That they have calculated present value of this. They have calculated present value of initial investment. Okay, 902,337 minus initial outlay 626,800. Okay, same thing only. Yes, they've got the NPV. Only 1 rupee rounding of difference is there. Is this clear, everyone? Since NPV is positive, replace the machinery. Is this clear, everyone? Yes or no? So with this, we have successfully completed question solving till December 24 examination, my dear students. Okay, now we are going to proceed further to June 25. So let us come, baby, to June 25 paper. Question number 2A. Okay, yes, giving you guys a minute to read the question. I'll just have a sip of lemon tea, then we will together solve, my dear students. Yes, everyone, this is also a question with new adjustments. I think we had solved a question already. I think June 24 question. Yes, it was a beautiful question. Multiple things were there. This is not that complicated, but still multiple things are there. So we'll have to be careful. Individually we will pull. That is going to be simpler for us. Okay, look at this, everyone. Zodiac Limited had purchased a machine 4 years ago of 4,80,000, having estimated useful life of 8 years with a zero salvage value. Okay, tell me, students, we purchased a machine for 4,80,000 having 8 years life. Yes, when 4 years ago, that means 4 years are over, 4 more years are pending. Okay, simple, boss. Depreciation is charged on SLM over the useful life. Management is considering to replace with a new machine. After market analysis, purchase manager has provided the detailed information on new machine as follows. Okay, boss, bingo. Tell me, I can tell book value here for the old machine. Book value 4,80,000 is there, 4 years is over, is 2,40,000. Yes, remaining life is 4 years. Okay. Cost of the new machine is 12 lakh. However, vendor of the machine has agreed to take old machine at a value of 2,40,000. Oh. Yes, vendor is telling, boss, I will take over your old machine and I will give you 2,40,000. Okay. Cost of dismantling and removal of old machine will be 40,000. That means effectively we will be getting 2 lakh only. Okay, boss. For the new machine, 80% of the net purchase price will be paid on the date of purchase and remaining will be paid at the end of first year. Sir, we have seen this already, sir. Okay, fine, bingo. Depreciation will be charged at 20% under WDV method. Okay, yes, useful life of the new machine is 4 years and it has a salvage value of 1 lakh at the end of year 4. Okay, incremental annual sales revenue is 12,25,000. Contribution margin is 50%. Incremental indirect cost excluding depreciation is 1,18750 per year. Okay, additional working capital of 2,50,000 is required at the beginning of the year, that means today, and 3 lakh is required at the beginning of year 3. Okay, fine. Working capital at the end of year 4 will be nil. That means at the end of year 4, yes, it will be released. Okay, boss. Tax rate is 30%. Ignore tax and capital gain. Okay, one good thing is they have told us to ignore tax and capital gain. Yes or no? So no tension about tax. Is this clear, everyone? Okay, Zodiac Limited will not be making any additional investment if it yields less than 12%. Present value factor is going to be at 12%. Factors for 1, 2, 3, 4, 5 is given. Assess initial net cash outflow, additional depreciation, net present value of cash inflows. Advise whether they should replace the machine with a new machine. Is this clear, everyone? Okay, fine. Now, how we will take up it? Now, we will keep it very simple. First, we will consider initial investment in working capital. We will calculate present value of that. Is this clear, everyone? Okay. Now try understanding, students. Very simple it is going to be. Yes, new adjustments are there in this question. Yes. Step 1, calculation of present value of initial investment and working capital. Okay. Tell me, students, what is the cost of the new machine? 12 lakh rupees. Yes or no, everyone? Minus net cash inflow. from existing machine. Yes, I sell my existing machine and how much I'm getting? Boss, he will give me 2,40,000. But boss, yes, in order to remove that 40,000 I'm incurring. That means effectively how much only I'm getting? 2 lakh. Now, ideally, logically, yes, on this 2 lakh rupees, I should have shown tax adjustment, yes or no, everyone. Why? Because the book value is 2 lakh 40, but I'm getting 2 lakh only. So tax, yes, capital loss is there. All those adjustments should have been there. But boss, question is not giving me tax rate. Yes or no, everyone. Sorry, question is telling, where is it? Question is telling ignore capital gain tax. Yes or no, everyone? So I'm directly ignoring it. I will directly tell that boss 2,40,000 I got. Is this clear, everyone? 2 lakh rupees I got. That means tell me what is my net, yes, investment value. 10 lakh rupees. Yes or no, everyone? Perfect. Till here, is this clear? Why did we ignore capital gain tax? Only because question told, or else for that I would have done a working note. Yes or no, everyone? Okay, fine. Now, calculation of present value of cash outflows for initial investment and working capital. Tell me, students, total how much investment is needed? 10 lakh. What is a question telling about that? Question is telling that, yes, in this amount, 80% of the net purchase price, basically the purchase price of new asset minus the net amount received by old asset. 80% today I'm paying, balance at the end of 1 year. So, yes, initial investment 10 lakh, in that 80%, 8 lakh t is equal to 0. 2 lakh we will be paying in t is equal to 1. Is this clear, everyone? Now, apart from this, we also want investment in working capital. Yes or no, everyone? About working capital, try having a look. Additional working capital of 2,50,000 is required at the beginning of the year. Today, 2,50,000 is required. Okay, and 3 lakh is required at the beginning of third year. So look at this, everyone. 0, 1, 2, 3. This is year 1, year 2, year 3. Tell me, everyone, at the beginning of third year, this is third year, at the beginning of third year I have to invest. That means basically at the end of second year. Yes or no, everyone? In year 2 I will be showing, yes, beginning, ending, that one we have already seen in leasing. Yes or no, everyone? So in the second year I want additional investment in working capital of 3 lakh. So what is the total cash outflow? Total cash outflow today, it is going to be 10,50,000. First year it is 2 lakh, second year it is 3 lakh into present value factor. Today it is 1, it is 0.893, 0.797 gives me the present value of cash outflows. So tell me what is going to be the present value. Yes, I'm just going to write it here. It is 14,67,700. Is this clear, everyone? Yes, boss. Divide and rule. First, individually, one by one we will do. Let's not unnecessarily complicate stuff. Yes or no, everyone? Okay. This is over. Now let me come to, yes, the annual cash flow after tax. Okay, boss. If I sell my existing machine, go for a new machine, every year, what is the benefit I'm going to get? Okay. Question is telling me that, yes, how much extra sale I will get? 12,25,000. But boss, contribution is just 50%. That means 50% will go off as variable cost. That means only 50% will be remaining. Yes, incremental indirect cost is also there. Okay, boss, let me try doing it. Pay attention. Tell me, yes, annual profit. Tell me additional sale. Yes, it is going to be 12,25,000. Yes, minus variable cost at the rate of 50%. Yes, 6,12,500. That means gives me the additional contribution, which is just 50%, 6,12,500. Yes, minus indirect cost or fixed cost, which is 118,750. Yes, gives me the profit before depreciation and tax. On this, till now depreciation I have not charged. Yes or no, everyone? Okay, which is 493,750. Is this clear, everyone? Okay, fine. Now on this amount, is this clear, everyone? Yes, what we'll have to be charging? We'll have to be charging the depreciation. We will arrive at the profit before tax. Okay, minus tax, I will arrive at my profit after tax. Add back my depreciation, I will arrive at my annual cash flow after tax. Is this clear, everyone? All these are the extra benefit I'm going to get. Is this clear, everyone? Okay. Now I am coming for the depreciation. Tell me, students, always whenever question is talking about,
Yes, there is an existing machine, I should sell and go for a new one. I am always talking only in terms of incremental. Yes or no, everyone? Yes, these are the additional sale. That is why these are the additional profit before depreciation tax. Yes or no, everyone? Okay, fine. From here, if I reduce my depreciation, I will arrive at that. Now, how do we calculate depreciation? Tell me, students, for my old machine, depreciation calculation is very simple. Why, sir? Depreciation calculation is simple. Yes, the book value is 2,40,000. Yes, it was having a 4 more year life. That means every year was 2,40,000 divided by 4, 60,000. But boss, for the new machine, depreciation is charged under WDV method. That means every year I should separately show. Based on that, every year my incremental depreciation will vary. Yes or no? For that, I should be showing the working note. So now, working note for calculation of additional depreciation, I'm not going to calculate it again. Yes, here the institute has done. That working note is fine. So I will just show you guys that. Look at this, everyone. Incremental depreciation. Okay, how is depreciation given here? Okay, simple. Look at this, everyone. Calculation of additional depreciation, year 1, 2, 3, 4. Tell me depreciation in case of old asset. 2,40,000 was a value. 4 more years was there. That means every year was 60,000, 60,000, 60,000, 60,000. Okay, great, boss. Bingo. In case of new asset, tell me what is the cost of the asset. What is the cost of the asset? Yes, 10 lakh is going to be the capitalized value of the asset. Yes or no, everyone? Perfect. Yes. 10 lakh, which question are we in, boss? Yes, 10 lakh is going to be the capitalized cost of the asset because I'm paying 10 lakh only. Yes or no, everyone? 10 lakh is going to be the cost of the asset. Now, on that 20 percentage is going to be the depreciation. Now, institute has done a complete calculation. Opening value minus depreciation gives me closing value. For us, that much is not needed. In leasing, I've given you guys a shortcut. Simple. In case of WDV, first year depreciation, it is asset value into depreciation rate. 1 lakh into 20%, 2 lakh. Second year, directly minus the depreciation rate, minus 20%, 1,60,000, minus 20%, 128, minus 20%, 102,400. Sorry, 102,400. Is this clear, everyone? So can I calculate additional depreciation? Yes, boss. This value. So it is 2 lakh and 60,000, 140, 160, 60, 1 lakh, 128, 60, 68, 102, 400, 60, 42, 400. Is this clear, everyone? Okay, boss. Additional depreciation calculation, I have explained it to you guys logically. Is this clear? Okay. Now comes calculation of annual cash flow after tax and the present value of cash flow after tax. Now, two different ways we can be doing the calculations. Yes, either, yeah, let us do it that way, right? That is simpler. Yeah, let us do it that way. Why are you unnecessarily making it big? Tell me, annual cash flow after tax. Either one approach is, I have my profit before depreciation and tax. Every year it is the same. How much we got? 493,750. Every year it is same. From this, I will reduce my depreciation. I will arrive at my profit before tax minus tax at the rate of 30%. Basically, all these are just additional, okay? Yes, gives me my PAT. Add back depreciation. Yes, I will arrive at my cash flow after tax. Yes or no, everyone? Okay. Multiply by the present value factor. I will arrive at my present value of cash flow after tax. This is one approach, but it is a very lengthy approach. Yes, tell me what we can alternatively do is, wait, I will show it to you guys here itself. We will do that and finish it off simply. Tell me. I got my additional profit before depreciation and tax. On this itself, I will do, yes, minus tax. How much is the tax at the rate 30%? Gives me the annual additional, yes, cash flow. Yes, 493,750 minus 30%. It is a 345,625. 345,625. Yes or no, everyone? Every year I'm going to get this much benefit. Yes, depreciation adjustment separately I will show. Don't worry. Is this clear, everyone? Either in a single statement you do it, or separately we will show. Is this clear? If you do it separately, now we will be saving a lot of time. That is why I'm doing it this way. Or else should I do it in a single statement only? Let me do it in a single statement. I have to calculate all these things. Okay, in the question, in the previous question, I think question number 2, I did that separately also. Now I will do it in a single statement. Look at this, everyone. I will show profit before depreciation and tax. Yes, which is going to be how much? 493,750. 493,750. 493,750. Yes, this is before depreciation minus reduce the additional depreciation. All these are additional.
Yes, additional depreciation we have calculated, yes or no everyone? It is basically 1.4 lakh, 1 lakh. Similarly, yes, I will arrive at my additional profit before tax, yes or no? In this case, it is 353,750. Accordingly, you will get, yes, minus tax at the rate of 30%. I will arrive at additional profit after tax, yes, which is coming to 247,625. Okay, yes, add back depreciation because I don't want profit, I want cash flow. Gives me my annual cash flow after tax, yes, which is 1,40,000 here. Yes, everywhere. Yes, so accordingly every year's depreciation you add, you will arrive at the cash flow after tax, which is 387,625. Yes, each of the years I'm just writing the numbers, yes or no everyone? 375,625. Here it is 366,025. This is 358,345. Yes, now this is the annual cash flow after tax for each of the years. I want present value of that. Yes, multiply by the present value factor. Yes, it is given in the question. 0.893, 0.797, 0.712, 0.636 gives me the present value cash flow after tax. Yes, how much we are going to get? Yes, we will be getting 11,34,039. Perfect everyone. Yes boss. Now apart from this I will be getting the terminal value also. Yes sir, what is the terminal value? Yes, if I go for the new machine in the last year, what all will happen? What all will happen boss? Two things are going to be there. Firstly, if you see the question data, if I go for new machine na, where is the data? Okay, fine. Yes, let me just read it from here. If I go for the new machine, salvage value is there going to be, which is going to be 1,50,000. Initially I had invested in working capital of 30,000. Yes or no everyone? That will also be released, yes or no everyone? Okay, fine. So both of those are going to be my benefit. Sorry, working capital is these two things. I'm doing the same question, right? Yeah, fine. Yes, look at this everyone. What will happen? Terminal value, first one is salvage value. Tell me, if I go for a new machine at the end of the life, I can sell it at what price? I can be selling it at 1,50,000, but old machine I would not be in a position to sell. So 1,50,000 plus there will be a release of working capital. Tell me students, for new machine, how much working capital I had invested? How much working capital I had invested? Where is it there? The working capital. Okay, net working capital will increase by 30,000 rupees. Yes or no everyone? No, it is not 30,000. Which question am I seeing boss? Yes, sometimes I just completely confuse the questions. Which question it is? 2A. Which attempt, which question? I don't even, sorry, I'm seeing the old PDF. That's what I'm seeing. I think I have to go for upgrade to the new PDF. Okay, so many PDFs, that is the issue. Sorry, that's what I'm seeing. I had seen so many items. Okay, fine. Yes, tell me how much was the working capital, students? Working capital, working capital, working capital. Yes, initially 250, then 3 lakh, so total 550. So it is 2.5 lakh plus 3 lakh. It is basically 5,50,000 I will be getting. So total cash inflow that I'm going to get in year number 4, it is going to be 6,50,000. Yes, or this is 1 lakh. 6,50,000. Yes or no? I want to bring it to present value. Into the present value factor, it is 0.636. Yes, that gives me the present value of terminal value. Yes, which is 6,50,000 into 0.636, which is, yes, 413,400. Is this clear everyone? Okay, now we will be calculating the NPV. Very simple calculation of NPV. I will see what all benefit is there, what all cost is there. Benefit or cash inflow, cost or cash outflow. Yes boss. Benefit boss, every year I'm getting, yes, annual cash flow after tax. Yes or no everyone? Here we have calculated. So present value of that is 11,34,039. So present value of annual cash flow after tax, it is 11,34,039. Okay, again terminal value I'm getting. So present value of terminal value it is 4,13,400.
But boss, initial investment I should be doing.
Present value of initial investment, yes, in that both, yes, investment in the asset as well as working capital we had seen how much it is, 1467,700. It is going to be 1467,700. Yes, that means what is my NPV, my dear students? NPV is going to be 79739. Yes or no, everyone? Perfect. Yes, NPV is going to be 79,739. Let me try calculating 79739.
Is this clear, everyone? The question has tallied, done over. So it is very simple, my dear students. Is this clear? Yes. In between, yes, I got stuck midway through because I was using, yes, older, yes, hard copy. Yes, because we are solving directly, generally we prepare a question bank from which every question will be arranged. This because, yes, you guys want past paper examination practice. Directly from the paper itself we are solving. That is why just so many files are there, paper files, because of which slightly I messed up. Is this clear, everyone? Still a simple question. I hope you guys would have thoroughly understood. Yes or no? All the online live students, give me a confirmation, students. Yes, everyone, let us proceed further, my dear students. We have completed till June 25. Now let us go to December 25, question number 2a. So come to December 25 attempt, question number 2a. Again a similar question. I want you guys to read the question. Yes, please pause, read the question. Yes, then we will together quickly solve the question, my dear students. Yes, everyone, let us proceed to December 25, question number 2a. Very simple question, my dear students. Okay. Yes, Pegasus Limited is a leading manufacturer of railway part for passenger coaches and freight wagons. Okay. Due to high wastage of material and quality issues in production, General Manager is considering replacement of Machine X with a new computer numerical control machine Y. Replacement decision. Again, same story is going to repeat. Machine X is having a book value of 4,80,000. Remaining life is 6 years. It could be sold now at 1,80,000 and has a zero salvage value at the end of 6 years. Yes, boss. Old machine related data is given. Okay, purchase price of machine number Y is going to be 24 lakhs. Okay, boss. Yes, economic life is 6 years. Okay, fine. It will require 1,40,000 for installation, 60,000 for testing. Okay, subsidy of 15% on the purchase price will be received from the government at the end of first year. We will receive a subsidy, but when we will be receiving subsidy at the end of first year? Okay, fine, boss. Salvage value at the end of year 6 is going to be 3,20,000. Okay, boss. New machine. Here again, initial investment, everything is not at t is equal to 0. Some is at 0, some is at 1. So I need to bifurcate that. Okay, boss, bingo. Yes, General Manager estimates that the annual saving due to installation of new machine includes reduction of 3 skilled workers with a salary of 1,68,000 each, 4,80,000 from reduced wastage, 3,50,000 from loss in sale. Operation machine Y will require service of trained technician with an annual salary of 3,90,000, annual operation cost of 1,54,000. Okay, boss, that is given. Tax rate applicable is 30%, required rate of return is 14%. Company follows a straight line method of depreciation. Okay, ignore the tax saving on loss due to sale of existing machine. Capital gain tax, they're asking us to ignore. Present value factor for 14% is given. Calculate the NPV. Is this clear? As well as profitability index. Now I will show it using the solution that the institute has given itself. Yes, but quickly let us try doing this. Pay attention, students. Now here, try understanding how my cash flows are going to look like. Pay attention. Yes, initial investment. Yes. Year 0, year 1. Is this clear, everyone? Okay, fine. Firstly, to purchase a new machine, how much cost I should be incurring? Tell me, students. Yes, firstly 24 lakh I should be paying today, plus 1,40,000 I should be paying for installation, 60 I should be paying for testing. So 24, 25, 40, 26 lakh today I should be paying. Yes or no, everyone? Cash outflow 26 lakh. Is this clear, everyone? Okay, fine. Now subsidy of 15% on the purchase price will be received at the end of first year. At the end of first year I will receive a subsidy. Cash inflow, subsidy. How much subsidy I will be receiving? It is going to be 15% of the purchase price. Purchase price is how much? 24 lakh. Yes, into 15%, which is 3,60,000. It is a cash inflow. Yes or no, everyone? Okay, fine. Now apart from that, I am having my existing machine. I will be selling my existing machine. Yes or no, everyone? At what price? Right now I can sell it at 1,80,000. Question told. Okay, ignore the, yes, tax saving because of capital loss. Okay, so I will be getting how much? 1,80,000. Sale price is 1,80,000. So what is my net cash flow?
Yes, net cash outflow here is 26 minus 180. Yes, it is 25, 24 lakh 20,000 today. Yes, this is cash outflow. Here there is a inflow of 3 lakh 60,000. Yes or no, everyone? Is this clear? So look at this, students. Here itself in the solution, I'm showing it to you guys. Where did it go? Yes, T is equal to 0. I'm having 24 lakh 20,000 initial investment. Yes or no, everyone? Yes, in the first year. Yes, 3 lakh 60,000 I'm receiving. Yes or no, everyone? 3 lakh 60,000 inflow is there. Yes, boss. These two we have tallied. Yes or no? Yes, boss, we have tallied. Okay, boss. Now, yes, annual cash flow after tax. Every year, how much benefit I'm going to get? Pay attention. Here itself, directly I will show it to you guys. Pay attention. Look at this, students. Every year what is happening is, yes, there is a saving because of reduction of 3 skilled worker at an annual salary of 1,68,000 each. So it is going to be 1,68,000 into 3. This is a benefit. Next, there is going to be a reduced wastage of material 4,80,000. That is also going to be a benefit. Next benefit is going to be, yes, defectives from loss of sales I will be saving, which is 3,50,000. So total benefit is going to be 13,34,000. But boss, to get this benefit, cost also I should be incurring. What is it? Yes, we require a service of a trained technician with a salary of 3,90,000, and cost will increase by 154. So 390, 154, cost will increase by this. So that means that gives me the incremental saving before tax and depreciation of 7,90,000. Yes or no, everyone? Now I need to calculate the incremental depreciation. Yes or no, everyone? Now look at this. Let us come here to calculate incremental depreciation. Incremental depreciation. Tell me, in case of old, in case of new. Be very careful regarding calculation of depreciation for the new asset. Tell me, old asset I had, what was the book value? 4,80,000. How many more years were there? 6 years. It was depreciated to a zero salvage value. So it was 4,80,000 divided by 6. Yes or no, everyone? Is it 80,000? 8 5s are 40, 4,80,000. Yes or no, everyone? Yes, boss. Now coming to the new machine, be very, 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 very careful. Tell me, my dear students. Yes, what is the value of the asset which is capitalized in the books of accounts? What is the value of the asset which is capitalized in the books of accounts? New machine which I'm going to purchase, yes or no, at what value it will be capitalized? It will be capitalized at 26 lakh. Yes or no? Yes or no? Yes or no? No. Ind AS, asset recognition, whichever Ind AS you are going for, Ind AS 16 PP. Yes. Now first I will show the purchase price. Tell me, I will show the asset cost. Yes, purchase price I will show. Tell me, what is the purchase price? It is going to be 24 lakh. Plus installation is going to be how much? 1.4 lakh. Plus testing is going to be how much? 60,000. But boss, question is telling I will be receiving a subsidy of 15%. Now, when I'm doing finance, the timing of cash flows matters. But in accounting, that has absolutely no role. We are telling boss, total this much we paid. Yes, 26 lakh I paid. But boss, 3,60,000 subsidy I'm getting now. 3,60,000. That means what is my net asset cost, my dear students? What is my net asset cost? 26 minus 360. Yes, is it going to be 22,40,000? Yes or no, everyone? That means my depreciation per annum. Yes, it is 22,40,000. Yes, minus what is the scrap value, estimated scrap value at the end of year 6. It is going to be 3,22,000. Sorry, 3,20,000 divided by 6 years. Yes, it is going to be 22,40,000 minus 3,20,000 divided by 6. It is going to be 3,20,000 per annum. Yes or no, everyone? That means what is the incremental depreciation? Yes, 80 minus 320. Yes, it is going to be 2,40,000. Yes or no, everyone? Look at this. The incremental depreciation is 2,40,000. But if you try seeing, okay, how exactly they have done this calculation, you will go mad. This is 80,000. Here randomly depreciation base they have done all this, they have done 19,20,000. All these things they have done. Simple. Is this clear, everyone? Okay. Yes, incremental depreciation is going to be 2,40,000. So here on this, yes,
I got my additional profit before depreciation and tax minus depreciation of 2,40,000. I will arrive at my additional profit before tax minus tax at the rate 30% gives me my additional PAT. Add back depreciation. I will arrive at my incremental cash flow after tax. Is this clear, everyone? Which is going to be 6,25,000. Okay, boss. That is also over. Yes. Now every year I will get 6,25,000 from year 1 to 6. 6,25,000. Bring it to the present value. Now apart from that, in the last year, yes, I can be selling my new machine also. Old machine means I could not have sold, yes or no, I had no salvage value. New machine is having a salvage value of 3,20,000, so that also I will get in the 6th year. Yes, present value factor gives me, so that gives me the present value of cash inflows. Yes or no, everyone? Simple. Look at this. Cash outflow was there. What all cash outflow? If I'm talking about cash outflow, yes, firstly here there was an initial investment, year 0, year 1. Here there was an initial investment, and on that initial investment I was getting subsidy here in the first year. Yes, this if I bring it to present value, I will arrive at present value of cash outflows. Yes, which is coming to 21,04,280. Now cash inflows, every year I will get cash inflows. Last year terminal value also I will be getting. So present value of cash inflows is going to be 25,75,920. So calculate NPV right now. 25,75,920 minus 21,04,280. That gives me an NPV of 471,640. Is this clear, everyone? Question has also asked profitability index, which is present value of cash inflows divided by present value of cash outflows, which is 25,75,920 divided by 21,04,280, which is 1.224. Yes, because profitability index is also greater than 1. Okay, we will tell bingo. Yes, accept the project. Is this clear, everyone? I have not solved because it's just a repetition. Absolutely nothing new is there. What is new in this question is a calculation of incremental depreciation. Is this clear? Whatever is a new adjustment, just highlight and keep it. Is this clear? Except that everything else is same only. This is all just a chumma time pass. Yes, on every freaking question we have been doing this. Is this clear? So with this, all questions on past paper is done over, my dear students. We now have questions from the model question papers. We'll take a break of 1 minute and then we will quickly go into model question papers as well and quickly finish off those questions. Yes, everyone. Now we will come to June 25 model question paper. Okay, question number 2A. Giving you guys a minute to read the question, then we will together solve it, my dear students. Yes, everyone. Now let us come to solve questions from the model question papers. Okay, June 25, question number 2A. Very simple question, but a new variety question it is. Simple, very simple halwa question. You give it to a 3rd, 4th standard student, he will be in a position to solve. Okay, now what is the question? Tell you. X Limited has 20 lakh rupees allocated for capital budgeting purpose. Total how much amount is there which it can invest? 20 lakh rupees. Following proposals are available. What all projects are available? A, B, C, D, E, F. Initial investment in each of the project is given. Total present value means present value of cash inflows is given. Okay. Recommend which of the above investments should be undertaken. Which of these I should undertake? Assume that projects are divisible. Divisible means it is not necessary that I should take up the full project. I can invest in proportionate project also. 50% of the project. That means if in the end I am having less money, I can invest in portion of the project as well. Tell me, students, now all these are there. Yes, should I accept a project or not? On what basis I will take a decision? NPV. But if there are multiple projects, which of these project is better? For 1 rupee of investment, which of these is giving better return? On what basis I will be taking? Based on profitability index, yes or no? So what I will do, I will calculate profitability index for each of these projects and give a ranking. Look at this, very simple it is. Yes, directly here I will show you guys the solution. Pay attention. Where is the solution? Here itself we are having the solution. Look at this. Project A, B, C, D, E, F. Initial investment is given, present value of cash inflows is given. Let me calculate the profitability index, which is present value of cash inflows, column number 3, divided by initial investment, column number 2. Here it is 7,32,000 divided by 6 lakh, which is 1.22. Yes or no? Here it is 2,85,000 divided by 3 lakh, which is 0.95. 840 divided by 6 lakh, 1.4. 1062 divided by 9 lakh, 1.18. So on and so forth I calculated. Yes, boss. Now I will give the ranking. Tell me, ideally profitability index should be the highest, plus profitability index should be at least more than 1. At least my investment I should be recovering. Only then I will be accepting. Yes or no? Tell me, where is my profitability index the highest? This one. So this is going to be first rank. Yes. Second one, this is going to be the second rank. Third one, yes, 1.2 is third rank. 1.18 is fourth rank. 1.05 is fifth rank. 0.95 sixth rank. Sixth project I will never ever accept. Yes or no? Why? Boss, I am investing 3 lakh and I am getting 2,85,000 benefit only. This I will never ever invest. Is this clear, everyone? Yes. NPV also I will just calculate and keep chumma for time passing. Is this clear, everyone? Okay. NPV also I calculate. Okay. So what we will be doing? Yes, here have I
Kept place? No, I have not kept place. Okay, directly explain from the institute solution. Yes, initial investment is given, present value of cash inflows is given. I will calculate NPV, I will calculate profitability index. Based on the profitability index, I will be giving a ranking. Okay, now I have to allocate. Tell me, students, total how much money is there with me? 20 lakh is there with me. Tell me which all project I will start with. First project that I want to start with is going to be the one having the highest profitability index. Which one it is? Yes, it is project C. So I will start with project C. How much I should invest? 6 lakh I will invest. Yes. How much? Yes, present value of cash inflows I'll be getting 840. So how much NPV I'll get? 2 lakh 40. Okay. Now total 20 lakh is there, 6 lakh I invested. Can I invest in one more project? Okay. What is the second best project? Second best project is project A. Okay, next I will go for project A. How much I'll invest? 6 lakh again I will invest. How much NPV I'll get? 1 lakh 32,000. So tell me total how much I invested? 6 lakh plus 6 lakh, 12 lakh I invested. 8 more lakh is there, I can go further. Tell me which is the third best project? Third best project is project E. How much they are asking? 4 lakh. Do I have 4 lakh? Yes boss, I have 8 lakh. So let me invest in project E. 4 lakh. Tell me how much NPV it is giving me? 80,000. So this also I will be getting. Now tell me total how much I invested? 6 lakh, 6 lakh, 4 lakh, 16 lakh I invested. How much more money is available? 4 lakh is available. Yes or no, everyone? Which is the fourth best project? It is going to be project number D. Yes or no, everyone? But tell me, project number D will require a total investment of how much? 9 lakh. Am I having 9 lakh? No, I am having only 4 lakh rupees. Question told, assume that projects are divisible. That is, it is not necessary that the entire investment you should only put. If you are having part of the money, you put part of the money. Other money, someone else will contribute. They will be getting the benefit. Yes or no, everyone? I am having 4 lakh. I will try investing 4 lakh. Look at this, everyone. In project number D, I will invest 4 lakh rupees. Yes, which is a balancing figure. So total 20 lakh I invested. That means how much benefit I will get, boss? Yes, if I invest in project D, na 1,62,000 total NPV I will get. But that I will get only if I have invested full amount. I have invested how much? Only 4 lakh only. So how much I will be getting? 1,62,000 into 4 by 9. Yes or no, everyone? Into 4 by 9, 72,000 I will be getting. Yes or no, everyone? That means a total overall for 20 lakh rupees investment, total how much NPV I will be getting? 240, 132, 80 and 72. It is going to be 5,24,000. Is this clear, everyone? Simple, pretty basic question. Yes or no, everyone? Simple. Yes, each of the projects are given. I will calculate profitability index. Based on that, I will give the ranking. Yes, based on the ranking, I will try allocating. Okay, boss. Yes, I will calculate the NPV for each of the project. I will see the NPV. Now, yes, know that I have a total investment limit. So initially wherever I can invest fully, I will invest. The last one where I cannot invest fully, proportionately I will invest. I will be only getting the proportionate NPV. Is this clear, everyone? Okay, very simple question, my dear students. Okay, boss. This question was there, that is why we have solved. Yes, it's just that. Okay, yes, it is a variety question, but it's a very simple question. Yes or no, everyone? Now we are going to question number 7 from December 25 model question paper. Let us come to December 25 paper. Okay, December 25. Okay, question number 2A. Again, it's a very simple question, but still, nevertheless, let us quickly read and solve this. Okay, Narayana Hospital is considering to purchase a machinery for the laboratory testing work, which is priced at 2 lakh rupees. Projected life of the machine is 8 years, has expected salvage value of 18,000. Okay, annual operating cost of the machine is 22,500. It is expected to generate a revenue of 1,20,000 per year for 8 years. Presently, hospital is outsourcing the laboratory testing work. Right now what it is doing, it is outsourcing the laboratory testing work to its neighboring test center, and it is earning a cash commission income of 32,000 per annum net of taxes. Yes, whether it will be profitable for the hospital to purchase the machine. Give your recommendation under NPA method. Consider tax at 30%. Present value factor 10% is given. Okay, now understand what is happening. Yes, assume we are Narayana Hospital. Okay, right now we don't have a testing facility. So what we are doing right now, there is a nearby laboratory. Yes, whoever patient is coming to us, we are sending them there. We will send, okay, sent by Narayana Hospital. Based on that, they are giving us commission. Every year, because of that commission, how much commission I am getting every year? 32,000 per annum I am getting. It is a net of tax, that is after all the taxes. Is this clear? But I am thinking, boss, let us do one thing. Let us invest and let us try getting the entire amount instead of commission amount. So should I go for that or not? I should be seeing. So right now, present is there, proposed is there. Obviously I will be doing the incremental analysis only. Yes, everyone. Now let me try seeing, yes, doing the calculation. First, step number 1, I will calculate, yes, the incremental initial investment. Tell me, if I start the new project, how much investment I should be doing? 2 lakh.
Yes, was there any existing plant which I can sell? No, boss. Previously I was just referring to them, getting commission income. Yes or no? So nothing is there. So incremental initial investment is equal to 2 lakh rupees. Is this clear, everyone? Okay. Step 2, calculation of incremental cash flow after tax. Why am I doing this investment? Because every year I'm getting a benefit cash flow after tax. Tell me, existing right now, how much cash flow after tax every year I was getting? Every year I was getting 32,000. Yes or no? Absolutely no tension I had. Now if I go for the new machine, yes, what I will be getting? Yes, let us try opening this question number 2a. Okay, yes, try seeing. Yes, what will happen? Projected life, expected salary value is given, annual operating cost is given. It is able to generate a revenue of how much? 1,20,000 per annum. Yes, minus cost I need to be incurring. What is operating cost? 22,500. Yes or no, everyone? Yes, minus depreciation also I need to reduce. Tell me, 2 lakh is the, yes, asset price. Yes, it is having a salvage value of 18,000. So that gives me a depreciable value of 1,82,000. It is across 8 years. Yes or no, everyone? Which is going to be 22,750. Yes, that gives me the profit before tax. Yes, which is 74,750. Yes, minus tax at the rate 30% gives me profit after tax, which is 52325. Yes, add back the depreciation, which is 22,750. I will arrive at my cash flow after tax, which is 75075. Is this clear, everyone? Yes or no? Tell me, previously without any machine, without anything, I was just referring, and yes, net I was getting a cash of 32,000. Now if I invest the testing machine, yes or no, everyone, ultimately how much cash flow I'm getting? 75,075. That means what is my incremental cash flow after tax? Yes, it is 75075 minus 32,000. It is 43075. Is this clear, everyone? Yes, boss. Very simple. Okay. Then comes third one, which is the incremental terminal value. Tell me, previously I did not have any machine. Chumma I'm getting commission income. But if I purchase the machine at the end of 8 years, yes or no, I can sell the machine at what price? I'm having a salvage value of 18,000. So I will be getting a salvage value of 18,000. Yes or no, everyone? So can I calculate the incremental NPV? Yes, boss. Look at this. Year 0, 1, 2, so on up to year 8. Today, yes, if I have to go to the new machine, I have to pay 2 lakh rupees. But because I purchase new machine every year, how much extra cash flow I'm getting? Yes, previously also I was getting 32, but now I'm getting 75,075. That means every year I'm getting extra 43075. 43075. 43075, so on. 43075. In the last year, additionally, I will sell the asset and get 18,000 also. So what is my NPV? Year 1 to 8, I'm getting 43075. Present value factor at the rate of 10%, it is 4.867. I will add all of them. Yes, gives me present value. 8th year, additionally 18,000 I'm getting. Yes, 0.467. Yes, gives me the present value of cash inflows. Yes, which is 218052. Yes, minus initial investment, it is a 2 lakh. That means my incremental NPV, yes, it is going to be 18,052. Yes or no, everyone? Tell me, my NPV is positive. That means whether the proposal should be accepted? Yes, boss. That means we should purchase the new machine. Yes or no, everyone? Perfect. Now this is the logical answer. Any logical, rational person who believes in the basics of maths should be getting this answer. You guys know why am I telling this? Yes, there is a logic, and then there is the institute's logic. Now try understanding what the nonsense the institute has done. See, students, I really can't understand on what basis is the institute operating to commit such blunders. Trust me on this. Okay, I try my max to refrain. Okay, but CA Institute commits mistakes. CMA Institute commits blunders. Like, boss, such a big institute, yeah. So many members are there, lakhs of members are there, lakhs and lakhs of students are studying. Okay, you are telling, okay, we want the reputation that a CA course is giving, but boss, at least have a steady material. which is a basic error proof. See the nonsense that the institute is doing. See, look at this. Determination of cash flows, annual cash flows, sale minus operating cost minus depreciation. Okay, yes, after tax, yes, add back this one. Yes, 75,075, we also got that. Yes, minus commission income. There I was getting 32,000. That means net cash inflow after tax 43075. Tell me, we also got 43075. Yes or no, everyone? Okay, fine. Till here, is it clear? Yes. Now understand cash flow after tax. Okay, here they are writing year 1 to 7 4339075. Yes, here they have calculated every year how much cash flow we are getting, 43075. Okay, here in the next page they themselves forgot, they are writing 39075. There is absolutely nothing happening here. Don't think there is some 4000 reduction. No, they have told boss this is the cash flow after tax. Okay, here nashe, saste nashe. Yes, in Hindi there is a term called nashe. Hi, yes or no, everyone? See, in the last year when they are doing the calculation, we will also be drawing a line. Yes or no, everyone? Yes, yes. 1, 2, so on up to 8 year, 43075. Yes, 8th year is 43075. With that, additionally, whenever I am selling the machine, I will be getting 18,000. Yes, it should be how much? It should be basically 43075 plus 18,000. I mean, if you have to do it that way, 43075 plus 18,000, it is coming to 61075. But they have wrote here 57075. Why? Here they have written 39075. From where, boss? Here you ended the page. You told boss cash flow after tax is 43075. Here you are writing 39075. Look at this, everyone. Nonsense of a calculation they are doing. Is this clear? So that is why this answer will not tally. Yes, if I do it this way, it will tally. If instead of this, if I write 39075, so tell me 39075 into 4.867, 18,000 into 0.467, grand total, yes, minus 2 lakh. 39075, right? Yeah, 4.867. Oh, sorry, this is I have not added for 8 years. Okay, fine, that I need to add 8 years. 0.909 plus 0.826 plus 0.751 plus 0.683 plus 0.620 plus 0.564 plus 0.513 plus 0.467. It is 5.333. And the last year is 0.467. Okay, 39075 into 5.333, 18,000 into 0.467, grand total minus 2 lakh. You are getting 16,793. 16,007. Yes, 16,000 something. Just a small rounding of error. Yes or no, everyone? But it is not logical. How on earth here in this page it is 43,075? In this page, how did it become 39,075, boss? Simple nonsense they are doing. Is this clear, everyone? So I don't want to be going with this answer. I will keep it as it is. Is this clear? Yes, institute answer is wrong because it has committed a clerical error. Is this clear, everyone? Give me a confirmation. Yes, everyone. A student told, sir, please sit and do it. We all need our boss to be very healthy. Don't worry. Yes, by God's grace, fit and fine. Even if we stand for an entire day and take class, nothing is going to happen. God's grace. Yes or no, everyone? Okay, fine. Till here the discussion is clear. Yes, we have one more question, one final question. A very simple question, my dear students. Pay attention. Yes, but again a beautiful question. Yes, look at this. Let me just refresh the page. Yes, December 25 model question paper. That's a unique question. Where are we? Okay, here we are. Okay, beautiful question which has come for 7 marks. Yes, not difficult, but new adjustment. We just have to have the basics right. Okay, yes, if in the class we have told 1 plus 1 is equal to 2, and in the exam if it has come 2 plus 1, you should be in a position to tell boss it is 3. Yes or no? That's how simple it is. Okay, look at this. Sumit Appliances Limited is evaluating 3 potential investment projects. Project 1, produce a new line of aluminum skill set. Project 2 is there. Yes, expand the existing appliance. Project 3, develop a new high quality aluminum. Okay, fine. If undertaken individually, the expected investment and the present value of future cash flow is given. Tell me, project 1, if I take, how much investment? 2 lakh, present value of cash inflow is given. Project 2, investment, present value of cash flow is given. 3, investment, present value of cash flow is given. Now what are they asking?
calculate NPV of each project combination and recommend which one we should be taking. Now let us try writing down. We will read and accordingly keep on writing. Tell me students, what all options are available with me? Yes, first option which is available with me is I take up only project number 1. If I take up only project number 1, tell me how much investment is required, students. Question is telling, question to be, yes, how much investment is required? Yes, investment required is a 2 lakh. How much cash inflow I'll be getting? 2,90,000. That means what is NPV? 90,000. If you guys want, calculate the profitability index also. Okay. If I take up only project 2, how much I should be investing? 1,15,000. How much I will get? 1,85,000. So what is my NPV that I'm going to get? 70,000. If I take up only project 3, how much I should invest? 2.7 lakh. How much I will get? 4 lakh. So how much I will be getting? 1,30,000. This is the NPV if I invest only in one of the project. Now what question is telling? If project 1 and 2 are undertaken together, you take up only one project. You like only one person. You are liking 2 people together. Yes or no, everyone? 2 projects you are taking together. Project 1 and 2. What will happen? Look at this. Project 1 and 2. What will happen, students? Yes, there are no economies. Sometimes what will happen, if we take 2 projects together, there will be economies in scale. Because of that, more revenue we will get or cost will reduce. Yes, what is the synergy benefit? You have told in case of merger there will be synergy benefit. What is basically synergy benefit? Either I am getting more revenue or my cost is reducing. Here they are telling, okay, no economy, revenue is also not increasing, cost is also not decreasing. Okay, the total investment and present value are the sum of the individual projects. No extra benefit is there. Yes, that means what is the total investment? Yes, if I am taking 1 and 2 together, 2 lakh plus 115, it is going to be 3,15,000. Yes, what is the benefit? Yes, 1 and 2 means it is a 290 plus 185. Yes, which is going to be how much? Yes, 185. It is 4,75,000. Yes, that means what is going to be my NPV, my dear students? 1,60,000. Till here is this clear? Yes, boss. Now comes the next one. If project 1 and 3 are undertaken together, we are telling no, boss. I will take up project 1 and 3. Okay, let us try evaluating what will happen. Yes, economies of investment exist. Economies in investment, that means the combined investment cost. Yes, what is benefit? Cost increase or decrease? Decrease is benefit. There is an economies in investment because we are investing together. Okay, some amount I will be saving. Okay, as one machine can be used for both the projects. The total combined investment is 4,40,000 only. Tell me, students, if I am taking project 1 and 3 separately, how much is the value coming? 2 lakh plus 270, 470 should have come. But they're telling, boss, because you're doing it together, your investment is 4,40,000. We tell, okay, boss, you are telling 440, we will take 4,40,000. Is this clear, everyone? Okay. I am getting benefit only in investment. Am I getting benefit in cash inflows? No. That means cash inflow will be same only. How much is cash inflow? 290 plus 4, it is going to be 6,90,000. Yes or no, everyone? Perfect. That means what is going to be the NPV? 690 minus 440, it is going to be 2,50,000. Is this clear, everyone? Yes, boss. Now what else question is telling? If we are taking project 2 and 3, 2 and 3 we are going to take. Yes, now what will happen if you are taking 2 and 3? Economies existing in marketing and production, but not in the investment. They are telling investment will be same, but economies, benefit will happen in marketing and production. That is, marketing cost which I was previously incurring now will be less. Production cost will be less because my cost is less. My cash inflow is going to be more. Now the expected present value of cash inflow is 6,20,000. Tell me 2 and 3. If I am separately taking means 4 and 185, 585 it should be. But because they are coming together, economies exist, because of which I am getting how much? 6,20,000. So cash inflows is going to be 6,20,000. But there is no benefit in investment. So investment is going to be how much? 2 and 3. Yes, 270 plus 115. Yes, it is going to be 3,85,000. Yes or no, everyone? Yes, that means what is going to be my NPV? 2,35,000. Is this clear, everyone? Okay, till here we have done. Okay, now we are having the last one. This is the most important one. Pay attention, my dear students. Yes, do a fire. Yes. What is this, sir? Is it fire? Yes, dear, you are having that fire symbol, right? That is what I've tried drawing here. Okay, if all 3 projects are undertaken, all 3 we are taking, okay, simultaneously, what will happen? The above economies still apply. The above economies still apply, but an additional plant extension is required. They're telling, boss, if I'm applying all the 3 projects, that is project 1, 2 and 3, that means now I am going to do project 1, 2 and 3.
the above economies will still apply. That means whatever above benefit were there now, if I am doing two projects, that will still be there. But boss, I now want an additional plant. Okay, for that extra investment is needed. Now see how we are going to do it. Firstly, I want my investment. Yes or no, everyone? Tell me, where am I having economies in investment? Economies in investment, if I'm taking 2 and 3, yes, I am getting economies in marketing, not in investment. Where I will get in investment? Yes, if I'm taking project 1 and 3 na, the combined investment is 440 only. Tell me, 1 and 3, it would have come to 4,70,000, but because I'm doing it together, yes, 1 and 3 together, it is coming to 4,40,000 only. So I will tell, okay boss, if I'm taking 1 and 3, let me use another color, 1 and 3, it is coming to 4,40,000 because there is economies in the investment. Okay, but tell me, am I undertaking only 1 and 3? No boss, I'm undertaking 1, 2 and 3. So that means for project 2, how much I should be investing? For project 2, I should be investing 1,15,000. Is this clear, everyone? Now question told, if you are coming up with 3 projects, extra plant is needed. Yes, additional plant. Yes, which is going to be how much? Which is going to be 1,30,000. That means what is the total investment? It is going to be 6,85,000. Is this clear, everyone? Yes, be very careful. Tell me 1, 2, 3. 3 things are there, plus additional plant was needed. Yes, I want to invest. Question told me that if I'm investing 1 and 3 together, my total investment value will reduce because there is an economy there. So let me consider that I consider together. Okay, 2 was left out, 2 I considered. Question told extra plant is needed, that I considered. As simple as that. Is this clear, everyone? Okay, now coming to cash inflows. Yes boss, economies in investment I have already taken care of. Yes or no, everyone? Okay, now where else economy is there? Economy is in marketing and production, because of which cost reduces every year, because of which cash flow increases every year. Where it is coming? When I'm taking 2 and 3 together, 620 it is coming. Tell me, 2 and 3, if you're taking separately, it should have been 585, but because they're happening together, I am getting how much? 620. So let me consider that 2 and 3, 2 and 3, it is going to be 6,20,000. But boss, I'm not just taking 2 and 3, with that I'm taking 1 also. Tell me, 1 is giving me how much? 1 is giving me how much? 2,90,000. Yes, tell me, is there any additional cash flow? No boss, that means how much I will be getting? 620, 820, 9,10,000. Yes, tell me how much is going to be the NPV? 910 minus 685, it is going to be 2,25,000. Tell me, I want to invest in that project where my NPV is maximum. Yes or no? Where is my NPV maximum? Yes, it is a 90, 70, 130, 160, 250. Yes, 235, 225. Tell me, where is it maximum? 2,50,000. When I'm going for project 1 and 3. Therefore, yes, go for project 1 and 3 together. As simple as that. Look at the answer, my dear students. Yes, answer will tally. Yes, NPV. Yes, profitability index. Chumma I have calculated. Answer is based on NPV only. You guys can calculate or leave it. Yes, 250, 235, 225. Is this clear, everyone? So we should be going for project 1 and 3 together. I have told you guys the logic. Yes, take project 1 and 3 together because that gives the highest NPV of 2,50,000. Is this clear, everyone? So with this, we have successfully completed, my dear students, all the questions on the chapter Advanced Capital Budgeting from the past papers as well as model question papers. So question number 2A in your examination is going to be a short question on Advanced Capital Budgeting. All our students who purchase our classes as well as watch the free revision series on YouTube are going to go there with the confidence. Yes, crack the examination and secure those 7 marks. And tell in the examination, yes, other people will be so much stressed. They're going to scratch their head. Oh, what is this question? Our students are going to go there, chill and tell, Maja is coming. Hello, honey bunny. Yes or no, everyone? Perfect. Okay, now with this, an associated chapter is going to be risk analysis in capital budgeting. Yes, evaluation of risky proposals. Yes, wherein what all will be coming? Yes, firstly, traditional techniques, which is risk adjusted discount rate, yes, as well as certainty equivalent approach. Then we have sensitivity analysis, then we have scenario analysis. Yes, then we are having the, yes, cash flow based distribution, which is perfectly independent, perfectly dependent, moderately dependent cash flows. From there, compulsorily one question is coming, which is going to be question number 3A. Look at this, everyone. Every attempt it is question number 3A. And should I tell you something? Trust me, you guys read each and every question. Absolutely nothing is new. Yes, we have solved a good number of questions. Yes, that only, in fact, simpler than that is what we are having. So I will not unnecessarily again sit and solve each of these questions. Yes, people who are watching it on YouTube, if you guys want, yes, discussion on this, you guys just to go, yes, put my name, Think with Tabish, CA Tabish Hassan, Advanced Capital Budgeting. You just put the name of the chapter, you will get an 8-9 hour marathon. In that, everything, this as well as this we've discussed. This is the most beautiful way we discuss. Yes, please, yes, try these questions once by yourselves. Trust me, you will not be getting stuck anywhere. Is this clear, everyone? So with this is also over. Leasing, anyways, I've told you, my dear students, yes, we have completed it with the chapter itself, all the past paper as well as model question papers. This was done exclusively from the perspective of CMA final students. So with this group of chapters is done over, my dear students. From this group of chapters, 21 mark descriptive plus 6 to 8 marks objective MCQ questions will be coming. So total 27 to 29 marks we have secured and put it into our pocket, my dear students. So that's it for this session. See you guys in the next session. Until then, keep studying, keep smiling, keep working hard, keep making your parents proud, and see you in the next session. Take care. Bye.